This is Jimmy. He's 55 years old, married with 3 kids and 3 grandkids, and he's been investing ever since he graduated from Central Michigan University, fire up chips, over 30 years ago. And given how strong the market has been these past 3 decades, he's done really well for himself. In fact, his retirement portfolio just crossed over the $1 million mark. But he's stuck, earning the same old 7 to 10% annual gains from the market each year, and he's at the mercy of market volatility. With hopefully only 5 more years to work before he retires, Jimmy wants more control. He wants to take hold of his future and his returns. Well, my name is Jim Schultz. I'm a finance PhD, and I've devoted my entire professional career to understanding the markets, starting as a professor in academia, where I taught undergraduate and MBA classes, and also did my academic research solely focused on the markets. I've since been a practitioner in the markets, actively trading since 2007. For the purposes of this video, I'm going to be Jimmy. So I've had a great run in the market over these few decades, but now I want to really unlock the full potential of my portfolio. While the 10% average annual return that the market has given me has been great, I'm intrigued at the prospect of producing portfolio returns that are even higher than that. I've heard with enough skill and ability, it might be doable. And maybe even more importantly than boosting my returns, I'm very interested in reducing my overall portfolio risk. Being that I'm closer to the end of my career than the beginning, I want to be better prepared to handle extremely volatile conditions or big market meltdowns, like we had during the internet bubble in 2002, the financial crisis in 2008, the COVID crash in 2020, or even the trade wars and tariffs that we're experiencing right now in 2025. Well, whatever the reason might be for you or Jimmy, if anything about his story resonates with you, then you are in the right place. I'm going to show you how to begin to make the transition from a purely passive approach with your portfolio to a much more active approach that steps into the world of derivatives. And we're going to break it down into 5 simple steps as I take Jimmy through a first-hand example. And we start with step 1. Taking inventory of where you're at. I've taken the passive approach and it's worked out great, but it's important to remember that those 10% average annual returns are exactly that, an average. While the market does go up most of the time, it can also go down and sometimes seemingly out of nowhere, just like we've seen to start 2025. Well, that is what I'm trying to avoid. Until now, I have been simply buying and holding, absorbing whatever blows might come my way. But I am tired of this lack of control. I want to be more involved. I don't want to be so reliant on market direction for not only generating returns, but mitigating risk. Now, you may be just like Jimmy. You don't want to stand passively by, needing the market to move higher to hit your return projections. All the while, the performance of your nest egg seems to be directly tied to the next Trump tweet. You want to take control and add a brand new strategic component to your portfolio. Well, once you fully immerse yourself into the world of derivatives, all those things can happen. But before we dig into the real details, we have to progress to the next step in the journey, where we are now going to tap into all the tools that were available to you as a passive investor who was reliant on the market moving higher. Specifically, let's talk about the power of dividends and dollar cost averaging. Step 2, the tools you need. Now I'm ready for action. I'm going to ditch the purely passive approach, but to be fair, I have done really well as a passive investor over the last 30 years using the 3 Ds, direction, dividends, and dollar cost averaging. So naturally, there is still a part of me that really likes all these strategies. The thought of abandoning those long bias strategies completely has me feeling a little bit uneasy. Well, here's the great news. Continuing to collect your dividend payments or improve your basis through dollar cost averaging are both still very much in play. You're going to see that there will still be a home for you to carry some share positions in your favorite stocks. And even in the options portion of your portfolio where you might not own any direct shares, any dividends that the company might pay automatically get factored into the option pricing. For example, if instead of buying stock in Apple, you decide to use a short put position, which is a classic option strategy, you are still going to collect any upcoming dividends that Apple might pay with that short put strategy. This happens because you're able to sell the put for a higher price based on the simple fact that the extrinsic value moves higher due to the dividend itself. But all of that is way beyond where we want to go here today. Not to mention, we've already done a video that covers all of that in depth, and you can watch it right here. But what about dollar cost averaging? Well, I learned early on that it was a great long-term strategy to add to my investments in individual stocks or broad-based indexes when the price of those stocks or indexes was falling. If the company was solid or the overall economy would be strong again, then I knew there was a really high probability that the stock prices would recover. Well, with derivatives, high probability trades are at the core of what we do, and here is the best part. It happens right at trade entry. You don't need to wait for the stock to drop or things to go south. You start improving your basis right from the very start. Now, I'm very happy to hear that both the returns from dividends and the spirit of dollar cost averaging can be alive and well with the option strategies inside my portfolio. But now, I'm even more intrigued to hear about how I can actually make money without needing the market to go higher and without being so reliant on market direction. That sounds crazy to me. Well, both you and Jimmy are in luck because that is exactly where we're headed next. Step 3, trading time and volatility. Now, I have to be honest, this completely blows my mind. I was under the impression that to make money investing in the stock market, you buy stocks and you need a move higher in the stock to make money. Well, it turns out that's not necessarily true. It's important to understand that in the world of options, any position you might have can and will make money from 3 different parts: direction, time, and volatility. So let's start with direction. Now, working through all the inner workings of calls and puts and option pricing is way beyond our focus here, and we can't get into it in this very video. So I would encourage you to watch this video right here. For the sake of Jimmy's goal, we want a broad overview, and it works like this. There are option strategies where if I'm bullish, I benefit from the stock price going up, and I'm hurt by the stock price going down. So very similar to being long stock. There are also option strategies where if I'm bearish, I benefit from the stock price going down and I'm hurt by the stock price going up. So very similar to being short stock. But here is where things get interesting. With options, if I'm bullish, I can set up a strategy that benefits from the stock going up, but can also make money if the stock goes nowhere, and even possibly make money if the stock goes down a little. And similarly, if I'm bearish, I can set up a strategy that benefits from the stock going down, but can also make money if the stock goes nowhere, and even possibly make money even if the stock goes up a little. And the reason we can do that is because with options, we're not only trading direction, we're also trading time and volatility. You see, with options, there are various components to an option's price. The underlying stock price of the stock the option is on is a component. The risk-free interest rate in the economy is a component. Even the dividend that the company might pay is a component, just like we saw in the last section. But one of the largest components to an option's price is the time that is left on the option contract. Every option contract expires on a specific date. So some contracts might expire in 7 days, some might expire in 45 days, and some might expire in 360 days. Simply put, the more time the option contract has, the higher its price. As time passes, the number of days left in the contract decreases, and so that time value follows suit and also decreases. Here's the best part. You can play any directional bias you want, but you can also play time along with that same strategy. More specifically, you can benefit from the simple passage of time. As the days go by and the time value dissipates from that option's price, it helps the P&L on your position. Now, for our strategy examples coming up, we're going to focus exclusively on time, but it's important that you're made aware that you can also trade another non-directional metric, volatility. Now, volatility does share a reliable relationship with direction, but we'll leave that discussion for a future time. For us, we want to understand that much like time value is added to an option's price, a volatility premium is also added to an option's price. And also very similar to time, More volatility means higher option prices, and lower volatility means lower option prices. This will come as no surprise, but this video right here explains volatility in great depth. But for our purposes, here is what we need. Market volatility moves up, it moves down, it moves all over, just like everything else in the market. But generally speaking, on average, volatility is in a state of contraction, so it's moving lower. And just like we did with time, we can set up option strategies to take advantage of that natural volatility contraction. But now you've got to be wondering, all right, I see how time can help me, but I still can't for the life of me understand how I can make money without being directionally right or even being directionally wrong. Well, that's where we're going next. Step 4, strategic breakdown. So let's unpack 3 different strategies, starting with a covered call. I'm used to owning stock, and one of my favorites over the years has certainly been Apple. Well, the beautiful thing about a covered call is that it starts the same way that all of my positions have started, with long stock. The difference is, on top of that stock, we're going to add an option component, specifically a short call. This is what is called a covered call strategy. Let's suppose I own some Apple that I bought earlier this year for $180 per share. Today is April 9th, and right now in the option market, I can sell the 200 strike call in the May cycle that is 37 days away for $2.50, which is $2.50 per share, or $250 for the whole contract, because option contracts are always in 100 share allotments. Now, a key part to understanding how a covered call works, or really any short premium strategy, is this. If the stock price is above the strike price on a call, the call is in the money, meaning it has value. But if it's below the strike price on a call, the call is out of the money, meaning it is worthless. If the stock price is below the strike price on a put, the put is in the money, meaning it has value. But if it's above the strike price on a put, the put is out of the money, meaning it's worthless. And when you sell options, you always want the options to be out of the money. That is because that allows you to keep what you sold it for. So back to my covered call. Let's explore 4 simple scenarios by May expiration. Apple goes to 160, Apple goes to 200, Apple goes to 220, and Apple stays right at 180. If Apple falls to 160, then I'll lose $20 per share on my stock, but my short call will expire out of the money, so it will be worthless, which means I'll get to keep the $2.50 I sold it for. So my net P&L is improved to only losing $17.50, which is good. If Apple rises to 200, then I make $20 per share on my stock, and my short call expires exactly at the money, which is the same as out of the money at expiration, which also makes it worthless. Again, this means I'll get to keep the $2.50 that I sold it for, so my net P&L is improved again up to $22.50. Also good. If Apple rises all the way to 220, I make $40 per share on my stock, but now my short call slows me down because it is in the money. I do get to keep the $2.50 I sold it for, but now the short call loses the difference between the 200 strike price and the 220 stock price. So again, my net P&L is plus $22.50, which is good, but not as good as it would have been if I just held the long stock only. But lastly, what happens if Apple stays at 180? It moves around, up and down, sideways, whatever, but at May expiration, it's right back to 180. Well, I don't make or lose anything on the stock, but again, my short call expires worthless, so I get to keep the $2.50 per share. So in other words, I generated a positive P&L on my position without needing the stock to go anywhere. And that, my friends, is the power of options. Not to mention, I also improved my net P&L in 2 of the 3 other scenarios too. Okay, so next up, the vertical spread. And specifically here, we're going to talk about a short vertical spread using put options. So this would be a short put spread. Let's use Tesla as our example. Here, I won't have the familiarity of long stock to lean on, as my position will be solely options. but I'm bullish on Tesla, so I want to set up a short put strategy in the May cycle with 37 days to expiration. To do that with Tesla at $250 per share, let's say I set up a 225 220 short put spread that I'm able to sell for $2 in the May cycle. Now, an important aspect of short vertical spreads like the one I have here is that my maximum gain is always whatever I sold the vertical for, so $2, and my maximum loss is always the difference between the width of the vertical and what I sold it for. So $5 width minus $2 credit, or a $3 max loss. So let's work through 4 different stock price scenarios. Tesla rises to 300, Tesla stays at 250, Tesla goes down to 230, and Tesla goes down to 200. First, Tesla rises to 300. In this scenario, this short put spread expires out of the money, so it's worthless, which means I keep what I sold it for, and my P&L is plus $2. Next, Tesla stays at 250. In this scenario, again, the short put spread expires out of the money, so it's worthless again. I keep the premium, and my P&L is plus $2. Next, Tesla falls to 230, so it went down when I wanted it to go up. But here's the crazy thing. Again, the short put spread is still out of the money, so it's worthless. I keep the premium, and my P&L is plus $2, even though I was wrong about the direction of the stock. And lastly, Tesla falls to 200. In this scenario, the short put spread is fully in the money, so this trade would be a loser, where I would lose the most I can possibly lose for a P&L of minus $3. Now, as you can see, I'm not hitting home runs when the stock moves in my favor in this Tesla example. Not at all. But it's pretty crazy that I'm able to make money when I'm wrong on the stock price direction completely. Well, that is exactly what we meant earlier when we said you're able to benefit from the passage of time. When you sell out of the money options, if they stay out of the money, then you are able to allow that time value to drive your ultimate P&L. So now, the third and final strategy, the short strangle. Here, let's say I want to do an option strategy in Starbucks. And for this one, I don't think Starbucks is going to move much between now and May expiration in 37 days. So I want to set up a strategy that is a pure time play. It could be a volatility play too, as we alluded to earlier, but for these examples, again, we're just focused on time. So with Starbucks at $95 per share, let's say I sell an 80-110 strangle. So an 80 put and a 110 call in the May cycle with 37 days to go for a $4 credit. As long as Starbucks stays between 80 and 100 at May expiration, both options will expire worthless, and I'll keep my $4. So that means it could go up to 105, it could go down to 82, and it could do everything in between. It won't matter to me, and it won't matter to the position. As the time value comes out of the option by expiration, I will make the $4 profit from time alone. But here's the catch. Anything above 110 or anything below 80, that's where my risk is. And even more specifically, I have an unlimited amount of risk on both sides. Now that right there, you might be thinking, man, I am out. I am not interested. No thanks. Well, that makes sense, because you're just getting started. I just wanted to take the opportunity right here, right now, to introduce you to the short strangle, because it continues to be one of the most popular and effective strategies that experienced traders use every single day. And you yourself are probably striving to become an experienced trader one day. For now, though, there's no rush. This is not a competition. Start with covered calls and then move into vertical spreads. There will be plenty of time for other strategies like short strangles sometime down the road. I promise you, covered calls and vertical spreads alone are going to keep you plenty busy. All right, so next up is the final step of this whole crash course, where we are going to work out some different ways that you can break down your total portfolio and show both you and Jimmy how you can split up your assets between a passive approach and an active approach. Step 5, portfolio allocation. So now I'm beginning to equip myself with more skills to attack the market from a variety of angles. I can trade time, and I can trade volatility in addition to direction. But to do that, we have to figure out how are we going to split up our assets. More specifically, what chunk, what percentage of our assets are we going to keep doing what we've always done, and what percentage of our assets are we going to devote to this brand new derivative strategy? This is a really important question to answer, and here's the most important thing to keep in mind. You don't have to go all in with 100% of your assets into an active approach in the derivatives market. Definitely not when you're just getting started. It's understandable that shifting away from a passive, long only bias in the market that has done you so well for so many years is going to take some time. But practically speaking, what might some asset breakdowns look like? Well, if you remember, my retirement portfolio just crossed the $1 million mark. And in addition to that, I also have a $100,000 brokerage account that I might use to play a hunch from time to time. So in my situation, the starting point here is easy. While I'm certainly intrigued at the prospect of not having to be passively long all the time, I'm still confident that the upward trajectory of the market will continue to some degree or another. So I'm going to start with my $1 million retirement portfolio, still doing what I've always been doing, long some market indexes and some of my favorite stocks, but I'm now going to devote my $100,000 brokerage account to a more actively managed approach that focuses on derivatives, just as we've been talking about today. So that means that $100,000 of the $1.1 million total, or about 9% of my assets, will be actively traded, and 91% of my assets will continue to be passively invested. This is a great start. And over time, as I gain more experience and my skills improve, I suspect that that ratio is going to shift in favor of more assets being actively traded. But maybe you have a $500,000 retirement portfolio and a $200,000 brokerage account, and you want to devote more assets to the active approach now. Again, I think splitting up the approach to whatever is in your retirement accounts to passive and whatever is in your brokerage accounts to active makes a lot of sense. So here you would be about 29% active and 71% passive, so still the bulk of your assets passively invested, but a much bigger chunk devoted to the active approach. Or maybe you have a $200,000 retirement portfolio and a $40,000 brokerage account. Again, with the natural split of retirement assets into passive investments and brokerage accounts into active trading, you're looking at about 17% active and 83% passive. Of course, you don't have to do it this way. You don't have to use your retirement accounts for passive funds and your brokerage accounts for active funds. You can certainly do it a different way. You could even mix it up if you want to. But when you start to learn about things that we were not able to cover in this course, with buying powers and margins and things of that nature, it does make sense to begin with passive funds in the retirement accounts and active funds in the brokerage accounts. There are many, many, many ways to split this up. But whatever you decide, here are some important things to remember. First, by keeping some amount of your assets in passively invested positions, you'll maintain the familiarity of what you've been doing your entire investing career. So playing the natural market drift higher, collecting dividends, dollar cost averaging, all that stuff. Second, remember the strategy I suggest you start with for even your active stuff is the covered call, which we introduced just a little bit ago in this very crash course. So even within the active portion of your portfolio, you'll have that same familiarity of long stock. From there, you can grow into vertical spreads, possibly even short strangles down the road, and many, many other strategies. But lastly, again, do not forget, this is not a race. This is not a competition. The market will always be here. So don't go fast just for the sake of going fast. And don't dive into the deep end before you've even dipped a toe into the water. You're going to mess up and you're going to make mistakes. So ease into the active approach little by little and only do it as you are ready. And I'm here to help you as much as I possibly can. So please, you can always email me. I'm jschultz@tastylive.com, or we can connect on X at jschultzf3. But now, where do you go from here? Well, given the nature of this crash course, there were so many things that we were not able to unpack, that we were not able to dive deeper into. And so, if you want to use this crash course as a catalyst to improve your skills and improve your abilities, then I would strongly encourage you now to dig into the live show on the Tasty Live Network. dig into the archives, and maybe possibly even check out some of the other crash courses that are already available on the network and on the YouTube channel, such as the one that dives deeper into what it means to begin to trade options, and it happens to be starting right now.
All right, welcome back, everybody. We are here for another Rising Star shoot today. I'm excited about this one. We don't get a lot of women in here. Emily, welcome.
Thanks.
It's really fun to have you. We've been dying to have a woman rising star on here. We've got you.
No.
We trapped you. We trapped. You're in from Ohio.
Mm-hmm.
And I guess you spent some time in Chicago before.
Yes. I went to school here, University of Chicago, and then I lived here afterwards. So I'm sort of a Chicago native.
You're kind of a South Sider, like the Pope.
Yes.
University of Chicago, you were a history major.
Mm-hmm.
And then you got your master's, you almost got your PhD. We got your whole history, educational history down. And yet you ended up as a jeweler.
Yes, I did.
I mean, you're also a professor and English professor, but I'm just giving people a little bit of a background.
Uh-huh.
But what's with the English professor stuff makes sense to me, but the jeweler stuff, where'd that come from?
My mother-in-law is an artist, and she got me started in jewelry. And it was my hobby and stress relief while writing my dissertation. So the jewelry became more and more time. Dissertation.
So you liked it. And
yes.
The dissertation took a back seat. And
yes.
Yes. We have a couple of people here like that, also from University of Chicago, where after about 6 or 7 years, the dissertation got lost not in the jewelry making, but in something else. It's amazing how life works that way. And I guess you had a pretty successful jewelry business from what I hear. Yeah. And what happened?
Well, I was making some silver ingots in an artisan studio, and I was melting the silver, and then you have to put it through this rolling mill, which is like a pasta mill, except metal comes out, and you have to hand crank it. And I was cranking away and it was really hard, and I happened to glance down, and my wrist bone was popping out. And so I stopped, and...
That's a good time to stop. That's what we call an act of God. That's God telling you that it's time to stop pumping.
Yeah. So I couldn't use my wrist the next day, and the doctor said I couldn't work for like 6 months. So I had nothing to do.
And at this point, you are like, what year is this?
This was 2019. So the summer of 2019. So I asked my dad, I was, telling my dad about this and telling him I didn't have anything to do. He was an options trader in retirement, and he told me...
Oh, what did your dad do before he retired?
He was an actuary.
He was an actuary. Okay, makes sense. Okay. So, and then was an option trader. So as a customer, not as a professional, he was a retail customer. Yeah. Okay. All right.
So he told me about Tasty Trade and that I should trade options also, and that I should just simply go on Tasty Trade and learn how to do that from them.
Also, we got to thank your dad for all this. and had you ever traded stocks or options before that?
No, I never even paid any bills. I just I was not interested in anything financial, and just...
So you'd never made a trade before 2019?
No.
But your dad had?
Oh, yeah.
Yeah. And so was he like, does your husband trade at all?
No.
So it was just your dad kind of saying, hey, maybe you should check this out.
Right.
And what were your first impressions of checking out Tasty?
Oh, it was really relatable and understandable. Because at the same time, I bought this textbook, and I opened it up, and it was like a big math equation.
Hold it, a textbook on option trading? Oh my God, what's textbook?
There is one. It's a big textbook. It says options across the front. And you open it up, and there's all these math equations in it. So I was like, I'll read that later.
Okay.
But I went through a lot of the tasty videos. I did Mike and his whiteboard, and I rewatched them. I took notes on them. I watched them over and over again until I got the hang of it, and then I just started trading.
That's great. I love the story. It's 2019. Do you mind if we say your age?
No, go ahead.
Because you're 51 today now. So you were about 45 then, about 6 years ago?
Yeah.
Great. And so you start trading when you're about 45, knew nothing about options.
No.
And what did you do? Like, what's your first, well, let me put it this way. How much did you fund your account with?
Well, it was just going to be a test to give me something to do.
Okay.
So
that's all right.
my husband agreed for $5,000.
$5,000. And he's probably like, what is this so-called tasty tray?
Yes.
Exactly. And here's $5,000. Try to make it last as long as you can.
Yeah, basically, yeah.
Okay. And what'd you do?
Well, I started selling bull put spreads on Apple. And
why was that your strategy or trade of choice?
the put spread allowed me to, well, one, it limited the loss, and two, if I didn't want to have the loss limited, I could sell the insurance put and then take the stock and then just sit on it like it was an investment. So that was my backup plan.
Okay. So when you first started out, obviously you did it really small. And were you nervous? Like, I'm going to lose guys. Oh, you were?
Yes,
Okay.
I was nervous and I wasn't sure what I was doing. I was afraid to put in the first trade.
And you did, and it worked?
Yes, it worked right away. So I put in the second one. And then I was really astounded because it was like...
It worked too?
Yeah, because it was like doing the crossword and getting paid. So
you making a couple trades in 2019. The market was going up. I mean, I don't remember everything about 2019, but the market was actually heading towards record highs actually just before the pandemic in 2020.
Mm-hmm.
So you caught that little move to the upside.
Yes.
Did the pandemic, what happened? Because Apple got killed.
I know. I was flying back from an art show in Baltimore right before we closed down. And I remember coming back and the market was crashing. And not only that is that they closed down all the gold suppliers, the jewelry suppliers, the art shows. Business was done.
Okay.
So, I had been making so much more money trading with less physical labor than goldsmithing. But we did have the crash, and I had been very careful with my margin and my account, and I just simply rolled out the puts 1 year.
Oh, you pushed them out a whole year.
Yeah, I pushed.
So you went into some leaps.
Leap puts, I suppose. Yes.
Yeah.
Yes.
Yeah.
And then I waited, and then when they just announced that they were easing, I took all my cash and everything I had, and I bought back in.
Nice. Okay, worked.
Yes.
And that's 2020.
Yes.
And so by the end of 2020, let's just say, either you sat down with your husband or he came up to you and said, hey, you're doing pretty good.
Yeah. It wasn't like a mutual agreement. Just more money kept showing up in our account. Like he would just deposit more money in.
So he wouldn't even talk to you?
No.
So he just did it because why didn't he tell you he was doing it? Because he just...
That's the way we handled things.
Oh, okay. You don't talk about it. I like that, actually. I might need a little marriage advice. But so he would put more money into your account. And because, well, obviously he believed in what you were doing.
Yeah, he was watching the returns. He would look like every week or two.
Did you actually let him log into your account to see it, or he looked over your shoulder? How'd this happen?
Is in computers, so I guess he
figured it out.
Yeah, he has access. I gave him access to the
You gave him access to your platform.
Yeah, and the behind the scenes, where the
Got it.
apex where you can pull the
Sure.
Yeah.
So he saw the results, and for about a little over a year, you were pretty consistent. I mean, yeah, you didn't really have any drawdowns. He kept adding capital. You got, I'm not going to talk about the exact number, but you got up into the mid to high six figures, right? So that's where and that's kind of your starting point. Now where are we now? Where are we year wise? We're kind of like 21-ish,
Yeah,
2022.
probably about 2021. Yeah, or 2022. Probably 2021. Because after I came back on the end of 2020, that's, I think, when he put like the last infusion in, or it was the beginning of 2020.
Sure. So finally, and of the money that you guys had saved up, nest egg, whatever you want to call it, he was pretty committed.
Yeah, a really big chunk showed up in our trading account. It was a lot of our savings at the time.
That's a hell of an endorsement. I mean,
Yeah.
were you nervous?
I was really scared, but he totally believed in me and supported me. And he said, "You're trading this."
That's unbelievable.
So-
That's a great story in itself. And so, because you don't, like, that's just a tough thing to do for you. It's a tough thing to do for him. But what's interesting about it is you didn't change your style, right? You kept doing the same stuff.
Yeah.
And 2022 was a pretty nasty year. Market sold off pretty good, 2022, because we had the rally after the pandemic in 2020. We had the whole meme stock explosion in 2021. And then in 2022, we kind of had this little bit of a nasty sell-off.
Right.
How'd you survive 2022?
2022 was tough. So I sort of survived by rolling things out.
Yes.
I did get into a sort of bad habit of rolling things wider to still get a credit. And that worked along just fine for a long time. And so 2022, I did not make as much as the other years, but also my account wasn't on mark to market yet. So there was a tax.
You mean you weren't portfolio margin, you hadn't switched to professional trader or mark to market?
Yes, I had to switch to mark in 23.
Got it. So now at this point, what you're mostly selling put spreads. How wide are your put spreads? What is the duration of your put spreads? And what is the underlying product that you're using?
Okay. So I would try to keep to the tasty principles, though I know you're not supposed to roll them wider.
Okay.
A little bit of cheating.
That's okay. No, whatever works for you, of course.
So I would sell them 45 days out. I would sell them 10 wide to start, sometimes 15 wide. And I would usually do like 10 contracts. And it would be on an underlying stock. And I think sometimes at that time I also did the indices like triple Q,
Okay.
stuff like that.
But did you mostly use equities?
Mostly equities.
And how do you pick your equities?
The stocks that are going up. They have to
Very
be
sophisticated method. Yeah. Done.
they need to be large liquid stocks in the S&P 500 and keep it to a small handful that you watch very carefully and you do.
How many positions would you have on it once?
I would have like maybe 10 to 15 symbols, but I'd have a lot of trades within each symbol. So maybe like at that time, maybe like 50.
So 50 positions.
Yeah.
So give me an example. Let's say we took a liquid stock like NVIDIA. Did you trade NVIDIA at all?
At that time, probably.
Okay. Let's say it was a liquid stock like NVIDIA. So you would do multiple 10-lot put verticals, sell multiple credit spreads, like up to what,
Well, I would try to keep my margin, leave a reserve of about 50%.
Okay.
So that,
So the total capital you're using was about 50% of what you had,
Yeah.
capital. But how much would you commit to a certain underlying? Like how many different, you said 10 different underlyings at least, or?
yeah, it was a lot. I mean, the core trading strategy would allow me to really concentrate on certain underlines that I wanted to bet on. And so,
Can you give me some examples of some of them? Like what names?
like Meta at the time, it's usually the big tech stocks.
And how far, what was your short delta? Like what strike would you sell generally?
I would usually sell the 20.
20 delta?
Yeah.
So that's your default. Now, did you ever do the call side?
I did the call side in 2023, but I didn't quite follow it exactly. And I never did naked calls.
Okay.
And I would have been better off, ironically, if I had done exactly what you had taught to do, the naked calls, because the insurance call would cut into my profit margin too much.
Got it.
So,
but mostly you were selling put spreads. Occasionally you'd sell some call spreads. And how often were you trading? Like multiple times a day, I assume.
yeah,
Yeah.
I was.
Are you pretty much a full-time junkie?
Basically, I am now.
You are now. 122% profit in 2023, which is amazing. But 2023 was a very bullish year because we came off of 2022. And if you're selling put spreads, it works.
Mm-hmm.
And like that's probably more money than you'd ever made before in a year in anything, right?
Yes, it was a whole career's worth of money.
Career's worth of money.
Yeah.
Were you wondering like what's going through your head? Like, why doesn't everybody do this? Or why doesn't what's going through your head?
I was wondering why, yeah. And I was trying to recruit other people to do this.
And nobody would they?
They were scared.
Yeah. Yeah. At that point, you have an unbelievable year in 2023. Like I said, up 122% on a significant amount of capital. What'd your husband say then? Like,
He was really happy. He retired recently. So I guess I make enough money for both of us. So
that's incredible. And so you've been disciplined enough to keep doing the same thing. Like you haven't changed.
I change according to market conditions.
What does that mean?
So I've noticed at some point the premium is, in some days, the premium is not high enough to justify the risk that you're taking for selling. If the premium is artificially low, I will buy leaps. And the leaps do really pay off. And then when the premium is really high, I'll just sell the puts.
Got it. So you're kind of legging some of this stuff a little bit.
A little.
Okay. In 2024, because I think people kind of want to know the progress, because you know, this is remarkable that you started, with a $5,000, let's see what you got, to now you're basically, supporting the family. I mean, you're just, it's an incredible, you're a rising star. But it's make 47% in 2024, which again, I'm going to go through a lot more of the details in a second, but how's 2025 going so far?
I have to beat the S&P 500 every year. I mean, that's what I set for myself.
That's your goal?
Yeah. Yes, I must beat the S&P 500. So I am beating it fine so far this year. I think I'm at 12%. S&P's at 2.
Oh, you're up 12.5%.
Mm-hmm.
That's great.
Mm-hmm.
Are you still using in 2025 now? Is it mostly equities, or are you going back to some of the indexes? Because we had that vol explosion in April. So does that change the way you think?
I haven't been doing the indexes because it seems to me that the leverage, the momentum on certain equities is a lot larger than the momentum on the index only, and that the returns are better if you pick out the largest stocks in the S&P 500 that are at a higher momentum and higher profitability than the slower moving ones, rather than you just cherry pick off the top most liquid, most profitable stocks in the S&P 500 and trade that instead of the whole SPY.
Maybe that's why I don't make money a lot of times, because I'm doing the exact opposite, looking for the stocks that are going up so much and then trying to sell them. I'm a contrarian. But it's really interesting to me that, because what happens a lot of times is that people that have a similar approach to you, they get, it's very hard to check your ego, because you start to think, okay, well, why am I even buying the wings? Why don't I just sell the puts? Why do I even need to spread it off? But I guess by spreading everything off, it gives you just so much more capital to work with that you can.
It does give you more capital. It cuts into your profits.
A lot. Yeah, sure.
Yeah. And so sometimes I do sell the naked puts, but I am very careful with the naked puts.
Are you conscious of your overall deltas? Like, do you look at those, like your
I used
beta-weighted
to in the beginning, but then I just...
You don't look at your beta-weighted deltas now?
Not anymore.
Okay. And do you look at the amount of theta that you've collected? So you're just thinking about it, just you're a pure premium. This is how much extrinsic I've sold.
Yes. This is how much I can extract and produce.
This is how much premium I've sold. This is how much I can extract. And what % do you think you can keep on that?
Well, I know I can keep more than the 50%, but I usually close it at the 50%. So when I sell a spread, I close it at 50%.
Got it. And what happened in April of this year?
This is like a
early April, when we no. When the market had when the whole tariff thing came into play and the market sold off, we sold off from let's say where we are now, a little under 6,000, all the way down to a little under 5,000. So the S&P is sold down 20%.
Right.
There is no strategy that you can have when you're short put spreads where that works.
Right.
So you must have taken a lot of heat in the beginning of April.
I do. My strategy does take big drawdowns. What I did is I split the time frames on my account.
What does that mean?
So I bought a bunch of leaps at the bottom. Call leaps. Yeah, I bought them, and for 1 and 2 years out, like Palantir and stuff like that, and Nvidia and stuff. So
because you thought these stocks were cheap.
Oh, they were cheap. Yes.
Well, in hindsight, they were cheap, but at the time you didn't know that. I mean, you
kind of know, because the macro picture, the larger picture for these stocks hadn't changed. Right. And so
100%, but you still don't actually know.
You don't know for sure.
Yeah.
Yes.
Right.
It is
So you bought a bunch of long-term leaps.
Yes.
And it actually worked out.
Yes. I'm still holding the leaps though. And then I took my freed up cash and I short-term traded with that. So I have like a long time frame and then I have a short time frame within my portfolio.
And on the short time frame, your short put spreads must have lost money on the way down.
They did. I closed them out, and I usually don't do that because I didn't want to take a really big drawdown. So I closed them all out early because I was like, the macro picture has changed. We cannot follow the same rules. Just close them out. And I saw your video like last week, and I was like, I shouldn't have closed them out. Because I was looking, they would have, if I could have rolled them, and I could have not taken that loss. So,
well, you in the last couple of years, well, since you've started, you've got to experience, virtually every market condition. You've had bear market, you've had bull market, you've had extraordinary, binary events like the pandemic, meme stocks, the tariff thing. So you've basically seen everything. Are you trading any commodities, any futures options?
No, I'm not trading futures options. I am experimenting with the metal futures. I feel more comfortable with that because I used to be a goldsmith, and I trade.
So you think because you used to be a goldsmith, you can trade gold? That's a very okay. Got
That's exactly what I think.
So in other words, you're buying gold.
No, I'm actually sort of trading it, so I'll buy and sell it.
But futures?
No, micro.
The micro futures.
Really small.
The MCG.
Yeah. But I also do, most of my money is in GLD.
GLD.
Yeah.
Okay. And so you're basically short put spreads in GLD and scalping micro gold futures around it.
Yeah.
When you kind of plan out your days now and everything that you do, like are you pretty much in front of the screen all the time?
Yeah, it's hard to tear myself away. There's always something else to learn, and I still feel like I'm at the beginning, and there's so much more to find out about.
There is.
I know.
We're still all learning.
Yeah.
Have you been experimenting with any other kinds of strategies?
I did experiment one with I would buy a long straddle on the VIX.
Oh God. Okay.
And it did turn out, but the conditions I don't think are not there where I could repeat that right now.
Got it. When you put your positions on, and you have a lot of positions on, do you ever take losses or do you always roll out?
I used to not take losses, but I take losses now.
Okay, so you found it a little more effective to take losses. You don't put stop orders in. You just take losses. They're mental stops.
Yeah, mental stops. I will take losses if I think that it's not going to come back, or more importantly, if the macro condition has changed, like tariffs or something like that.
So if you're short a put spread in XYZ and the market starts to go down and you think the conditions have changed, it's ugly, you would close that position out rather than sell a call spread against it?
Yeah. I would just simply, with something like a very large macro change, I can't be sure, exactly what's going to happen. I have sold call spreads out before against the put spread, and that actually does turn out pretty well. It's just recently, this is the first time I've done it. I just took them all off.
That's wild. I like it. So, right now, what % of your capital are you using?
Right now, I am using 95% of my capital.
95%. So you're all in right now.
Mm-hmm.
Got it. And mostly the same kind of positions?
Yeah, the large liquid S&P stocks where I cherry pick off the best ones, and then I accelerate the trade by putting options on it on top of the stock.
Because since the meltdown in early April, May and June have probably been pretty good for you.
Oh, they've been really good.
Yeah, I was going to say, yeah, they've probably for your style, they've probably been great. What's the game plan here for the rest of the year?
Well, we'll have to see. I'm thinking it may be time to take profits at some point.
Lighten up a little bit?
Yes. Yeah.
Do you ever lighten up a little bit?
Oh, yes, I do.
Okay. So you are comfortable taking profits?
Yes, I will take profits and then I will sit back, but I usually will keep something on in the core positions.
You have to have something on, otherwise you will go crazy.
Yeah.
It's not possible to wipe the slate clean.
No.
Yeah. Is there anything that makes you nervous?
Yeah, I think the idea of undefined upside risk makes me nervous.
Undefined upside risk.
Yeah, though I know, and I think that's more emotional that's the last hurdle to get over than actual mathematical. Though the market does go up 1% more,
Is there anything like trading wise, nuance wise, know-how wise? I'm not saying it not intellectual, but just it'd be know-how, product wise, that you feel uncomfortable with, or you think like, hey, you know what? I understand all this.
Yeah, I pretty much do. And if I have a question, I can just go back to the videos and watch them.
Got it.
So,
well, that's been a lot of fun, Emily. This has been, your story's amazing. And like I said, we need more women like you, and we need more stories like yours, because this is great. So thank you so much for coming.
Thank you.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
Perfect, and you got the bed. You got everything.
that is not even close.
Yeah, bitch stole my. Oh, it's
Oh,
flawless.
look, that's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your
There you go.
finger in all of our lunches.
Now complain about something.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you had to tape it in order to watch it. You think you have to tape it?
He didn't have
in
a
order to
blank
see it later?
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got
We didn't, wait a minute. So
when I got in this business,
we used to open it at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you
I don't think so.
no matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Check out this dude, what's living under his porch.
I like things living under. I like
It's a
things.
bear? It's a freaking bear?
Yeah.
We're gonna do that. I really obviously wanted to take a little video and then we'll get him out of here.
He's like, I want to take a little video, then we'll get him out of here.
Oh my God.
Freaking bear's gonna move quick.
Why would you even take a video of that? Well, brown bears don't attack? I thought brown bears were the nasty ones.
Oh, bears. They're bears.
Nasty.
Oh, it's cool, man.
cat-like reflexes.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9. Yeah. It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work?
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show. We wouldn't leave you hanging. Come on. A little bit of a late start today. Vanetta's out at the live event with Tom and Tony here, our flagship event in Chicago at Talia Hall. So got a ton of people out there. We've been hosting all the Tasty Traders for yesterday. We got a bunch of pictures. We had a bunch of people in here. A bunch of videos going to come out later in the next couple weeks. So a little bit of a change up today this morning. But good morning, sir. How are you?
Morning. I'm good. You finally remembered to wear the party shirt.
I did.
Fine Friday. I see some pics up. Look at this. Yeah, it was fun. We had Lou Malnati's, endless Lou Malnati's pizza for all that came. But yeah. Great to see some familiar faces, some new faces. And I think my number one thing was I instructed everyone to go to get tacos after the show.
Yes.
That was my number one thing.
It'll be perfect timing. 11 is trader lunchtime, so it'll be perfect. They'll have 5 Rabanitos. There's Frankie, if you've been wondering. Frankie's there on the left with the glasses.
Yes.
We got to keep his face hidden so he stays anonymous in the chat.
Indeed. Yeah, great time.
Yes.
And it's the doors have literally just opened
for Talia Hall.
Yeah.
Yes.
So I'm sure people are sprinting in, getting their preferred seats, getting some coffee and bagels or whatever we have out there.
Yes.
Yeah, it's going to be a glorious show. I know a handful of coworkers here are going to the show.
Yes, for
sure. That are not on the Tasty Live side, so it's nice to hear too.
Got the infamous Joe Mama there on the right. If you've been wondering to put a face to the name, that's Joe Mama in the blue shirt there. But yeah, should be a good event. Boys will be slinging them this morning. But if you want to come see us, we will be in Dallas, October 12th, the Kessler's Theater. Sign-ups are still open. I know it's a Sunday. It's a football Sunday, so, that's a little bit inconvenient. But we will do our best to have the football game on somewhere in the event space.
Yeah. And last year, we took a little trip to Fort Worth. We went to our first rodeo.
Yes.
So we can now say this is not my first rodeo because we went to an actual rodeo. But if you have any other rodeo recommendations, we are open to them.
Mm-hmm.
Because we are absolutely going to another rodeo when we're there. I see some people in the YouTube chat. Lovely. If you want to pop over to Tasty Live, you can join us. I see some questions. Was that Vanetta's voice in the morning song? It is Vanetta's voice.
No, it's not.
It's not?
It's not. It sounds very much like Vanetta.
It is not.
It is not. Was that Sarah?
I've worked here for over 10 years, and this is the first
I thought it was too. It is not.
It sounds exactly like her.
Do you remember who it was, John?
It's not Sarah either.
Oh, damn. I thought it was Sarah. Okay. So,
just an unknown.
Yeah.
Vanetta sound alike.
It does sound like Vanetta.
Well, good on you. The YouTube chat knows more than I do.
Yeah, they knew. I see. They've probably heard the story a million times.
Yeah.
Quick little market update just to give everybody a heads up. You got E-minis up 9 here. We've been chopping around 6,500 for most of the overnight session. We'll see if that moves here into our option expiration, which is today. You've got the NASDAQ down 23, the Dow up 275. It's the biggest mover of the group, along with the Russell, which is up 8. You've got oil selling off a little bit, /CL 62.28 down 75 cents. Volatility futures 1840 down 15 ticks. You got bonds basically unchanged. They're down a tick. Gold and silver both kind of chopping around here. Gold's at up $5, silver down 18 cents. Bitcoin futures up $700 on from the overnight session. The spot's actually down small here. A little bit of a bit in Bitcoin in the later part of yesterday, chopping around today, which is why the futures are up, but the spot is down.
Yep. I think the biggest mover after the close yesterday that was not earnings related, United Healthcare, UNH.
That was a big move. Daddy Warren
And Daddy Burry are aggressively long. They've basically said, we are long the stock. I think Michael Burry is
marked
long.
at 300 this morning, up about 10% ish.
Yeah. You know something's there when Michael Burry is long call options in a
but he does that in all his stuff.
I know.
So,
yeah.
But
he's the leverage king, we'll say.
Yes.
Nice to see that's recovering. I know some people in the YouTube chat were dealing with some pain there, so hopefully that helps.
Yes, and to that point, if you have a position on in there, maybe you're short a put spread or short puts or whatever, maybe you trim that position into this sort of move. Of course, it can continue higher, but it's a huge move overnight. Maybe you take some money and run there. The other big mover of the day is AMAT. It had earnings after the close. It's down about $27, well outside the expected move. So that one should be a tough one here in the morning. We'll see if that has any bearing on SMH. I think it's a top 5-ish holding in the SMH. So the SMH semiconductor ETF. So we'll see if that continues to just get gobbled up by some other name, Micron or AMD or AVGO, probably make up whatever ground AMAT has taken away.
Yep. Someone in the YouTube chat, monthly options expired today. Have fun watching the pinning. E-minis are at 6,500.
Yes.
Kind of love that narrative. I'm going to sell a 0-day SPX Iron Condor on the open.
Right at the open. What are you going to do? So you'll have to see where, the options are actually, they'll be moving because I think SPX trades pre-market.
Yeah. Trying to get in the 64.95, 6,500.
Okay.
64.45, 64.40. So just the expected move.
$5 wide?
$5 wide.
All right, I might follow you when we get to that point. But certainly a possibility we chop around all day today.
Yeah. The implied move is 30 points, but I do like the 6,500 pin narrative. It fits nicely.
Could do it in the E-minis if you want to get it on right now.
Yeah. You're right.
Do like the 64.75, 64.65. 65
wider.
Yeah, 10 points wide. Do the 65.20, 65.30.
Yeah.
All right, I'm gonna do that.
I feel like you gotta.
Yeah, we'll play that game.
The pin narrative. Yeah.
I'll tell you where I get filled here.
Were there any earnings yesterday that?
AMAT. That was the only one. All right, I'm in 64.75, 64.65. On the downs or on the upside, I did the 65.20, 65.30. So it's basically right around the 20-ish delta, the expected move on either side. I did this at 320-ish. So about 1/3 the width of the strikes.
There you go.
Pin action, give me
action, yeah.
And it's future, so it doesn't. If you have problems with PDT, which hopefully towards the end of this year will be over with and past. If you got those issues, you can do this and trade it in and out, and not have any issues with day trades. So
cool.
That's another benefit there.
Lovely.
Cool. Should we take a quick little 90-second break? Come back with Jamal this week in stocks, and then we'll get to the opening bell.
Do it.
Perfect. Sounds good. We're going to take a quick little 90-second break. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. It doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Mikey, we are back, my friend. E-minis up 5. You got the NASDAQ down 33. We were just talking about a couple big movers. You got Roblox down 10, UNH down 10 points, about 10% as well. UNH up 30 and change. But who cares about all those when we got the man, the myth, the legend, Mr. Jamal Chandler. Good morning, sir. How are you this morning?
If you were going to call me a magician, I would accept that. That's fine.
The magician too. The magician too.
No, we were talking about Cameron about Roblox. Yeah, that is a little weird. I like I said, like a lot of people, allow my kid to play Roblox. We're going to have discussions in the house. What's going on here? I mean, this is not.
What's the daily or the weekly or monthly stipend that you put towards Robux?
You know what? Actually, not much. Not much. To be honest with you, it used to be. It was never a whole lot. But he didn't. And this is all like. I'm shocked. We didn't have to have that much of an intervention or discussion with him.
Okay, that's good. Well, Vinny is at about a 100 to 200 a week run rate. So my dad's gonna have to start driving Ubers to start affording that stuff.
Yeah, my stepmom marked Roblox charges as fraud because she's like, "What is this?" And then because the kid was just using the credit card, just smash. It's insane. That's the business model.
I mean,
Stolen
yeah,
credit cards.
Look, I don't know about you guys, and this is really not this big a sucks, but it's still funny to me. I mean, it's a really good discussion. I've always been a video game person. I still am. I still play stuff. I am probably the last like phase of people where I don't necessarily need to play games across the internet with other people. I can just play like a game. I can literally be fine playing it. Like college football, for example. Okay, I love the college football game on PlayStation. I will play that in Dynasty mode for the next 5 years with the same one. I don't need to play anybody online. I don't care. I mean, it's cool if I do, but I don't really need to. And this is the generation of those games, right? Roblox. My kid plays VR. He plays that online with other people. They're always, going at it, yelling, whatever. Same deal. So it's like it's funny. It's funny when I think about it. For me, I don't, whatever. But him, that's like his whole life.
It's craziness.
Yeah, it's craziness. So what do you think this morning, Jamal? We just talked about it. We got people in the chat. You got option expiration today. We got a nice round number at 6,500 on the E-minis. We did a little bit of a 0-day Iron Condor in the E-minis here this morning. It's today a chop fest, pin action. 10 points up, go right back down. 10 points down, go right back up, sort of thing. Is that what we're in store for today? I saw all sorts of stats on, this being the biggest August monthly expiration, which you got to take with a grain of salt because the market gets bigger every single month pretty much. So every month you usually hit or get to, those records. But is that what you're thinking for today? Kind of a chop fest pin action of sorts?
I think so. If it's been kind of any indication of the week, I mean, the interesting thing is like we're at all-time highs for the S&P, for NASDAQ, and for the Dow. Yeah. Russell has probably been one of the bigger movers of the week off of those inflation numbers, right? And you had inflation is back, and the CPI is back above 3%. PPI had the hottest print in 3 years. And Trump is calling for 300 basis points of cuts. And, there's all this talk still about firing Powell. And you're hearing these other people at the Fed that are sort of vying for that position and talking about rate cuts. It's the only thing to me that can explain why the CME FedWatch tool that we watch so much is pricing in such a high % chance of a rate cut, even though inflation is high. It's crazy. I don't really understand it. And it's the only way I think you can make sense of it. But yeah, to your point, it's been a chop fest throughout the week. Things have kind of ping-ponged around. We're at all-time highs, but we really haven't moved a whole lot on the week. And volatility is fairly low. This is also kind of an abnormal week in that, like you said, there's expiration, but there's no VIX expiration this week. It's next week. It was a longer cycle this time around, and to get with volatility too, like. There is a big difference between August and September VIX. I mean, it's like $2 and change, $2.07 last time I saw. So it's a serious tango situation. So we're at all-time highs. We're probably set to drift higher unless there's other bad news out there, which I don't know. I think it's just going to be fairly quiet.
Yeah, you got next week's volatility futures at 1550, whereas the U contract, which is where will roll into, which is the next expiration, trading at 18 and change, 1840. So it's almost a 3-point difference between our volatility futures. And even further out the curve, you have 20-ish handle going out towards the end of the year, 21 all the way at the end of the year here. So it's a huge contango right now. It's an interesting point. I haven't even looked at that recently. Another question for you. So I'm sure, as somebody who is also in the Twitter sphere, you've been seeing all the UNH stuff. The Daddy Buffett buys, Michael Burry buys, the Tepper's in, everybody's in. What does that mean to you? Do you take that with a grain of salt? Do you think there's a trade there? Is it a trim? If you've been, long it, but taking some pain over the last, 2 months or whatever. What are your thoughts on all those things?
This is why we're here, because very good questions. I've got like 2 shows and they're named as such about zebra trades. I for whatever reason, I haven't really wanted to trade a whole ton of things recently. I mean, I just know for whatever reason. We just talked about how low volatility is. So it's not like I'm out there like selling puts in a lot of different names. And so it started maybe about a week and change ago. I would just kind of flip the S&P 500 and look for some of the biggest losers on the year. Yeah. And I looked for a couple of names to get long. And I have a whole list. And then I didn't execute most of them because I was kind of a little worried about a pullback. But I was like, I'm interested in getting some zebras and some names. And UNH was one of them. I had that in the account for the better part of like 2 weeks. Just to give you an example of some of the names, Lilly was one of them. CRM is one of them. Merck is one of them. Accenture, Adobe, Chipotle, which I decided against because we've seen what's happened with some of these casual restaurants, right? Chipotle, Sweet Green, we know that story. So I decided against that. And I didn't put all of these on, but these were the names I was looking at. Lulu is another. TTD was another, but I was like, I'm not sure. And so my criteria essentially was if you're down more than 20%, 25% on the year, and you're at least like a $50 billion company, I'm kind of interested in getting long. And UNH was one of them I jumped on. I made like a solid like 75% on that name. I did trim. Mm-hmm. If whoever kept it, great. I actually still have some of my long-term account, but whoever kept it, great. But I feel like this has been a pretty decent strategy for names that have been beat down, especially UNH, and clearly Uncle Warren does too. And so a lot of people clearly decided to buy that name. It's been beat down. We know the reasons. I mean, the unfortunate situation with the CEO last year, and then there's just been a lot of other noise around it. But I mean, I think it's kind of awesome that for those who held, good thing. Congrats to the winners.
Yeah, another one of the stories of the day is the Intel situation where Trump kind of flip-flopped with fire the CEO, and then also maybe the U.S. will just like buy some of Intel and just kind of like, put their hands in there. Intel trading at $24.76 here. It's rallied about $3 over the last, 24 to 48 hours. Do you have any interest in that name with this sort of news? I'm trying to see if you think some of these are like buy the rumor, sell the news type events. Like we got this, if you've been long and it's been a pig, like Intel, the last, 6 months looks like the last couple months in UNH where you've just been chopping around 300 in UNH. It's like nothing has happened. Is this kind of a, take some chips off the table, or is this a new trend?
I don't know. Intel is interesting, and personally, I don't think it's that interesting. I will say I am not that interested in Intel. I think there's other chip names that you can get into, but it is fascinating that the government is potentially, again, this is like you said, it is a rumor. I mean, we haven't seen any action on it yet. This is not like the MP Materials situation, which, by the way, I hadn't looked at that stock in a while. I didn't realize it was upwards of 75 now. Yeah, that was a quick double. Situation. Right. Yeah. I mean, that was a different situation. So I don't know. I mean, I guess if they actually do buy into Intel, maybe it's interesting. But outside of that, the rumor is, not as interesting to me. I would say what's a little more interesting is all of these people. Look, AI is still a big story. You've heard two people now talk about the idea of buying Google Chrome. That is really funny. That Perplexity, an $18 billion company, mentioned the idea of giving $34 billion for Google Chrome, but okay, whatever. And then this morning, Sam Altman said he would be interested. So it's a reminder that search engines are essentially AI, and AI can probably eventually make them better. Yeah, maybe that's something we'll see going forward. And then the last thing for me I think is interesting is the IPO market, dude. The IPO market has been hot recently. I didn't even know Miami Stock Exchange was IPOing their stock. They IPO'd yesterday, MyX. You got the bullish stock. You got Circle, obviously. It's been IPO'd for a while. Figma, we know about. CoreWeave, obviously, is going through something right about now, but that's one of the more recent IPOs. And I didn't know Chime came out with an IPO. So we got a lot of new names, boys, to play around with.
Yeah. Liquidity, baby. It's here.
We are liquid. I think the UNH move is obviously big, but I still think implied volatility is a little low relative to potential realized volatility.
It's going to pop. I think you're going to see volatility expand there. I think this morning will be an interesting time to put something on if you want to, or if you don't have anything on there. So
I hope it keeps running. That's going to be awesome if it does.
Yeah.
I also too have. I had to tease this because I have a. I talked about all these zebras I put on. UPS was one of the names I put a zebra in on too, and then I just got an email this morning about a dividend, and I realized I'm going to have to close it because the short strike that I am. Well, I'll talk about it today, but the idea of dividend risk in a name, I have a situation, and it's a good situation to be in. It's in the money options, but I'm going to have to do something about it because of the dividend. I'll talk about it with Errol.
Beautiful, beautiful. Jamal, thank you for joining us this morning. We're going to take a quick little 90-second break and come back with the opening bell coming up here in a couple minutes. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Mikey, we are back, my friend, going into the opening bell here. We've got E-mini S&P 500 futures. They're up 7 here, chopping around that 6,500 mark. You got the NASDAQ catching a little bit of a bid. It's only down 20 here. The Dow up 277 and the Russell up 3. You got oil futures 62.25 down 75 cents. You have volatility futures down 10 ticks at 18.45. Bonds actually just moved lower, about 9 or 10 handles in the last couple seconds here. Bonds up, or I'm sorry, gold up $2, silver down 20 cents, Bitcoin largely unchanged from the overnight session, up $500 on the futures, spot down $390, Ethereum too. I forgot to mention that before. It's down 11, but near the highs of the range. We got some big moves coming up here on the open. UNH sitting at 301. You got AMAT, which had earnings at 162. You got Roblox, another big move. There's our bell at 113 and change, down 11 here. Going into the opening bell, that ding was that was not a good ding.
It's an exception.
Did yours get muted?
No, I heard it.
Usually it comes from Tom's, but that was like a nothing ding.
I don't know. Couldn't tell you. But I can
low
see,
ding
I can
this
see
morning.
how disgusted you are.
Yeah, well, I wanted the ding. I mean, it's very low ding.
Yeah, I like the 6,500 pin narrative. So we've got a 0-day iron condor in the E-mini futures.
Yes.
I just put in a GTC order to capture $100.
Nice.
So buying it back at $1.20.
Do that.
So yeah, but yeah, UNH up 30. If you look at implied volatility going forward, let's see how it shakes out today. It looks like you're getting a little boost, up 5% in terms of IV 5-day change, which you should expect to see in these outsized moves to the upside and downside. But yeah, let's see if we can keep that rally going for the people that have been holding.
Yes. Looking at some of the biggest movers in the market here to open the session today. Of course, we talked about UNH up about 10% here, 25 and change. You have Intel, which had some of those, I guess we call it news, but those events yesterday, talk from the president, up 60 cents and change. Eli Lilly's in there. It's basically all the beaten down piggy healthcare sector. You also have Tesla up $2 and change. Amazon as well continuing to rally. It was up $6-7 yesterday. On the downside here, Palantir down to 177, $3 and change to the downside. Cisco, which had earnings. You have AMAT, which had earnings, I believe, on Wednesday after the close. AMD taking a little bit of a move lower. AVGO, some of those chippy names taking a little bit of a breather here.
Yeah, I'm trying to get into UNH with the October-September diagonal spread for around 1,200.
Okay.
I think even with this move, if implied volatility stays below 50%, I think it's still a little light for a potential continuation. And you don't need much if you're in the 300, 320 strikes. But bid-ask spread's flying around. Market's still chopping, trying to figure it out. But yeah, crazy move.
Yeah, this Roblox move is going to bail me out. To try.
Oh yeah.
I mean, City, it's down $10 and change at 114. I had the 110, 120 call spread that was yesterday, fully in the money.
Yep.
I mean, I just got back a couple $100 on that, just closing that out. Basically a scratch, which is shocking. I mean, that sort of thing, like if you have these positions that, you know, like why even wait to try and get more out of it? Just close these positions and just move on to the next thing.
Yeah. I just closed mine. I had a 110, 115.
I gotta do that in my Johnny account.
So that was a super small trade, but same story. Got back $160. It was trading for max loss yesterday.
Yeah.
And we got absolutely bailed out today with 0 days left.
Huge.
AMAT, is there anything I can do here? I had a call diagonal spread. Doesn't look like it.
Probably not much. AMAT currently sitting at down $24, 163 right now. It's a big move.
Yeah. Well outside the expected move.
Oh yeah.
But yeah, there's normally I'll look. So I have the 190, 200 with the 200 short expiring today. Normally I'll look to roll it to September around the 190 or 200, but there's just no premium there. I don't want to go to a calendar spread at 190 for 70 cents and then have it rip $10 next week if it's going to happen. So I'm just going to sit there with the long option. I've got 63 days left for this thing to reverse. And if we get this back up to like 175, 180 over the next couple weeks, it'll be okay.
Yeah. One of the ways that we can kind of look back at the expected move for a stock into earnings. If you go to the weekly expiration and go to basically where the stock was trading at, so yesterday, if you look at the quote details on the platform, you can see yesterday we closed at 188 and change. If you go to the 190 straddle and you add the change column here, so this is one of the drop downs that you can get on the third or fourth column set here. If you look at the money straddle, that's roughly what the expected move was yesterday. So this straddle, the 190 put, traded at $7-ish yesterday, and that's $2 in the money, so there's a little bit of a buffer there. But it traded at about $7, so it moved about $19 today, given the 23-point move to the downside. The call was at $4 and change. So when you add, and that's just looking at how much it lost, because it's now at zero, basically. So when you add up those two values based on the net change, it gives you an expected move of about $11 into the close yesterday. Obviously, the stock has gone well outside that, even past 2 times the expected move, almost 2.5 times the expected move. So a huge, huge move.
Yeah. And you're seeing that in a handful of names for a number of different reasons. But corn finally moving to the upside a little tiny bit.
Natty gas as well. Natty gas up 90 cents. 9 cents, I should say, 90 ticks.
Amazon continuing to climb at 233.
I'm gonna scoopy out of that.
Yeah.
We did the micro natty gas futures with, did I do that yesterday? Did we do that yesterday?
You might have. I've been in it for a
Yes.
while. So I'm still in it.
Take that one off the table. I got no ding over here.
Dingless.
I have to turn on the sound or something.
But yeah, it's a choppy day.
Mm-hmm.
E-minis sold off 10 points instantly, but I think we might chop around here for the rest of the day.
Yeah.
20-point expected move in the E-minis futures for the rest of the day, and we just started.
Yeah, that's a big old nothing burger. You got anything else on your radar that's moving? I'm looking at, you got Lulu up 4. NVIDIA taking a little bit of a breather here at 180 and change, down $1.30-ish. I got a free butterfly I legged into, expiring at the end of the day today, marked at $3. It's $5 wide. Do I hold it and let it ride? 75, 80, 85. Right at the money.
I think you close it.
You think I close it? Yeah. I got $200 through the rest of the day.
Yeah, but
you think it's gonna rally?
I think it's gonna move.
And I really don't have $200 through the rest of the day. I have about $1.50. So I agree. I'm gonna take the money and run here too.
Yeah, you have $1.50 or even if you have $200 left to make, that basically means you need NVIDIA to stay within a 2-point channel from here.
Yes.
For you to have the same P&L.
Yes. All right. I'm out for $3.
There you go.
A couple nice little wins here this morning. We'll take it.
Go.
E-minis currently unchanged, but actually on the dot. NASDAQ down 61. You got the Dow up 160 and the Russell up 1. Oil selling off bid /CL 62.26. Volatility futures basically unchanged. You got the bonds down 9 ticks. I heard some dings over there. Gold basically unchanged, up $1. Silver down 19 cents. Bitcoin basically unchanged from the overnight session. $200 on the future. Spot down 375. What was that last one before we go to break?
That was the UNH call diagonal. So I got the 300, 320, long October, short September. So a longer term one. I'm buying this rally.
Buying the news.
I'm buying the news. Filled at 1373. So a little expensive, but I think if you've been waiting for something to happen that could be substantial in terms of maybe setting a floor.
Here's your something.
Warren Buffett investing in it. What else do you want? I think that's a pretty good news headline.
Famous last words.
Yeah.
Perfect.
But still defined risk, still small enough. I can roll this 20-point wide into a 15 or 10-point wide if I need to, if we get a sell-off. But I'm playing for a continuation here. If we get a 10 or 15-point continuation, this will be a $300 or $400 winner. So that's what we're doing.
Very nice. I'm going to take us a break before I have my sneeze come through, but stick around because we have Fast Market coming up. These are your trade ideas that you submitted for Tom and Tony that we're going to take advantage of and put on those positions. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work?
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Mikey, we are back, my friend. E-minis have done much of nothing they're down $1. You got the NASDAQ down 75. The Dow bucking the trend up 200 and change. The Russell down 6. It's been very much a chop fest. We got our little E-mini 0-day Iron Condor on. We'll see if that one plays out for the rest of the session. But who cares about that when we have your trade ideas? Play the music. Woo! Fast market. You ready for some trades?
I was born ready for some trades.
tastylive.com/fast market. Yes. If you want to submit these next week, you can wait, but just so you know, that's where you submit them. Little Google Doc. Push the trades through.
tastylive.com/fast market. It's been great for us. I really do think that if we were to isolate the trades we took from fast market,
they've been the best.
They've been like 80% win rates. Not to say that that's going to continue, but I sure hope it does. Sure hope it does. A lot of smart submissions.
Yes.
And with that, let's dive in.
Cool.
Shall we?
Yes.
Cool.
E-mini's down 4. That's the biggest move of the day.
Crashing. Oracle, more like Boracle. Playing a September 200-290 strangle for about $5. Yeah,
Oracle used to be boring. Now it looks like every other chart. Same with IBM. Oracle currently at 246, but it's gone from 120 to 246 in the last 3 months. IBM had a similar move, but it's actually come down to the downside. Okay, Oracle.
So September is in the earnings cycle. They're projected to have earnings around September 8th. It's not confirmed yet, but you can see there's a big IV boost when you go from the 21-day to the 28-day. Jumps from 38% to 53%. So the market is pricing it into the 28-day. I personally, this is too large anyways for my account.
Yeah.
This strangle, $2,400 in buying power. But I personally would rather just pick a slight direction and get rid of risk on one side. So instead of collecting $5, just get rid of the call spread, get rid of the call and move the 200 up to the 220, or get rid of the put and move the 290 down to the 280.
Yeah.
Same premium, but you don't have risk on that one side, and then you can get paid on a directional move with earnings still keeping that extrinsic value high.
Yeah. Right now you got the 200 put is about a 10 delta. The 290 call is about a 17 delta. So you're pretty wide out there. I mean, if you're trading naked premium, I don't hate it, but if you have to define the risk, as Mikey was kind of alluding to, it kind of makes it a cheapie. You probably want to move both those into around a 20-ish delta, but I think you wait until earnings, see what happens there, and you can play it into earnings. Earnings September 8th.
Yeah. I'm going to pass on this one. But yeah, I think if you want to play it right now, I would get rid of risk on one side because you're just not gonna see a lot of decay until after earnings.
This is what I'm gonna do. I'm gonna do a broken wing butterfly. So I guess it's neutral, sort of. It's omnidirectional, but I'm thinking going kind of at the money, the 250, 260, 280. So it's 10 by 20. It looks like it'll market about $1. I'll see if I can get filled at $1.
Okay. Playing for a similar AMAT move where
maybe a little bit. I put it at $1 and got price improved to $1.07. So that's not a good. That's not a good sign. They were like, oh yeah, no problem.
Yeah,
no problem on that trade. But yeah, no risk to the downside. But if we get a little grind higher, I have a little bit of a kicker there. So I'm gonna do broken wing butterfly on the upside. Oracle.
Love it. Cool. So we're in. Slightly different.
Yes.
Thank you, Fred.
Thank you, Fred. Google getting close to its highs, selling a neutral September 1 standard deviation strangle for over $3 in credit. Jake in Ithaca, New York. See, Google currently trading, it was up $2 in the pre-market, 203.88 right now. It's up about 96 cents. E-mini's down 10, biggest move of the day. But yes, Google has quite the chart here. This is the as big of a cup and potential handle. You like that? I'm a chart guy now.
Good. Yeah, I mean this is a stock that was not participating and it's quickly recovered, similar to Apple. very, very close to each other in terms of what the chart looks like. But yeah, 2,100 in buying power. I like the idea. The 185, 225. I'll do.
What about like an iron condor?
Yeah, I'm gonna have to do an iron condor here.
You're thinking like the 190, 180,
Yeah,
220, 230,
yeah,
266.
Yeah, I'm just gonna do a 5-point wide.
Do the 5-point wide?
Yeah, because the premium, like if I'm doing 10 points wide, I want $3 or more.
Yeah.
5 points wide, you're getting the 1/3 the width.
Yeah.
So I'm gonna do the 190, 185, 220, 225 for $1.60. I'll let that sit.
I did the 190, 180, 220, 230 at 265, so a little bit wider. Same thing though.
Cool.
Beautiful.
All right, we're in.
2 for 2.
Define the risk, just to keep that buying power low.
Yes.
For us. Us Johnnies.
Yes.
All right, we're in. Lovely. DAL from Mauricio. Looking for a 16 Delta Strangle in DAL. IVR around 20. Sell a 52.5 put and 67.5 call in the September cycle.
52.5, 67.5.
Delta Airlines. So, fun fact about Delta. Delta was already like the #1 rated airline.
Okay.
Which we don't get to see because we're a United hub.
Yes.
So we're all
Detroit is the Delta hub closest to us.
Yeah. So we are United Vision.
Peeps, yes.
But Delta just, I don't know if they didn't buy Crunchyroll, but they enabled Crunchyroll to be part of their
what is that?
entertainment
I don't
platform.
know what that is.
Your brother would know. It's a anime company. So like Crunchyroll is where you watch all the anime ever. So now you can watch endless anime on Delta flights, which I think is interesting and kind of funny. But regardless, yeah, I like DAL.
Learning new things every day. Crunchyroll?
Yeah. Ask Vinny what Crunchyroll is. He'll know.
Okay.
But yeah, DAL, 52.5, 65, 67.5 in September. So yeah, September is before the next earnings projected announcement. Looks like it's going to be maybe a little later in October. But yeah, 52.5, 67.5.
Kind of a cheapie.
Yeah, $1.40.
I moved it to the 55, 65. Okay. And I just got filled here at 229. Used about $650 in buying power.
Yeah.
I try to. I mean, it's just with limited amount of capital. 50-cent, 60-cent options are kind of tough for me to justify. So I like to get about $1 on any sort of option that I'm selling.
Yeah.
So moving it to the 20-ish Delta is also kind of where I like to trade around. I don't like the tails.
Fair enough. Yeah, I just got filled at 226 for the 55-65 strangle.
Cool. So mine moved 3 cents. It's beautiful. 229.
All right. Thank you, Mauricio.
3 for 3.
Tree.
Bolivia. Awesome. All right. We got AI trying to collect a higher premium after this dip. What about a slightly bullish strangle in September? The 17.5 put, 22.5 call. Take it off before any earnings, though. Sam in Park City, Utah. All right. AI. This thing trading at 18 and change. This went from 30 to 15. Ish. It has AI in the ticker, so those sort of risks have kind of dissipated, it seems, like the blockchain-esque. What'd you just do?
I altered it. So same exact story. I don't want risk on both sides with earnings pending. So, and if you want to lean bullish, like if you're selling the 17.5 for $1.20 and you're selling the 22.5 for 40 cents, just get rid of the 22.5, move the 17.5 to the 20, and get a bigger package for your bullish trade.
Yeah.
You're still picking up $100 of extrinsic value on this, but now you have no risk to the upside. If it does move to the upside, you're going to be happy, and you'll have an easier time taking this off prior to earnings. If you get a 2.5 point move, this 270 option goes to $1.20. If you just look at the value of the at the money options now. So yeah, I'm in with just the short put higher at the 20 strike in September for 265.
I did the 17.5 at $1.21. So a little less bullish, 40-ish delta, but I'm leaning with it. I mean, the stock can only go to zero, right?
Correct.
That's right.
That's right. That's how it works.
All right, so we're 4 for 4 so far. That's perfect.
Yeah.
And those will come on the file page shortly. Write my little comments in there.
6E, one of the higher IVR futures options underlyings, 49-day cycle, 16 delta strangle from George and Jackson. 6E, huh?
Yeah, 6E has been one of my favorite trades of the year. It's had, volatility is relatively high there. I mean, when you look at IV rank, 44 IV rank, monthly implied volatility is still relatively low, but the options are very liquid, and you could do 1 point wide spreads, which is $1,250 in total risk, $200 in buying power, and you could still do it at $300, $400-ish in total credit. So it's a really high potential return on capital, and currencies tend to kind of chop around. So it's been a good one. I have an iron condor here, so I'm already with George. I'll be interested to see if you feel the same about putting one on.
Yeah, I'm looking at the 49-day cycle. The 115 put and the 1215 call is around the 1 standard deviation, 16 delta strangle.
Mm-hmm.
I can get on board with the little iron condor though.
I did the 115, 114, 119, 120.
Cool.
Basically playing into what the range has been in the euro over the last 3-4 months. That's what I mean already.
I'll do the same put spread, but I'm going to move the call spread up a little bit. 1-2, 1-2-1.
Okay.
I'm going to route it at 320 credit, which is a $400 real credit. Just let that simmer.
Beautiful. 5 for 5. Next one, please. SPX. Okay, so you ever try selling a one-day SPX iron condor?
Yeah.
We did E-minis today. Manage at 25% of the max profit on day one. 20 delta, $25 wide. Matt in Bozeman, Montana.
Love Bozeman. Big sky or bust. Yeah, SPX. We're in it already.
We're in the E-minis, but yeah.
We're in the E-minis, yeah. But yeah, SPX right now, 0 day, 25 point wide, 20 delta.
Yeah, so if you were setting that up now, it would be roughly the 64.35, 64.10 put spread, and the 64.80, 65.05 call spread. It's currently marked at $5.50-ish cents, just to give everybody an idea of what that position looks like now.
Yep. So we are in spirit.
Yes.
With an adjacent position in the E-mini futures.
Yes. We hope yours works because then ours will work.
Yes.
So we can all win together, which is always a pleasure.
Indeed.
Beautiful. Next one, please. Slide 7. Here, what do we got? Adobe. Ew, pig. Adobe, I'm feeling bullish before their earnings on September 11th. Think a short put spread might work. Ryan in Cedar Rapids, Iowa.
Adobe, eh?
So Adobe's gone from, let's call it,
wow,
550 down to 350 in pretty swift order. 91 IV rank. You have earnings coming up on September 11th. So we've got about, a little less than a month until earnings coming up. I will entertain this. I don't love it. I mean, come on. You've seen all the things AI can do with image and video generation. I mean, this has got to be a problem for Adobe, which is reflected in the stock being cut in half over 6 months.
Yeah. I think the problem with these markets is just really wide.
Yeah.
Like the 350 even is 60 cents wide. The 340 is over $1 wide. You have to really just be careful with these bid-ask spreads here.
Mm-hmm.
But I think the 335, 330 is where I'm seeing decently narrow bid-ask spreads here. They're like 20 cents wide.
Yeah.
I think those three strikes, the 335, the 330, and the 325 are the only ones I'm seeing that are 20 cents wide.
I routed an order for a put spread. The 325, 315, I did it at a 50 cent credit. It's working right now, Markets are, as you alluded to, 30, 40, 50 cents wide, so they're not that liquid, but it's around a 25-ish delta on the downside, and would mark new lows for the last 52 weeks.
Yeah.
So
I've got a 335, 330 put spread working for $1.70. Just gonna leave it there.
Beautiful.
If it's filled, it'll fill. If it doesn't, it doesn't.
$5 wide. Perfect.
Yeah, $5 wide.
Cool.
Thank you, Ryan. What else we got here? Intel. Having trouble breaking 25. Not great time to short yet, but IV is up. Why not sell a strangle? September 2130 from Alex in Key West, Florida.
I don't know if he got this one in before this move, but it's currently marked at $1, which I don't hate, but it's a tough one. Cheapy. $200 in buying power, though.
Yeah.
I had a short put there that I took off into this move yesterday.
Yeah. Strong return on capital.
Yeah.
But yeah, this is another one where it's like I would rather just sell the put. If I'm collecting $1, I'd rather just sell the put and not have risk to one side. So I'll do that. I'll sell the 23 strike put for $1.15.
Beautiful.
A little bit more buying power, but
E-mini's down 16.
Whoa.
Crash.
Whoa. Can't have that.
Wonder if Tom's scalping is any good this morning.
Maybe.
At the event.
We'll have to hear about it. We'll see the trades.
So you doing Intel?
Intel, $1.14.
You doing the strangle?
I'm just doing the short put.
Short put. Okay.
Yeah. So the 23 strike short put in September for $1.15. I have that simmering.
Beautiful.
See if we get filled.
Beautiful. Next one, please. CRM. Ugh, another dog. CRM, 210, 270 short strangle in September with 20 days to go before earnings and 16 to go for expiration post earnings. Tasty Mechanics meets earning play. I like that. And it's a juicy one, too. Ajit in Chicago, it was nice to meet you yesterday. Ajit, thank you for always supporting the programming from here and in the YouTube chat as well. We appreciate you. CRM, this thing's another dog. This looks a lot like Adobe. I think you got to kind of play it in the same, maybe a short put spread, something like that into earnings. I don't know if I want any naked risk here with earnings coming up, and obviously it's a big position. Buying power requirement going to be pretty high on that one. I'm thinking, and just to give you an idea, the naked position here will use about $3,000 in buying power. So I'm thinking maybe I do a similar trade to what I was looking at in Adobe. We're going to around a 25-ish delta, maybe the 220, 210 in September. $10 wide. I'm going to try and route this at like 220 and see if I get filled on this.
All right.
And if not, I'll let that work for a little bit.
Cool.
Cool.
Last
one. No fill there, but working.
The last hurrah. AVGO, 340, 350 call spread to the downside, 36 days from Nick in Traverse City, Michigan.
All right. AVGO.
Look at this chart.
I know. So
yeah.
All the chip names, SMH, NVIDIA. I mean, like SMH is the ETF. It's gone straight up every single day. Only day it's not up is today.
Filled in the Google Iron Condor.
There you go. I could do a little short delta here. What are we doing? 36 days. I like that. Okay.
340, 350. I bumped it up to $2. So I'm going to see if we get a little rally into my call spread. But I'm going to leave it at $2. See if we get filled here. 340, 350 for $2.
I'm going to do the 330, 340 and see. There we go. I got filled. 330, 340 at 260. 10 points wide. I'm with you. I mean, come on. Can't go up forever.
Lovely.
Beautiful. Awesome.
And that's that.
Yeah, so we got pretty much all of them on. For me, I did the Oracle trade. So I did a broke wing butterfly in Oracle. In Google, I did the Iron Condor. In Delta, we did the Strangle, the tighter. We got closer at the money. AI, I sold the put. And then AVGO, I did the call spread. For you?
Yeah, Delta, I did the 55-65 Strangle in September. AI, I sold the 20 put in September. Google just got filled on the 5-point wide iron condor, 190, 220 shorts in September with defined risk 5 points wide. And then I'm working the 6E iron condor, 115, 120 shorts, 1 point wide ultimately. Adobe, the short put spread 335, 330 for $1.70. That's 10 cents off the fill. AVGO, 340, 350 call spread. That is working. That is now rallying towards my spread, which is.
So you might get filled. That
might get filled.
Get filled.
I'm 3 cents off. I've got it at $2. It's at 197. Intel short put at 23 in September. That's about 6 cents off the fill. So I think I will catch a fill.
Catch a fill. Beautiful. We're going to take a quick little 90-second break and come back with our market measure. We're talking about bond volatility and is bond premium worth chasing in 2025? What do you think?
I think it's going to be an interesting segment. You should stay tuned.
Oh, I don't know. Bond premium is a meh.
We'll see.
Anyway, we got that coming up. We're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Mikey, we are back, my friend. We've got E-mini S&P 500 futures currently at 64.81. They are about 19 handles off of our pin target of 6,500, down 10 ticks, 10 points here to start the session. They got as low as 64.68, so about another 10, 12 handles from here. NASDAQ down 68. You have the Dow up 85, and the Russell, the weakest of the group after being the strongest of the group over the last couple sessions, down 17 and change. You've got oil futures 62.37, down 67 cents. Volatility futures unchanged on the session, 18.55. You have the VIX at 14.81. Again, we talked about that vol contango that we have. We are currently trading on the next contract. The current contract expires next week, which is what the VIX is pegged to right now. So volatility very, very low, but a steep contango that we have there. Bonds down 8 ticks. You have gold basically unchanged. It's up $2. Silver down 17 cents. Bitcoin basically unchanged as well. Up $60 on the futures spot, down 400 and change. Some whippy movements in the market.
Whippy indeed.
Yes. It's a chop fest as we thought it would be.
Yeah, it's a chop fest in the
That's how it
sectors, but there are a lot of stocks that are moving in a pretty big way.
Yes.
AMAT, Roblox, big moves to the downside. UNH, big move to the upside. And CRM even, 7 points to the upside, ripping into the open. Adobe, 5 points to the upside. So yeah, we're seeing some big moves in single names, but E-minis and NASDAQ kind of flat.
Yes, taking some of the air out of these Ethereum treasury companies. You got SBAT in there and BMNR. Those are kind of taking it on the chin when you look at the high option volume list. On the upside, new holdings, as well as UNH, you got an open door in there. So I guess you got some of the riffraff moving higher as well. So chop fest around all markets right now.
Speaking of chop fest, the market measures today
is all about chop fest.
Yeah. So if you like the chop fest, we're going to chop it up with the chop fest segment.
Yes. Let's get into it. We'll do the market measure, and then we'll take, we got no Scott today, so we'll go to break, and then we'll take phone calls. So if you want to call us, 855-238-2789 or 855-BE-TASTY. We will open the phone lines after this beautiful market measure sponsored by the CBOE.
Love it. Is bond premium worth chasing in 2025?
The question.
It is a question.
It's never been something that we really trade all that much, which we're probably not the best ones for this segment. You know, this is that Tom thing, you know, to squeeze a little bit out of a very low volatility product here.
Yeah. And really, like, I've traded TLT bonds before, but
it's painful.
I'm almost only doing zebras in there.
Yes.
Because premium is implied volatility is really low. IB rank is really low, but let's dive in.
We've had some higher volatility in bonds this year, which has put it in the 10, 12, 13, 14 handle. We have been used to bond volatility 6, 7, 8% implied volatility, which is nothing burger. Just got filled on my Adobe put spread at 250.
There you go. Yeah, I'm still working some of those.
So my low D is, I'm sorry to everybody for the low D.
The low D.
Yes.
No ding for him.
I have no ding over here. It's really sad. It's really
ding free zone.
I didn't know my dad had no ding.
Ooh. Hey, Adobe.
There you go.
$1.70.
All right.
That was the short put spread, 335, 330. All right. It's relatively difficult to sell premium and bond products due to their low implied volatilities, regardless of IB rank. IB rank could be 100. TLT is going to still be not great implied volatility.
Yes.
At its core. The bond ETF TLT has IV lower than VIX in all respects. Yeah, makes sense.
You would yes, that would make sense because
and that's
bonds
really
are
that's
essentially
really,
risk free.
Yeah, it's basically saying TLT's implied volatility is lower than the S&P 500.
Yes.
And even though, S&P 500 implied volatility is really low right now, we're looking at 15, 14, 13% with an IV rank of 11. TLT, you're looking at 12, 13% with an IV rank of 4. So, I mean, bottom of the barrel here.
Yes.
All right. Got a study, though.
Yes.
TLT, IV and VIX, 2015 to present, 10 years of data, 16 delta strangles, 45 days set for opening positions, managed at 21 days. We're looking at premium over buying power, worst loss, win rate, average P&L, and price volatility.
Yes.
I don't really have a lean here in terms of what I would guess the results would be.
Yeah, it's too capital intensive of a position to make it worth my while. I think if you got a lot of capital or more capital than I'm dealing with here, it probably makes sense to diversify into bonds. I think you probably use the futures instead of the TLT, but I'm good with it. Let's see what the data gives us.
Let's see here. We got. For the past 10 years, TLT's IV has been trading at a discount to the VIX 65% of the time, almost one standard deviation.
Yeah. And I'm sure that 35% of the time was
big blow up.
Was recent.
Oh yeah.
Because bond volatility is in relation to the rate environment, and prior to COVID, rates were zero. So there was no.
Didn't care about any report.
There was nothing to do with bonds. Like they were just they weren't really tradable because rates weren't moving. So that discount was certainly part of the prior period of time. The 6 years prior to COVID, the 4 or 5 years that we've been dealing with here have probably been more volatile. Next slide, please.
However, this year so far, TLT's IV has been within the average range, but it didn't fluctuate as much when you compared to 10 years ago. Implied volatility and realized volatility has been higher in TLT because now rate cuts or the lack thereof is on the table, and we talk about it all the time, and the market tunes in to get the lowdown. But we're still dealing with a low implied volatility product.
Yeah.
And I don't remember the last time I sold premium in TLT, to your point. I think, even with IV low and even if IV increases, what does that increase actually mean from a raw implied volatility standpoint? And as you can see, the high, isn't that high.
No.
Look at the IV overall. Mean is 16%, and 16% is nothing. When it comes to selling premium and taking risk, taking intrinsic value risk, selling premium at 16% is really low return on capital.
Mm-hmm.
Cool. What else we got here? This usually means there's an opportunity for premium sellers when implied volatility is spiking. So how is the performance if we traded 16 delta TLT strangles in 2025, which has been an elevated environment?
Yes.
Let's take a look. This year, average premium collected per buying power of a 16 delta strangle is 13% higher than the 10-year average. Also, the buying power requirement is lower now because of the cheaper underlying price and the change in implied volatility.
Yes.
So if you look at a chart of TLT, if you go back 20 years, back when I was still in high school,
TLT was much higher.
Yeah.
Rates were zero. So there's an inverse relationship. TLT goes down when rates go up. So rates up, bonds go down. And so we've had some bond volatility this year, but prior to this year, rates were basically at zero, which meant that TLT kind of just chopped around.
Yeah.
There's probably not a lot of premium for strangles there, which is why this, has a much higher premium. The relative lower bond prices is also going to make capital efficiency a lot higher.
Yeah. 2010 to 2020, you had a price band of, let's call it 100 to 140. Then it spiked all the way up to 180 between 2019 and 2021. And ever since then,
that was when we went to zero, when they cut right to zero.
Yeah. And now we have rate hikes on the table. There's a 90% chance we get a 25 basis point cut. Sorry.
Which would be bullish bonds.
Yes.
Theoretically.
For the September cycle. So maybe we're at the end of the road here in terms of the low price that we're seeing of 86.69 right now. But still, at the end of the day, you're getting a little bit more premium in terms of the premium relative to buying power. And like this study says, we're dealing with an $86 price, which means your buying power requirement is going to be lower than if we were talking about a $140 product. So yeah, interesting to say the least.
Yes, and the main takeaway here is just the average premium to buying power. You get another 0.5% here, which is good, but small.
Next slide. 2025 trading landscape has been notably more supportive of the TLT bond premium selling. Despite only marginal gains in premium relative to buying power, overall performance has surged, characterized by a significant increase in the average returns, improved win consistency, and reduced exposure to large individual losses. So when you look at all of these metrics, especially average P&L, you're seeing a much larger number, higher win rate, less of a larger loss, conditional, CAGR 13%, but premium or buying power is slightly higher. But yeah, I think still when it comes down to TLT, if you are hell-bent on selling premium here, it's been a better environment in 2025. But for us, I think we're looking to get that delta in other ways, like diagonal spread, zebras, because, even though implied volatility is higher and the price is lower, I'd rather take a debit delta position with some gamma, play for an upside move from 86 to 100, personally. Next slide. It is noteworthy that over the last 10 years since 2015, the daily bond price volatility, as measured by standard deviation, averaged 21%, where in 2025 alone, it's only been 2%, which is actually very interesting. But when you look at 2025, I think the best way to see this is in a monthly 20-year chart. The channel that we've been in 2025 is way more narrow relative to any other year that I'm looking at on this 20-year chart. So makes total sense. Final slide here.
Yes.
Takeaways. With bond products exhibiting historically high implied volatility, 2025 presents an excellent opportunity to capture attractive premiums relative to previous years. So far, the win rate premium per basis point have increased by 13%. Average profit and loss has tripled, and exposure to large individual losses has decreased sixfold compared to the 10-year historical average. And although price volatility in 2025 has been lower than the 10-year historical average, performance this year remains on par with long-term trends. Beautiful.
Very nice, Mikey. Phone calls, 855-238-2789 or 855-BE-TASTY. The phone lines will be open very shortly. We're going to go to break very quickly and come back with your phone calls. No big boy Scotty S in the studio with us today, so give us a call. Hang out with us for the next 30 or so minutes. We're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
A little hot sauce challenge.
A little bit.
What is the challenge? Just to eat this hot sauce,
350,000 Scoville units, which is like I looked up Frank's. So have you ever had Frank's?
Yeah, sure.
It's 500.
And what's this?
350,000.
James come up and says, "Did you have anybody take you up on your offer?" I said, "No." He goes, "Oh, I'll do it." I go, "You sure?" He goes, "Yeah, I'll do it." But we thought it would be cute if we all showed some solidarity and we all did it. So we just gave him a cup of it, and then we all had cups of barbecue sauce. Then my peeps across the pond over there started taking spoonfuls of the barbecue sauce, going, "It's not that hot."
I don't know. It's not that hot.
It's not that bad.
So are we just spooning it now? Like
Yeah. Just take a good
Just spoon it. It's not that hot.
So then his testosterone gets going.
I'm not letting you one-up me, Pete.
And he starts taking spoonfuls of it.
All right, tough guy, let's go. I'm finishing my cup.
Then Pete, the loving human being, started scooping it out like it was the bottom of an ice cream container.
And
then it hurt.
Yeah, it started to catch up with me a little bit.
I don't know why. I have no remorse. Like, I really don't.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Damn. Wow.
Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Mikey, we are back, my friend, and we have no Scott with us today. So if you want to give us a phone call, 855-238-2789 or 855-BE-TASTY. The phone lines are open. You can talk with Mike and I. With nothing's off limits. You want to talk about the platform. You want to talk about trades. Got all that. We'll also be checking in on the live chat on YouTube. If you want to chat your questions in, if you are watching on YouTube, we'll take those as well. But first, E-mini S&P 500 futures down 1264.78. We've been shopping around here. It's about 10 points off the lows of the session. 64.68 was the low. You've got the NASDAQ down 80. It's been chopping around here as well. You've got the Dow up 50 and the Russell down 19. The Russell has been by far the weakest of the group, down just under 1% here. Oil has been chopping around 62.50, 62.54 right now, down 50 cents. Volatility futures at 18.45, down 10 ticks. Bonds near the lows of the session, 114.10, down about 10 ticks. Gold up $3. Silver down 16 cents. Bitcoin and Ethereum both kind of chopping around here. Ethereum, the bigger mover of the group, down a little over almost 2% here. You've got Bitcoin down 0.5% from the overnight session. So definitely chop fest back and forth. Some of the bigger movers from earnings, AMAT down $23 and change. UNH, as we talked about this morning, it's been pinned around the 300 mark. NVIDIA taking a little bit of a breather. It's at 179. Took some trades off in that this morning, but it's been very choppy. Anything sticking out to you, sir?
Nothing in particular. I had an AMAT call diagonal spread that's taking heat right now, but the long option I have at 190 is out in October. So hopefully we can get a reversal in the next month or so. We'll be okay there. But yeah, underneath the hood, there's still some things moving. Roblox down $10.
Yes.
Amazon actually selling off from the highs, but
had a huge move yesterday.
Yeah. UNH finally getting the rally that people were looking for.
Yes.
We'll see if that continues. But yeah, underneath the surface, we had lots of new trades from Fast Market. I've got 8 new trades on from this morning.
Me too. We're a good one.
An hour in.
Did you get all those posted to the follow page, sir?
I did.
All right, good job out of you.
Only one that I haven't been filled on. Actually, there's 2: the 6E Iron Condor and the Intel short put. But
there you go.
I'm gonna let those simmer
Very nice. Phone lines are open, 855-238-2789 or 855-BE-TASTY. We have many lines open. Give us a call. Come hang out with us for the next 30 minutes or so. But we do have one of my favorite callers on the line. Can we go to that? Mr. Giuseppe, good morning, sir. And we'll take also questions from the chat.
Indeed.
As the team sets up, I'm sorry I went too quick to the phone calls. I just had to talk to Giuseppe, so I'm waiting on Giuseppe. Giuseppe, good morning, sir.
Stand by.
Thank you, John. Thank you. It's okay. We'll stand by.
While we wait, I got a chat question. How big of a difference does it make when a trader reaches portfolio margin?
Hello.
There he is. Here, we'll get to that in a second. Giuseppe, good morning, sir. How are you?
Good, buddy. Man, it's a lot nicer seeing you and Mike than Tom and Tony. God, it's a breath of fresh air.
Hey, we love to hear it.
That's my man right there. Always supporting us.
Listen, Nick, got a question, Mike. Yesterday in y'all's trading options, y'all was talking about the futures and doing calendar spreads. Specifically, you was talking about corn and I think it was corn and gold. And the young lady that was with y'all said, well, she'd like to do the E-minis with it because if you don't have that big pop on your buying power, with you go with a straight futures.
Yeah.
So I put the trade in yesterday, and I came up with a strategy that I was wondering if it would work and how it works on the platform. So I bought a calendar spread just like y'all talked about, and then I came right back and I bought the mini on the same futures.
So you're long the E-minis and then you have the... Yep, go on.
How do you pair that to the options, because it's a different symbol, it's a different security? In the old platform in Tasty and Thinkorswim, you was able to select the two securities, and then it kind of blended them together. Is that a possibility on this platform?
No, so you have to keep in mind the futures trade on a specific duration. So your options, if you have two different line items, like I have a corn position, I'll show you on the screen here. I have two different futures expirations that I'm trading with the corn options. I mean, I'm trading corn in both these positions, but they're different futures. So when you're trading the E-minis, going back to the trade page, all the expirations that you're looking at that are highlighted in the blue here all trade to the same futures, which is the front month futures, the U contract here. So all these trade to U. If you have a calendar spread and you are long the Z contract, the Z contract trades to a different future. So the Z contract's trading at 65.30, which is just a reflection of the dividend that will be paid out in the next in the coming months here. So this is a different future and the cost of carry and all that.
So let's use a strangle. What about a strangle? Strangle, no calendar, just a pure strangle. The same U series. How do you merge the option with the mini?
It's already there. It'll all be in one line item.
No, because the options is on the big one, is on the GC. The futures is on the mini.
Oh, if you're doing the mini futures? Yeah, the mini futures are separate.
Yeah. How do you combine them?
You can't. I mean, they're separate products, so you can't put them under one heading. But if you're long an E-mini future and then you put on a strangle, it'll all be together as long as you're trading the same contract expiration. Like if you are trading the same contract, the micro E-minis it's technically a separate product, so you can't combine them. But intuitively speaking, they are. It's the same thing. The micro E-minis are just a smaller product relative to the E-minis.
You just have to do the profit and loss math when you just add or subtract. If you get a loss on the options and a gain on the futures, you just net them out and figure out what your profit or loss is.
Correct.
Yeah.
Correct.
You can do custom groupings within the same ticker.
Yeah.
So if you're long, if you have a bunch of different options positions in the same ticker, and at the top of the positions tab, if you open the drop down menu and you go to custom, if you select the line items associated with that ticker, if you just left click on them and then you right click on the selection, you can see group by positions and you can group that as a custom name. So that may help if you have a bunch of different positions in the same ticker. But different tickers, you can't merge together as a group.
Yes.
Okay, so in other words, if it's, you can't, right, I got you.
Yep.
So if I had a bunch of Apple positions and options and stocks, I can group them together as Apple.
Yep.
But I can't group Apple with NVIDIA.
Correct.
No. It just would get, you'd lose track, like a lot of the customization stuff, I get it, and in the one-off kind of situations like this, you kind of want to put them together, but you run into issues of like, when you got a whole page full of positions, stuff gets kind of missed. We don't want you to miss something like that.
Yeah.
Gotcha. All right, guys. Well, I have to say those party shirts are pretty disgusting looking.
This is a party right here. Why, you want an extra button down?
No, Tom has a better dressing attire with the white shirt and the hat, and the gray hat and the long hair. Y'all taking after Tony too much.
Ooh, hey, we're trying to wake everyone up with these shirts.
Yeah.
It's a sight for sore eyes,
Hey, go Saints, go Bears.
Hey, there you go.
Down, baby.
Go Bears, baby. Thanks, Giuseppe. We'll get to some YouTube questions in a second here. We got another caller coming in. We got Kim in Washington. Kim in Washington, good morning.
Good morning. How are you guys?
We're hanging in there on a beautiful Friday here in Chicago.
Awesome. Mike, sorry I missed you when you were out in Washington State.
It's okay.
It's all good. We had a beautiful time.
Yes.
Perfect weather. Sunny and 70 every
I think
day.
our over-under on oysters was probably 70.
Yeah.
Probably between the 2 days. Now 48 hours, too, Kim.
It's an aggressive amount.
Yes.
I love Seattle.
It's great. It's great.
I'm actually on the eastern side of the state, so I wanted to give you a tip, and then I have a question for Mike. Sure. My tip is Tony and Tom can't pronounce Spokane.
Spokane.
So I wanted to help you out. Just think like money. Think like dough.
Okay.
Dough. Spokane.
Spokane.
So now,
Spokane.
So now you guys have been to Washington State. You guys can pronounce Spokane.
Spokane.
How do they say it?
Yeah.
Spokane. Or something. I don't know.
That's a Tom thing, though. Whatever he says goes. Yeah. Okay? So.
Well.
But we will say it right.
Okay, here's my question.
Sure.
So, Mike, you mentioned one of your favorite strategies is selling puts, and that's because you can roll them out if they're not correct. And when you are doing it on a show, sometimes you talk about your cost basis or your break even. And I can't figure out where to figure that out on a stock.
Okay. So first and foremost, so have you been rolling a position, or is it a new trade? Okay.
I might sell a put. Like, let's see what I did one today, and it was in Hood.
Okay. Which
so I rolled my put.
Mm-hmm.
And then I'm trying to figure out, like how you always say, well, my break even now is.
Yeah.
And then you say it, but I can't figure out on the platform where to figure that out.
So first things first, if you have rolled a position, you're going to want to make sure that you're grouping your positions by order chains. So at the top of the positions tab, you'll see a drop-down menu all the way to the right next to the P&L button. It'll say group by, and there's a drop-down menu. It should say order chains if you have rolled positions, because that will basically take all of your credits, compile them, and it will adjust your cost for that trade by that number. So if you have a hood position, Do you see that on your order chains if you're grouping by order chains?
I can see the drop-down menu where it says overview, positions, activity, watch list, and then I go down to the order chain.
Okay. Yeah. So what is your total, or what is your average trade price for hood?
On that chain.
I don't know where to figure that out.
So it should.
So I can kind of give you an idea of what this looks like. So this isn't exactly a naked put, but on the order chains on the platform, it pulls all of your orders together, and it basically gives you an aggregate price for them. So if you have a naked put, let's say you're in hood and you sold the 100 strike put, and you've been rolling this put forward, you'll have an average price on here that'll give you your total premium relative to the number of contracts. So if you've collected $10 in premium and you have 2 contracts, it'll tell you that your average price is $5 in credit. And so with positions like, when you have 1 contract, it's pretty simple. In terms of it adding all of your rolls together, the way to figure out a break even is to take all those credits and debits too, because those will be factored into the order chains as well. And that value relative to your strike is where you would break even on the trade. So if you've been short the 100 strike put in hood, and you've been rolling that position, and you have $5 in total credit, if the stock were to go to 95, all else being equal, you'd be a scratch on that trade, right? Because you've sold the put at 100, right. You've collected $5 in premium, your break-even point is 95. And so with rolling positions, you're continuously collecting credit, it'll further move your break even further out of the money, right? So your next roll that you do for $2, you'll have $7, and so on and so forth.
Perfect.
Yes. So on so on the order chains, it's the middle column, the one it says AVG space TRD space PR. That's the average trade price. So that's your total credit received through all the rolls that you've made. So if you have a number there,
thank you guys.
Yes, if you have a number there, you just subtract that number from your short put strike, and that is your break even at expiration.
Yeah. And if you have a strangle, you do it above the call strike.
Yeah.
So it's the same sort of process with any sort of naked premium position. Those rolls, the credits and debits, if there's debits baked in there too, they all go into one value, and that's what you see in the order chains.
Perfect. That was a great tip today. Thank you guys.
Thank you.
Thank you, Kim.
All right, take care. Bye.
See ya.
Bye-bye. E-mini S&P 500 futures near the low of the session. We are down 17 right now. What are you thinking for this market? You think we bounce back, or does it keep going here?
We better, because I need to continue my limited 0-day iron.
We've gotten bailed out twice.
Yeah.
So we owe the market gods a little bit of pain today. We're right at the money here on our E-mini trade, 64.75. I might even just leg out of the call spread here. I am going to do that.
Yeah, call spread's trading for basically nothing.
Okay, so we're going to leg out of the call spread. We're right at the money with the put spread. But yeah, we had the butterfly that pinned our shorts, and then we had the call spread that we were holding into the close. I think we needed a $1 downtick, and we got it in the last 30 seconds the other day when we hosted the live session.
Yeah. But with this market, with vol solo, I like that my risk right now is on the downside. I would be a lot more worried if it was on the upside.
Okay.
Maybe we get the 2 o'clock buy button and we get bailed out.
E-mini's down 17. NASDAQ at the lows of the session here, just off of them. Down 120, the Dow up 38, the Russell down 15. As you mentioned, volatility hasn't really done anything today. I think it's projecting a little bit more chop through the rest of the session here. Ethereum down 2.5%, $113 to the downside here. So some big movements there. Any questions we can throw out from the YouTube chat here, Mikey?
Yeah, so let's get back to the portfolio margin one. So
yes.
How much of a difference does it make when a trader reaches portfolio margin? I'm looking to trade full-time in the future. Will this 160K minimum change later? Not sure about the minimum. I would say it would likely not change that much. I I would be surprised if it went up or down any sizable amount. But portfolio margin just gives you the ability to put up less capital for the same amount of risk.
Yes.
So you still need to be careful with the leverage that you get, but it does afford you the ability to trade other things and specifically hedge in different ways, because you have capital available to where if, let's say, you just have a strangle on in the E-minis, you're using a lot less capital to have that position relative to a regular margin account. And if there's a big move, you can then use that capital to buy wings and do all these things to hedge the risk in it. So, and of course, trade other things. But I think the number one thing is you still got to trade small, and it's just going to be a different calculation because you don't have to put up nearly as much to hold the same amount of risk.
Portfolio margin acts a lot like span margin in that, with Reg T margin, everything is spreads are all margin to the max loss, regardless of the probability of that happening. So you do a 10-point wide put spread, it'll use $10 in capital to hold that position minus whatever the credit is. The total risk is held. And then with naked options, you use about 25%-ish of the max risk on that position. When you're in a portfolio margin account, it takes into account all of your positions, your delta exposure, offsetting positions if you are, long SPY and with an option trade and short, E-mini futures, you're going to have some the high correlation and betas there are basically the same. So portfolio margin allows you a lot more leverage for the same amount of risk. You just have to keep that in mind. Of course, that with more leverage comes, the more of a need to stay small and keep capital, on the sidelines available for when things happen.
Yep. If you've sold a strangle at 45 days and the underlying is moving against you, at what point do you manage and how exactly do you manage? So typically we wait until our strike is tested. So if the stock actually hits one of our strikes, we will then look to adjust. And usually that means rolling the other side. So the other side that's losing value and losing its hedgeability against the tested side, we move that closer to the tested side. That would be like the contrarian adjustment where you're still leaning directionally opposite from the move. If you're trying to neutralize delta, you could buy the whole thing back and shift it and recenter it. There's really no right or wrong answer. It's about what kind of delta do you want to result in and what kind of position do you want to have after the adjustment.
Yeah.
Spread
width is another thing you got to mention too.
Yeah. But yeah, I have a strangle in IBIT. I've been saying all year I don't want short delta in IBIT. So there's been a couple of times where I've just moved the whole thing up. So I moved it from if I was tested on the call side, I completely shifted the delta. So I was tested on the put side. And that's worked out well with IBIT kind of trickling up and to the right over the course of the year. So it just really depends on how long you want to be in the trade. The longer duration you're in the trade, the more flexibility you have to make adjustments because you're going to be in it for a long period of time. So I think it's going to come down to what risk you want to end up with.
We got one more caller on the line. We got Lisa in Mississippi. Lisa in Mississippi, good morning.
Good morning, guys. Thank y'all for all you do. We appreciate you
Thank
a whole
you.
lot.
Thanks for tuning in.
Thank you for giving us a call and saving us.
Yeah, right. I'm a bit of a newbie and just kind of selling naked puts. And life really doesn't allow me to just watch the market all day. So my question is, would you guys recommend or not recommend putting in profit stops and stop losses? And why or why not?
Mm-hmm.
And then my second question is, Mike, yesterday you were talking about a trade that you were in and you were taking off risk, and I just hadn't had a chance to go back and listen to that and figure out what trade that was. I was wondering if you could go over that trade.
Yeah, so first question with the short puts, I think you should definitely consider throwing in a profit target for any short premium trade because with a short put or a short call or strangle or whatever, you have a limited amount of money that you can make, which is equivalent to the premium received, and you have the risk that doesn't change. So with a short put, if you're selling a short put and you've got 50% or 60% or 70% of the max value that you can get, going forward, you can only make a little bit more, but you can lose everything on the table and you can lose the intrinsic value risk that you're taking. So short premium, I think it makes a lot of sense to have a profit target of 50% or 60 or 70%, depending on what you're getting at. But 50% is kind of our sweet spot for short puts. For stop loss, I'm in the camp of if I'm selling a put, I'm assuming the risk of 100 shares of stock. And if I'm selling a put on stocks that I like and I want to own, I'm not putting profit or stop losses in a short put.
Or if you're small enough. With
yeah. I'd rather just roll it perpetually or eventually take the shares and then hold the shares if I believe the stock is going to rally eventually. So that's me for short puts.
You could always buy wings far out of the money as well as a way to cap your risk and reduce your buying power and just, take care of the worst case scenario type situation. But I agree with everything Mikey said there.
Yep. And then the second question I'm assuming it was the broke wing butterfly. So if you write down broke wing butterfly and you research that on tastylive.com, we have plenty of resources that will help you learn that over time. But it's basically a way to play for a directional move in an underlying in a defined risk way, but you're routing a trade for a credit that would normally be bought for a debit.
Yeah.
So broke wing butterfly in gold is what I was talking about, where
I can actually show this
with
the Oracle trade that we did this morning. So I put on this Oracle broken wing butterfly on the upside. So I'm long the 250. I'm short 2 of the 260s, long 1 of the 280s. So it's a 10 by 20 broken wing butterfly, which means that my risk, and we can see this on the risk profile here. If we go to the analysis mode, we go to the curve, we go to this at expiration, you'll see my risk is right at 270. So I have this 10-point wide. It gives me a break even that's up at 270. Then that's where I see risk is all the way up to 280. It caps out on the upside. So I put this trade on for $1.07 credit. So that's what I've got here on my order chains, $1.07. I'm down about 10, 20 cents on it right now. The risk, buying in the risk or taking off the risk, as Mikey would say, is to buy in the risk here on the position would be buying the 270 and selling out of the 280 for a debit that is equal to or less than the credit that I got on entry. So if I were to buy this call spread, which would put me into the 250, 260, 270 equal with butterfly, I'd be 10 by 10. If I could buy that call spread for lesser than the credit we did on entry, we would have that butterfly on for free.
Yep. And that's a lot of moving parts with that, but again, it's called a broke wing butterfly, and we have plenty of written content, video content on Tasty Live if you want to check it out.
Okay, thank you very much.
You're welcome.
Thank you, Lisa. Appreciate your time this morning.
Have a good weekend.
You too.
All right, bye-bye.
Bye-bye. E-minis down 17 here. You got the NASDAQ down 120, the Dow up 24, and the Russell up 14. We've been chopping around this spot. Bitcoin moving a little bit. Bitcoin's down about 1,000 on the spot. Ethereum continuing to move. It's down about 3% here, so big move there. But anything else popping out to you before we hand it over to...
Yes, one last one from Jackie. Do you guys have a gentleman's agreement to not fade each other's trades? No, absolutely not.
Absolutely not.
I've faded Nick. Nick will fade me, and that will go on into perpetuity.
Yes. Hey, you need an opposite side to have a market, okay? Yeah. Everybody can't be on the same side.
And it's actually a kind of not a win-win, but it's still a nice result because if he is bearish and I'm bullish on one thing, one of us is going to be a winner.
To some respect, but... with trading and options specifically, it's not that zero sum. It doesn't mean you're long.
We can both be winners at some point.
Yeah.
That's happened too.
That's if you're trading short volatility and you've got some positive theta decay, a call diagonal versus a, short call spread, those can both be profitable.
Yeah.
So, very good. All right, well, Mikey, that was a good little session here. We'll see if we get our bailout towards the end of the day today. We'll be back for the last call. We're going to take a quick little 90-second break now. I don't think we have Liz and Jenny. Do we have Liz and Jenny? Do we have Liz and Jenny, or are they at the event?
Yes, we do.
We do have Liz and Jenny, thank God. We have Liz and Jenny coming up next, so stick around for them. You're listening to Tasty Live. E-Mini's down 20, low of the day.
Rally.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
There's a beast in the financial world, and it's not the bull. If that's you, on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews, and the people are not at work by 11 yet. The show is just wrapping up. So for everybody who came to the live event in Chicago with Tom and Tony, they're not at work yet. It's only 10:03.
Right, they're not at work yet, and Nikki and Mike were holding down the fort. It was we had a great day yesterday, seeing so many viewers, and I actually think John's got some pictures from yesterday's event.
They do. I can't wait to see it. It was wonderful to meet so many people. I wish we were at the event, but the show must go on here.
Right. Okay. So fun in the office.
This is super cool. He's going to scroll through. There's Vanetta. She's doing all of it.
Oh, there's Gad and Dr. Data talking to some of our viewers.
Yes.
Is that Jack Tucker?
No, that's not Jack Tucker. That he lives in Chicago. That's not Jack Tucker though. Jack Tucker wasn't there yesterday, Jenny.
No, I didn't meet him, but he kind of looks similar to the pictures of Jack Tucker we saw.
You'll see Jack later in the day. There's
Alvaro. Alvaro came all the way from Uruguay.
Yeah. These are great pictures. It was so fun to meet and talk to everybody. It was so fun because Glenn got requested. Somebody's like, "Where's Glenn?" I was like, "I'll go get him." There's a Jeet.
Oh, there in the black, we've got a Jeet, and I think Scott next to him, and there's Frank the Great on the far left.
It is so fun. There's Tony looking very serious.
With Jack Tucker lookalike.
No, he's from Chicago. He lives just 2 blocks away from the studio. Yeah. Dr. Data, love it.
Oh, it's always nice to. Oh, there's Joe Mama.
Joe Mama.
Joe Mama sporting the polka dot top.
Oh, there's Garrett. This is fantastic.
Yeah, and our viewer there, he's from Miami. It was kind of crazy, the people that traveled so far to come up for the show.
They really did.
Yeah.
And you know what? It was a good turnout in the studio, and everybody got to come in and see the studio. But I bet they had a great turnout today, is my guess.
Oh yeah. I'm sorry that we had to miss the Chicago show, but and this lovely couple. They were newer to trading. They found Tasty Trade maybe 8 months ago.
Yeah, right.
There were quite a few newer people.
There were. It was fun.
Yeah. So it was a lot of fun. So thanks, John, for sharing all these pictures with everyone. And this was just in our office, and Tom had boxes and boxes and boxes of pizza on the table. Nobody ate any pizza, so he was just handing out boxes of pizza as we were walking out.
It's so funny because I wasn't going to take one, and then I was like, wait, I've got an 18-year-old at home. I got home, and JD had a bunch of people in the pool. I was like, I've got pizza. And they're like, this is fantastic.
I knew you could. I knew if someone would eat a box of pizza at your house. At my house, not a chance. Logan's out of town. There's no way Lily and I are gonna just eat up some cold pizza. But I knew at your house that would go.
I mean, I think it went in 30 seconds. It was great.
Yeah. You always
taken more when I didn't know that all those kids were going to be in the pool when I got there, because we're on the college goodbye circuit right now, Jenny.
I know this is your last weekend. This last weekend with the kids home. A lot of the kids are already gone. So
they were some are leaving today, some are leaving tomorrow, some are leaving Sunday. We are leaving Monday. So it's all we're for sure doing the goodbye circuit, but it's a good thing. Okay, so Jenny, do you want to jump into the markets? SPOOs are down 20, NASDAQ is down. Ironically, Dow is up.
Okay, let's jump into the platform so everyone can see what Liz is talking about. I don't know if you know what we're going to do today, but I've got a handful of ideas. Today's going to be, what's that song? What's this song where they say ratchet? Isn't it like, do you know what? So when we made that trade and called it the ratchet, I know. And then Vanetta's like, there's a song with the word ratchet in it, and then it was like at some point a bad term, but it was too late. We already named a trade the ratchet.
Well, no, the ratchet makes perfect sense for this trade. I don't care what mines are in the gutter everywhere else, but the ratchet makes perfect sense because of the whole stair-stepping of I called it that because the zebra, and when you're doing if you're on a roller coaster and you hear the click, 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 you're ratcheting up and you can only fall back to the last click. That's what we do with the zebra.
That's what we do with the zebra, and we have two zebras to ratchet today.
Ooh, one's Intel. I know that. I don't know what the second one is.
Okay, so we've got 2 zebras to ratchet, and they're a little bit different, and so we're going to talk about that. So that's on deck for today. We're taking live tweets today, and the cool thing about Twitter is that people from the live event have been posting pictures. So we get to see some pictures from the live event. We'll get to that, but also if you have any questions, comments, anything, advice for Liz as she's getting ready to drop JD off at college,
And I want to give a big, huge shout out for those of you who do not know this. If you're not on YouTube, get on YouTube and go to Tasty Live because it's my friend Josh who's running the show today. My friend and you, Jenny.
Yeah, Josh is amazing, and he's running YouTube since Frank the Great is at the event today.
Yes, he is, and so you'll see Frank the Great on Twitter.
Yeah, you'll see. You know what? I'll pop into Twitter just to show people these familiar faces or these familiar names so they can put a face with a name. So here's Mikey with Blue Wackadoo and Jack Tucker.
Yep, there we go.
And Mikey with Beth, our amazing producer, manager, and here's Brent.
I love that Mike did this. This is fantastic.
Yes, and Frank, here's Frank the Great, who usually mans our YouTube, but today Josh is taking over because Frank's at the event.
This is wonderful. I love it. It's so fun to see everybody. I cannot believe the Jack Tucker Blue Wackadoo are in the same room and we're not there.
I know. So the man, the myth, the legend, here they are. And they both trade a little bit, a little differently. But it's
very similar, but very similarly.
Yeah. What was cool about meeting so many viewers? So they all start off watching Tasty Trade, and then they all come up with their own style, right? Everyone I talked to yesterday had a different. I would ask them, "What do you like to trade, or what do you mostly do every day, or every week, or what's your style of trading?" And every person had a different answer.
But you should. This isn't a one size fits all box.
Right. So that I thought was really cool. I like that. I like that when people find their own niche of this is what I like to do.
Yeah, for sure. I did find a lot of people that are doing the 0 DTE SPX though.
I did. We did, and a lot of the newer traders, because there's been a lot of hype and focus on the 0 DTE. So a lot of our newer Tasty traders were doing the 0 DTE, but that's what a lot of our studies have been on because that's new. That's something new. So
yeah. No, I know a lot of people have. And the other thing that I got, which I loved, and I like the feedback from the people because this is what the feedback I got was they like that we show our work, meaning that we're not just going to go through a study and read it to you. We go back and forth and being like, this is what we mean by this. And sometimes we'll look at it and be like, ooh, that doesn't look good, but this is on paper. So the resume of a study might look good, but the actual facts or numbers behind it might not.
Right. So I think that's great. And I like that people, and I get it. Like a lot of people you can't just hear it. You can't just hear it and say like, oh yeah, we rolled this and sold that and rolled this down and rolled this up. And it's better to see it in action. So, it's always nice to meet people on the road and hear from them because it helps us make tweaks to the show.
For sure. It's great. Oh, wait, go back into Twitter real quick if you don't mind, Jenny.
Okay.
Because look at this, and don't touch anything. But Ajit, it was great to meet you. He's right underneath. He's still working and sending us stuff while he's at the At Work by 11.
I know. As I saw this, I thought he's at the event and he's still sending. 33 minutes ago, he sent this.
It's so fun to meet people like this, isn't it? Because we feel like we know people when we know them from Twitter.
I know. When we saw Ajit, we were like, Ajit, finally.
Yeah. I probably would have tackled Jack Tucker and Blue Wackadoo.
I know. Too bad they couldn't come yesterday.
Like in a good way, not in a bad way, Jack Tucker and Blue Wackadoo. Not that it was like, well,
So if anyone wants to post anything on Twitter, all you have to do is add this hashtag LIZJNY. And if Josh is manning YouTube today, I don't know if Josh knows this. Josh, if you see anything amazing come through on YouTube, share it with everyone and put this hashtag LIZJNY.
Yeah, for sure. I don't know if Josh, I'm trying to look for him now. He hasn't said anything in a while.
Okay, so, maybe he's on, maybe he's not. I'm not sure.
Maybe he went for coffee. We're not sure. So it's fine.
Okay, so back into the platform. Okay, talking about ratcheting a zebra, and you mentioned Intel. So Intel, we had short puts, and we changed our short puts to a zebra. And when we did this, Intel was trading 21.
Yes, 21. It was. True story.
Now it's trading 24.50. And our zebra's making money. Instead of taking this off, if we want to keep the dream alive of keeping a long position in Intel, we can ratchet this zebra and take risk off the table.
I love it. Let's try it.
I love your enthusiasm, Liz. Love the enthusiasm. So it's very, it's very simple. You close the original zebra and you put a new one on with the original mechanics of sell 150 delta, buy 270 delta. Usually you can take in a credit about your profits.
Usually, right? Yes, you should be able to.
No, I mean,
you'll take in a credit about your profits. That's correct.
I think so. And let's look at this. We paid $2.74. So we paid $274 for the zebra. So let's see what we take in by ratcheting it. Because if we can take in close to that, then we have this long stock position on, and essentially no risk in the trade because we're covering what we paid.
Dreams come true, Jenny Andrews. Dreams come true. So I was talking to Ajit about this, about how this is his favorite stock replacement strategy. I was like, mine too.
So, all right, let's see if we can do this. What I will do is highlight this and I'll hit close position. So I'm going to close the original zebra.
Yep.
Then sell a 50 delta.
Now, look at the intrinsic value. We got to be very careful with this because you're selling for 150. Yeah, 82 cents is perfect. That's great. Perfect.
So all I'm doing is just, trying to use mechanics of sell the 50 delta, buy 270 deltas. If we do this, we take in 220, which is good. I mean, our profits in this are about like 260 or something, but usually we take in, close to our profits.
And take a look at this. And not that it matters either way. We are paying a little bit of extra. I mean, this is getting lost in the weeds, but that's why I said keep an eye on this because you've got, you're paying almost 90 cents in extrinsic value and you're only taking in 150. So we are paying a little bit of extrinsic value here. So keep that in mind as well.
I can't move this down because then we're not even selling as much. I could move this down, then we're not taking in as much credit.
No.
So when Liz talks about, we always try to have the extrinsic value of the one we're buying, and you look at the out of the monies to see the extrinsic value, be half of the extrinsic value we're selling. So if this were 80 cents and this were 160, that would be perfect. 80 cents twice is 160. That would be perfect. It's off a little, penny, like a couple dime here, dime there is not quite covering the extrinsic value, not quite. But I'm willing to give up that 12 cents in order to collect 219 and have continue the zebra and have covered the debit that we paid to put it on.
For sure. Yeah, I think this is great. And so let's talk about what we did. We're closing a trade, reestablishing a trade. It is a stock replacement vehicle where we're washing extrinsic value, meaning we're going to make money 1 for 1 if it goes up. We don't lose any money if it stays right here if you wash extrinsic value. I wanted to make that very clear because, like I said, with customers that I was talking to yesterday, we were talking about how the zebra is a great stock replacement strategy. And some people were saying, oh, I just use a 70 delta, like buy a 70 delta. Great, that's wonderful. But you're going to give up, right, in this situation, almost 89 cents in extrinsic value, meaning that if it stays right here, it has to go up at least 80 cents by expiration for you not to lose money. That's what the zebra does, is if it stays here, you're fine. It's the same thing as the stock.
I want to show something. I want to show a reason that I've never really shown before, but I think this might help people understand like why we do the ratchet. If I go to the analysis here, and this is the trade we have on now, you can see 1 for 1. It's basically going to go up 1 for 1 with the stock. Every dollar the stock goes up, we make $100. That's the profit potential here. But our risk over here, P&L, what does it say?
274, what we paid for it.
274. Yeah, our risk is 274.
This is going to be good. I'm glad you're doing this. You're going to put them in together, aren't you?
Well,
you have to go back, put them in, close one and put one on and go back to the curve view, please.
That's what I was going to do, like close this.
No, don't hit close. Put them in together as the 4 package and go to the curve view. I've never looked at it before.
That's why I never have either. I'm kind of curious to see how this, so let's take a look. Then we put on the new one.
This is the most exciting show I've ever seen, Jenny. We finally are ratcheting it almost for free. Okay.
Well, and so now if we go to analysis, curve. So now.
It picks up right where it is, 1 for 1, and all we can lose. Can you go to the loss section? Is
$54. So we keep the 1 for 1. We keep the 1 for 1 profit potential to the upside. But what we've done is we've taken our potential loss from $274 to $58.
Correct. I like it. If we could have collected, can you do me a favor and just click up the credit so it looks just keep going. So we're taking more and more and more and more and more credit.
If we took in what we originally paid for it. Let's say Intel was up another $1 and we took in, because what did we pay there? We paid $275. If we took in $275 to ratchet it up, then you have this 1 for 1 potential and you have no risk. in your
in this trade still has 35 days. This is everything we've ever dreamed of for a zebra. It is because this is what you're playing for, a stock replacement strategy where the stock goes up. And this is why it's beneficial. If I owned 100 shares of Intel, what am I going to do about this? Combo it, or not combo it. Throw a collar around it. Then I'm capping my upside. Here, we don't have capped upside. We have unlimited risk to the downside, and you can continue.
Limited risk. You said unlimited risk to the downside. We don't have any risk to the downside.
No risk to the downside, and you can continue to move this and have it on for a credit. This is what happened to me in Robinhood. If you look at a stock replacement that goes straight up like this and you keep moving it, you can only lose down to your last click, which is amazing when you think about it.
I know. So like Intel is good. Usually it's not, you don't see it as much in the analysis page because usually we're ratcheting it each dollar. Somehow, we put this on when Intel is $21 or $22 and it's almost 25 and we haven't been.
The United States government is going to is volunteering to take a portion of Intel. So,
what?
The United States government is volunteering to invest in Intel. So,
hey, I don't care who's doing it. I've been holding on to Intel for so long. I'm just glad it's finally getting a little bit of a boost.
So Steven is asking, can we tell Mike to do a whiteboard for the zebra ratcheting? I don't know if Mike knows this. So we'll have to teach it to him. We'll teach it to him and then maybe he can do it.
Here, I'm going to walk through another ratchet example. And again, the zebra, if you understand the zebra, and you can watch a video. You can watch a video in the strategy series of the zebra. Is there
and the
ratchet?
Can you go to the internet and show where they can find it? So you're not
let me get it set up. Like I'm not sharing right now. I'll stop. Like John, just go on the two of us for now, and I'll get it pulled up.
Well, if you just go and add a tab in the internet when you go to Twitter, I do it all the time. But yeah,
I can do it. I just wasn't sure what else.
What else you had up there? Your graphic images that might pop up.
I don't know. Shopping for dirndls.
Okay, now you can share the screen again. So if we go back in, John, so there we go. We're just on the tastylive.com. That's it. That's all you got to go to.
And we go to learn. Okay, Liz, you're going to have to find this. I know you can find these.
Yeah, it used to be on demand. Now just go to strategy, Liz and Jenny strategy.
Look for strategy series.
It's Liz and Jenny strategy. You got to spell it right though. Strategy series. There we go.
Okay. And what did we get?
No, we didn't get it. This is going to kill me if it's going to be hard to find.
That's so. You know what? I'm glad we're doing this because let me see.
Seconds. I'll find it. I'm going to go. I'll do it myself. Hold on.
See all courses. They've changed this, but that's okay because I don't want our viewers to be. I want to find it so our viewers can find these. The strategy series, implied volatility, beginner options, beginner futures. They're changing the website, Liz. Changing it. Trader resources. Maybe it's in here. Huh?
Well, I mean,
CL trading concepts.
No, I mean, go back to Twitter. I'll find it for you.
All right. I'm going to do one more search of strat. I'm going to do one more search of, maybe I'll just search ratchet.
Search zebra. How to ratchet zebra.
But, so he must know because here's his video.
We have here's what's kind of frustrating. We have a very detailed video that we spent a lot of time on with that ratchet that was produced. It's a produced piece. Oh, Liz and Jenny's strategy series. Go under education.
Right.
There we go. Thanks, John. Liz and Jenny's. So now it's under shows. So it's under shows, not learn. Liz and Jenny's strategy series.
There we go.
We found it for everyone.
There we go. Now, so if you go down, there's the ratchet. It was done, and it's slow. It's to the point, and they make me speak as slow as humanly possible because it was scripted.
So if you want to learn how to do the zebra, it's right here, the zero extrinsic back ratio. And then here is the ratchet, what we were just doing. And I'm going to do it in Intel and I'm going to do it in something else. We've got two to walk through today.
And the good news is we know Mike knows what to do, so we'll have him do a whiteboard thing.
Yeah, we don't have to. Yeah, exactly. Okay, so I'm gonna go back, but to when you put a zebra on, buy 270 deltas, sell 150 delta. That 270 deltas gives you 140 deltas. You sell 150 delta, then you're left with 90 long deltas. But if that stock keeps going up, you're pretty much at 100 deltas, right? It's working like you've got 100 deltas. At expiration, it's 100 deltas if it's above it. And you're watching extrinsic value. So here I'm going to close this one. Intel on fire.
Fuego.
Hold on one second. All right, close this one, close position full, and then just go to the table page and put on a new one. Sell a 50 delta, buy 270 deltas. And we're taking in a credit, and we'll continue our long position in Intel. And I mean, honestly, that's the fact that Intel's almost 25 and we're continuing the zebra is very, very wishful thinking.
No, I think it's to the moon. Intel. I've been riding Intel for so long that it finally needs its day in the sun.
I know. It's so funny because I have quite a bit of Intel. And I like it started its run up and I was like, I'm going to how I get a stock to go higher?
By testing fate and selling calls against it?
Uh-huh.
You sell calls against your Intel?
But not a very small amount compared to my stock. But I almost did it on purpose. I was like, you blow through this call.
You do. Don't make me come back there. That's funny. All right, you want to get filled on that. And what's the second ratchet? Surprise me, Jenny. Because
I'm going to surprise you. Hang on.
Okay, filled.
So now here, all we're left with is a zebra. And we took in a credit to do it.
Push that thing out so we can get it out in real time.
Okay, all right. Hang on. Activity. Publish a follow feed. There we go.
You know what I'm going to do over the weekend because I don't have enough stuff packing? I'm going to verse myself in the updates on the website.
Okay. Now here, this is going to be this example. Get your helmet on. It's not going to be easy.
What is it? Close it up. Show me the symbol. Oh, DocuSign.
Because we sold a call against it. So it's a slightly different situation, and we're gonna walk through the whole thing, and we're gonna look at this.
Hold please. This is different than Intel. We replicated a short in the money put.
Yeah, but still, it still started with the zebra. I vetted this list.
Well, no. We had the in the money put. We just did this 3 days ago. We showed how to reduce capital by creating the exact same position. This is different than your Intels. Intel, we want the unlimited profit potential. Here, what we wanted was that short put with less capital.
But it's still part of this trade is still a winning zebra. So here's the zebra. Here's the short call. This is a profitable zebra. So if we talk about ratcheting a profitable zebra and taking risk off the table, I'm going to look at it in this scenario as well. So I want to walk through this. I want to walk through ratcheting this. What can we take in? How does it change? Let's start by going to the analysis and taking a look at what we have in DocuSign, what our risk is, and how we can take if we could take risk off the table by ratcheting up that zebra. Plenty of people use a zebra as synthetic stock, and they want to have a covered call, so they sell a call against it. That's what this is.
Put it back to the put. Roll it on time.
So here, so let's look. Here, our risk, P&L at expiration, we could lose $736.
Yep.
$736, and
which is less than that in the money put that we changed. Because that has unlimited risk to the downside.
Right. So we could lose $736. We can make $514. We're capped. When you have a covered call, and a zebra is a stock replacement, and selling that call against it is creating a covered call. When you have a covered call, your profit potential is capped. You cap your upside profit potential. So we capped our upside profit potential by selling that call against the zebra. our profits are capped. It's not unlimited. So remember, we can make 514 and we could lose 736. Now I want to see if we ratchet the zebra portion of it, leave the call.
You're gonna be buying that call.
No, you're gonna be selling it. You're gonna be selling it. So you're gonna sell the 50 delta.
Do me a favor. Just go with the 42. Oh, you can't. Yeah, there you go. You can't.
I'm just using you're gonna, sell a 50 delta, buy 270 deltas. Here we're taking in 224.
So I want people to realize you're going to be short 2.
Well, that's why we're going to go to analysis and see what our
short 2, long 3, short 2, long 2.
Long 2. So it's going to be like, I think this is a good lesson on when you use the zebra as a stock replacement for a covered call, what you end up with when you're ratcheting it up as the stock's moving up. So instead of having $700 in risk to make 500,
the 500 in risk to make 500.
Yeah. Now we have a P&L at expiration, $500 at risk to make 473. So like we're losing maybe $25 in profit potential, but we took off $200 in risk, $209 in risk.
And at the end of the day, it's going to be 2 call spreads.
It's going to be 2 call spreads.
No, this might not be. If you had to ratchet it and use different things, you could. This is very complex. At the end of the day, if you want to take $200 in risk off the table, go for it, because we did it to reduce capital anyway. We didn't go with we removed an in the money short put and created the exact same position by selling the call here. So you're going to remove another $200 in risk. Go for it.
I mean, I don't think there's any reason not to do it. Like if you eliminated that short call that we had against the zebra and we said, oh, we can ratchet the zebra up for $2 credit, 100% we would do it without question.
For sure we would, but this was a short put. So I think that's where the mentality is original intent. We were trying to reduce the capital. 100% you should press this button. You just got to realize that it was we're taking risk off the table. What the zebra allows you to do, even in a short put situation, is remove risk.
So the original trade of,
short 70 put.
Let me go back to the trade page. Of this, we originally had the short 70 put.
There's $400 in profit potential. You're keeping $400 in profit potential, but taking $200 in risk off the table.
Yeah, so essentially by ratcheting up that zebra and having the 2 call spreads, we've got this $400 in profit potential, $500 in risk, instead of $400 in profit potential and unlimited risk, because you have that naked put, or the risk of the naked put. And all at the same level, right? All at 70. At 70, that new position would make
$400.
Yeah.
Mm-hmm.
Let me clear out. Why does it say
you've already done it? You have 2 spreads in.
No. This is the zebra, and that's the short call.
Okay, there you go.
So that's what we originally have. So the new trade will keep everything the same as like at 70, we could make, the $475. At 70, that put could make the $400. But we have $500 in risk in having those, adjusting that, doing that ratchet. I guess, again, doing the ratchet to just this would end up creating 2 call spreads.
It's going to create 2 call spreads.
I know it's complicated, but you eliminate this call.
Well, hold on.
There's no question that you're going to ratchet that zebra up.
Well, it's not. If you think about it if you understand the zebra, a ratchet is closing a zebra and reestablishing it. That's it.
And it just happens to land on the same strike.
It happens to land on the same strike. Throw it in.
So because we're crossing over a strike that we already have, I actually have to close this and then put it on, right?
No, I think you can do it. You can add to it. So try it. I think you can add to it.
Let's see.
You can't close it, but you can add to it.
So here's the stock replacement, 62.5, 67.5. I'm leaving the short call. And then I'm going to close this and put on the new one, sell the 70, buy 2 65s, taking in 224 in credit.
Taking 220.
Yeah.
Done.
Now we just have 2 call spreads.
You can add to it. You can't put a closing order in if it's part of a thing. So, and then pop that out. So let's,
So it's interesting. Now we have 2 call spreads. This is something where if someone's wanting to use a zebra as a synthetic stock and keep selling calls against it, I know, and you know, like when people have a short call against stock and they'll ask, like, what do I do? What do I do when the stock gets to my call? What do I do when the stock gets to my call? Well, we usually say roll out and up. So like that's another tweak you could do to this trade where you could roll that original short call, that one short call out and up, where you could take that one short call, go out to October and move it.
Yeah.
Move it to the 72.5. I mean, you're paying a little, but you're getting a little more profit potential.
You are. It's the same thing.
So like that's another thing you could have going on.
And push those out if you don't mind, because I think that should go out in real time too. And like I said, there's lots of things you can do. To your point, you could have ratcheted up the zebra and rolled the call out in time.
Yeah. All right, publish to the follow feed.
Beautiful.
So that one was trickier. That's trickier when it's trickier when you're trying to decide what to do with a zebra when you have a sold a call against it.
I'm telling you, understand your synthetics. That's the one thing I'm going to tell any options trader. It's the only thing you need to know. When I first started on the trading floor, there's 6 synthetics, 6, 8, whatever they are. You handed me to them, and I remember you being like, memorize these. Know what you have.
Yeah. And now, honestly, having the analysis page to look at it, it's easy to see. You know, buy a call spread, look at it, then sell that same strike put spread, look at it. It's the same trade. Like you can figure out the synthetics using that analysis page.
It is the same trade, it's wonderful. I love it. I love it. I love it. I love it. Spoos are down 14. They're coming back. They were a lot lower. They were down 20.
We'd be having a great day if it weren't for AMAT. I'm so annoyed with that I put in this earnings trade in AMAT.
And it's only a $5 wide.
$2.50.
Oh, $2.50. Oh, great. Even better.
Yeah, it was. You know, we collected 90 cents on a 250 wide.
Yeah, I mean, just close that. It's not going to pop.
But look at AMAT down. Take a look at this.
I got out of my SPX.
Oh, good. That was fast. That was
the fastest I've ever gotten out of it.
9 to 10:35. 9:15. 9:15 to 10:35. An hour and 15 minutes. That's the fastest I've ever seen that.
That's the fastest I've ever seen it too. What is VIX doing? I mean, is vol coming in? It came right back. Well, so honestly, this is a price movement,
14,
right?
Yeah, down in the 14 handle again.
When I put it on, SPOOs were down 13. Now they're down 15. You know what I mean?
Crazy. Is anything taking you down today in your account?
Hold please. I will assess. Not really. I mean, not really.
Earlier, HIMS was, but now it's looking at like it's bouncing back. So HIMS earlier, I thought it was down more. HIMS got down as low as 45. Yeah, so like $2 lower.
I mean, that's lower when you've got bigger than a breadbasket of a.
I mean, when I looked at it, I was like, oh, what's going on in HIMS again? HIMS down. I guess just like down again on the heels of being down all the time. I just want to see. I always like to look at what's taking me down on the day versus like what I'm losing on versus what I'm winning on, because sometimes I feel like there's and Ethereum.
Yeah, Ethereum's down a little bit today, but not too much.
Oh, and that silly SBET. I bought that when Dan the Crypto Man was on.
Oh, there you go.
Look at this, down $3, down 14%.
It is?
Yeah.
Huh.
Yeah.
Yeah, Ethereum's not down that much.
I did buy this silly BLSH. And I say silly, I don't know if and this is down today too.
Oh, yeah. I'm not like I'm like net neutral today.
I just think I should be making more money with Intel's rise, like soaring like a phoenix. And I've got a handful of things shadowing Intel's glory.
Yeah, that bullish is back down to, it fell down to under its IPO price today.
Yeah, as low as 68.24. And the IPO day was 68. I mean, that was the close. It closed at 68, the IPO day. So it's right back there.
Yeah, it's right there.
Right back. But like the original IPO price was in the 30s.
Yeah, but we can't get that.
Yeah, nobody. Right. But the original IPO price was like 30 something.
But when it opened to the public, if you're not Tom Sosnoff, I mean, I'm kidding about that. He wasn't. But when it opened to the public, the first print was what?
90.
Yeah. That's the first time you or I or the lay people can get their hands on this bullshit.
I'm just waiting for. I said, dang it! I bought this yesterday. I said to myself, I'm just going to wait for options. And now they're here. Darn. And instead of buying it at 70, I would have loved $10 on the 70 put.
Can you do me a favor and go to volume instead of delta? I just want to see what's traded today.
I am going to.
It's up, two, down. Yeah, there you go. So there's a little bit of volume there in that put.
I'm going to turn around and sell my stock and sell this 70 put. I'll take the 439 loss on my stock and sell it 70 put.
That's so funny.
Bullish.
And I just laugh at you. It's so funny. That 70 put is pretty good.
I mean, yesterday I said, I'm going to wait for options and sell puts when I get options. And then no options. I was like, I can't wait. I'll just buy some.
It's funny. Okay, so let's take a look. Let's go. We got to jump into Twitter. It is already 10:40. We've got lots of people coming in on Twitter. I actually haven't looked, so I'm telling you something that I haven't glanced at. But you can go top down, or we can go Ajit.
Okay, let's see. Let me refresh. Hold on. Let me refresh. Let me hit this refresh button. Oh, there we go. Mike may just need a refresher for zebra and ratcheting.
Love it. Yes, he's awesome. These guys are great.
No, they're great. They're great. They are very smart.
Oh, look at underneath. James L. Thank you. Here's a video from. There you go. Thank you.
Zebra option strategy.
This is our video. I don't know why it's me going like this, but yes, that's the video that you and I did.
That's pretty funny. Punish Pixels. Good morning, ladies. I know it is a big ask, but are you guys heading over to Asia for a show? Hey, I'd love to. I've never been to Asia.
Well, I'm in.
Would like to meet the entire Tasty team in Singapore. Yeah, who wouldn't want to go to Singapore? Sure.
I would love to. It's a big ask, but I'm in. It's not a big ask. Yes, I would love to come to Asia. And then look, there's another, here's the link for the zebra. So we've got the zebra and the ratchet, so I appreciate it.
James. I love James. He's another viewer that deserves to be on the payroll.
I know. They all get these guys are the best. I love it.
Yeah. Has Tom ever gone over to Singapore?
I think so.
How long is that flight?
The longest, I think, possible. Australia's longer, but I have no idea.
I don't know.
It's a long flight.
Oh my gosh, guess what I did? So today I surprised Logan. He's flying. It's so funny because he's flying back from North Carolina. He's been in North Carolina all week. And I went to check him into his flight. And, it's a short flight. It's a little plane. The first class is probably not much of an experience. But for him, when I checked him in, it said, do you want to upgrade to first class? And it was so cheap. It was like he would spend more by buying 2 drinks and a snack. So
yeah.
I surprised him by upgrading him to first class. And when he walks on the plane, he'll be like, whoa, now I'm in first class.
Been upgraded, sir. Right this way. But it was tell him so he doesn't go to his old seat.
Well, he's going to have the ticket that tells him his seat.
True.
But it was cheaper to upgrade him to first class than what he probably would have spent on the plane.
Remind you, he's a 21-year-old, so he'll have 3 drinks on a short flight. 21-year-olds, 3 drinks on a short flight is nothing.
Right. And the cheese box.
Yes.
The cracker box. I don't know.
All right. What does Ash Finn say? Because he's great too. Right underneath James.
Oh, here.
Oh, yes. Love it. I love people helping 2 old ladies with their own website.
I was going to say, it's amazing that our viewers could all find these, but we couldn't.
Yes. And you know why I think I was confused? Because we used to have the strategy workshop where Jenny and I are wearing weird clothes. I mean, my favorite video is the straddle up when I'm screaming that.
All right, I got wrong. Sharing Jejun's SPX research from last year. When VIX closes between 15 to 20, next day SPX percent change stays within plus or minus 0.5%, 50% of the time. If VIX drops below 15, it is even more stable, 68% of the time. So this is just
Okay, so I'm not saying that this is why my trade was so fast today, but the VIX is so low, and when I put it on today, it was the fastest I've ever gotten out.
Yeah, it's so here we've got VIX below 15. So when we're not moving, maybe we won't be moving, and maybe this is the time. Do you ever look and someone asked about this, and I'm actually curious because
hold on, Jenny. Look, SPOs are down 25 right now. That's what I love about it is if you keep a tight GTC in, you just need it to get back there for 1 second in time. Do you know what I mean?
Right. Yeah. Okay, so do you ever go next day? Now I know today we'd be going 3 days because we've got the weekend. But do you ever go?
I don't like weekend risk.
Over to the next day.
So we have somebody on here. Who does the overnight. Now, like I said, I'm not a fan of the weekend risk, so I wouldn't do it on a Friday. But we do have somebody on here who does the overnight iron condor, and they've been having success.
I'm just curious. If I go 35 delta and 35 delta, I want to see 35 delta, 35 delta. I'm going to start with $20 wide. I just want to see how much I get.
Do $10 wide. Looks like you're going to get a lot.
$10 wide, $10 wide.
Yeah,
it's not bad.
No, that's what I'm saying. It isn't bad. Now, once again, this has got the weekend risk built in. We should take a look at this on Monday to see what it is Monday into Tuesday. I don't think it's going to be this much. I think you get paid a little bit more for this by taking the weekend risk.
Taking the weekend risk, but you're getting more than 50%. You know, you're going 35 delta, and you're getting more than 50%.
Yeah, that's pretty good.
It's not bad.
It's not bad.
No.
It's not. So there, and you know what? We can actually ask Jacob to do maybe 1 day studies about these too. I would love if we can get Jacob to do one study for us on Tuesdays, one study for us on Wednesdays. So one will be 0 DTE and one will be overnight DTE.
And look at this, like it's 1 for 1. You're $20 wide for $10.
Yeah, it is. I mean, depending on how much risk you want, they look like they're all going to be chickens. And you can see that by the pricing of it. When I was looking, I was like, try the $10 wide because I think it's not going to be too bad.
I mean, chickens just means risking one to make one. You're basically collecting a lot because you don't want to risk too much. It's not like where we're collecting $5 on a $20 wide. We're collecting $10 on $20 wide.
Yeah, chicken means 50%.
I mean,
and we know that because the mural, RIP mural, that's going to be at 19 North Sangamon, which is going to be painted over because the building got bought. And I'm sure the owners of the new building do not want that mural with a chicken.
I know. Someone bought it. Yeah. Well, we've had so many homes. We started at 62 West Huron, then 19 North Sangamon, then the other address on Fulton.
Oh yeah, I forgot about that one.
Yeah. Yes. What was that? 1K?
That is completely gone from my memory as if it didn't exist.
You remember what that address was?
1K.
1,000. Oh, I was like, we're in the 1K building. I didn't know it was one.
It's the Google building. Yeah.
Okay.
So yeah. You know what, Jenny? That is it's as if that moment in time is completely erased from my memory. I'm glad you brought it up. I actually was going to argue with you, be like, we didn't have a third address, but
that's 3. Then 4th is 1330 Fulton, where they are now. And 5th was the studio in your basement. And now 6 is the studio in your upstairs. You've been in 6 different studios plus the SIBO floor, 7 studios.
Seven studios. Oh my gosh. So we were at a pool party last night with my son, and my kids all know how to count, right? Like a trader count. So my son wanted to leave and I was like, what time? I mouthed to him, I go, what time do you want to leave? And he looks at me and he goes like this. And I was like, perfect. Because this is 7. And no one
knew. Not only to a small circuit of people.
We do a small circuit of people, 7. It's
8. So I thought he had to stay till 8.
Yeah, well, we wound up staying till 8, but he wanted out at 7.
Oh, all right. Let me see what else we have going on. So all those we got out of our ETHA and it's down. So maybe we get back in.
You know what I found crazy today, Jenny? This morning when ETHA opened, can you hit the bar? And you'll be able to read it better than me. What was the opening? How high did ETHA get today?
35.
Okay, so Ethereum
33.30.
Ethereum was down and ETHA was up.
Yeah, but again, it's tracks it. It's not like this is down and that's up. It's that they open and close at different times, right? Like
this is pretty interesting to watch. It does track it, but it was just like there's no ARB. I also want to say there's no ARB. It's not like you can say.
So if you look at from the high to here, so I'm just going to say like, and this might be helpful because people are always asking. So from the high to here, $36 to the low today, 33.30. So 33 to 36. That's $3. And if I had 100 shares of this, that would be $300. Now, I'm going to go to Ethereum. Okay. And from the high the other day, 4,800 to the low today of $4,400. So if I were long one Ethereum, that's a $400 move from the high yesterday to the low today. And an ETHA from the high yesterday to the low today is 300. But again, these reset at different times.
They reset at different times, yeah.
They move almost like very closely.
Yeah, it looks like they do.
Yeah.
So I'm glad we have Dan the Crypto Man on because can we just call him Dan?
Like Bam Bam? Like
yeah, Bam. Because I want to know if any of those have a drag.
I think like ETHA, I don't know. Wait, let's ask him. I don't know if there's a drag necessarily, but maybe some fees associated with this. I don't.
Possibly. I want to ask him that. And I'm going to give him in advance so he knows what we're going to ask.
And if I'm using ETHA, I'm not just long the stock, I'm in an option position, right?
Correct.
So I'm in an option position in here. I'm not just long the stock. If I'm going to be long the stock, I'd probably just buy Ethereum, but I'm using options in here right now.
Well, that's what's great about it is that these products are now available where before it wasn't available. You've got your IBIT, you've got your ETHA, and I really appreciate this AI gone wrong putting that information up again.
So I wanted to show this. Let's see. Oh, so the beautiful Fazia comes in, listening to the beautiful Liz and Jenny, and buying a covered call Zebra in ETHA.
Ooh, there you go. You're using options to replicate it and selling something against it.
And she used the Zebra. So she bought the Nove 3035 Zebra and sold the SEP 40. So she'll have two call sales against it. So I love it, Fazia. Let's put that on because we took off our ETHA already.
And read Fazia's other one just so we're making sure we get to it because it's already 51. So then SPX 0DT on Friday open a nice big wide iron condor, about 65% pop for Monday. Of course, so she's doing the weekend risk, but close it near the end of Friday expiration. It seems like a lot of the premium comes out by Friday, so you don't need to carry the weekend risk. Thank you.
And Fazia, who was it? There was someone. Oh, yes. There was someone that I spoke to yesterday, Fazia, who is wants to connect with you. They retired and they're starting to like manage some accounts and they wanted to connect with you. And so I'm going to.
Well, I mean, she's right here too. So you can reach out to her on Twitter. You can reach out to her on Facebook. You can reach out to, Fazia is a very accepting and wonderful woman. She's, very welcoming of other people.
It's on our follow page. You can follow her on the follow page, but I'm going to follow her on this ETHA trade. And maybe to make it easy on me, I wonder if I could do this. Follow page, Fazia, ETHA, covered call.
So what was in covered call? Does it say covered call synthetic? Listening to Liz and Jenny, buying a covered call Zebra and ETHA. Do it. Just press it. Duplicate this trade.
Duplicate the trade.
We accept.
I agree. Here it is. It's all in. So we're doing the Zebra, the 3035 Zebra in Nove and selling the 40 call in SEP, paying the market's wide. And it's interesting. It went all the way to if you see the market 775 at 815, it pulled it up at the natural, but I'm going to put this mid-market.
No, that's because that's where she got filled.
Oh, okay. But I'm going to just put it mid-market here. Maybe I'll go to $8 just to get filled, just to get a quick fill. $800 into this. Fill. I hope we get filled quick. I don't know how wide these Ether markets are. They're not terrible. It looks like 10-cent wide.
And to be honest with you, thank goodness we have these type of positions, but it is an Ethereum position. We're using options, which is our wheelhouse, which I understand, and selling premium against it. I like it. I love it, Fazia.
I know. I do too. And
I like that she's selling calls against it.
Now, there we go. We're in.
Push that out so we can push it out on the other one.
So we've got our zebra and we've got our short call against it.
It was fun to actually duplicate this trade.
I know.
But I will say, you see where the price was? It went in where she got filled. So we got a 5-cent better fill.
And you know what? We had to, I had to like nickel it up. I didn't have to penny it up. I had to like nickel it up because ETHA is fairly new-ish as far as the product and the options. And so I did give up a little bit to get filled on it.
Yeah.
Okay, yeah, it is. We are winding down, but I got that pushed out. I love it. So, thank you, Fazia.
I know. We'll close the AMAT and we'll close JD. And I do want to get back into Twitter to make sure we got to everybody.
This would exercise and assign, but to save us a few pennies, it's a 250 wide spread. I'll pay 250. I'm going to pay 252 to buy it back. So that'll save us the exercise assignment fees.
And you got filled 250.
I did?
Yeah.
That's a shocker.
Fill 250. And now JD. Close JD.
I don't need to push that out because people can get exercise and assigned. Oh, JD, was that the earnings trade?
Yes, we did a call spread.
Oh, and it didn't go up.
No.
It went down.
Expected move. It went down a little bit.
Was this from 2 days ago?
Yes. I want to say Wednesday.
Okay, so that's out. I guess that's all. Look at Intel go. Go, baby. How high is it going to go? My prediction for the future of Intel is like 45.
I hope so. I hope so.
Until then.
All right, we've only got a couple minutes left. Pop into Twitter. I want to make sure we just, at least people can be seen on Twitter because I love our Twitter peeps and I appreciate all of the, kind of people coming with us. So we got to James. We got to go down. I know we went top down. I think we got to get down.
Okay.
Yeah, thank you so much for everybody with that. We have the Jajun study. Matt Mullins comes in. Does the CL Jade Lizard trade feel too like it's being tested too much to the downside? This is my first Jade Lizard and I'm curious about managing the downside risk. No, it's not.
No, I don't think so. And are you in CL or MCL?
Looks like CL. So keep in mind, CL it's a big animal, but your only risk you would manage it as if you would manage a naked put.
Right. Yeah. Don't worry about that call spread. It's the naked put. So again, would my first trade, if I'm new, be a naked put in CL? No, but I'm guessing you've been trading CL or are used to trading CL or understand the risk in CL. It's a big product. If we were going to do it, we might be doing MCL, the micro crude. And I don't mind getting in.
Can you do me a favor? I just want to. Oh, never mind. I was going to see
what his
strikes are. I can't read that. It's too small.
It looks like 58. 58 here is his break even to the downside.
And what cycle are they in? How many days left on the side?
Let me try to blow this up. 58.
Hit the arrow to the side, and then we can go to the next picture. So 58 is a short strike, and then hit that arrow.
I am. I'm hitting them both.
Huh. I'm gonna try. Hold on. I just want to see how much time they have left, so we can look at his put.
Now I feel like I'm stuck in this.
You have to hit escape. So they have 33 days left. I can see it on mine.
33 days left.
Okay, so then let's go to the platform.
So we would probably go to MCL, just a smaller nugget, probably a tenth of CL. Smaller nugget, and they're in the 33 days. That's where I would go.
33
Because
days, yes.
you're dealing with this future here.
And they have the 58 put, right? And they're break even with a 58 put. So no, you're still like, so if you want to, because CL is such a big animal, you can roll down your call spread. I don't know where that is. Nothing is a trade recommendation, but your only risk, if it's set up properly, is the naked put. So however you would manage the 58 naked put, you would manage the 58 naked put. Look at that. Oh, you're in MCL. I was like, it's only $700. It's
$113 for 700. It's not bad. It's not bad. And the 58 put, it's a 23 delta.
Yeah, it's not bad.
No, it's not bad at all.
Okay, we have a couple.
Right, yeah, we are. What did you say? A couple more tweets?
I just want to make sure everybody gets seen. Just because Ajit, we love Ajit. He's one of our favorites, and he comes in and he's still working while he's there. George Cavallo. Today's class on freezing up buying power from deep short puts was fire. Great.
Fire.
I was like, what? This is awesome. So thank you, George. I appreciate it. And he switched it to a zebra. Huge improvement. Yes.
Oh, good. Good.
Okay.
Ashvin, how to do my iron fly on RH today because of PDT. Of course, it closes right when Liz and Jenny got off the air. $50 winner. Well, I'm glad it came off.
Yeah.
Nice. And Brad Fouts convinced me to close at 55% profit.
They were waiting. He was waiting for 10%. Do you remember? Or 10 cents. And I was like,
yeah.
Good job. Awesome. And then we're already to yesterday. So I'm very happy. I love our Twitter peeps. I think you guys are amazing. We love the communication. So I want to make sure everybody's at least seen.
Okay, good. Good week. Liz, enjoy your last weekend with a full house.
I know, it's crazy. All right, Jenny, you have a wonderful weekend too. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Thomas. Thomas, good morning. How are you, sir?
Doing good, It's been a quick week already, so
yeah.
Just enjoyed some of that rain overnight. I don't know if you guys got it up here, but
that was insane.
It was very loud. Very loud.
I thought it felt like our building was getting just destroyed. It was because you heard like the, and then it would just explode. I'm like, what is going on right now?
Yeah, the dogs going crazy.
Oh, I bet.
We gave them some of their doggy Xanaxes. Yeah.
Love that.
Yeah.
Yeah, it was crazy. There was like definitely sideways rain.
My plants needed it.
Oh, I'm sure.
They were not
probably thriving.
They were not happy after the Seattle trip. It must have been pretty hot over the weekend.
How often do you water them?
Well, I was gone for like 2 days, 2.5 days.
Yes, and Daddy.
Yeah, so one of them was a little not happy.
Revolting?
Yeah, it was revolting a little bit, but it's okay.
Nice thing, you got a balcony. If it dies, you could just throw it over.
It's right in the street.
Yeah, right onto Ashland. And just a little too busy of a street for that, but yeah, it was good to get a little rain on them.
Yeah, speaking of Seattle, thanks to everyone that came out.
Yes.
It was a glorious time. The old crocodile. We got lucky with some incredible weather.
Yes.
It was literally sunny, zero humidity, 75 degrees every day. Not a cloud in the sky. No rain.
It's supposed to be like gloomy there?
Yeah. All the time. Yeah. It is gloomy there all the time. Yeah. So we brought the sunshine.
The weather's really nice though. It's very like dry, not like humid, hot. It's really a good place.
Yeah.
How was the coffee?
It was really good.
Really good.
The cold brew there is unmatched. Yeah. Just a straight black cold brew. It just tastes like there's stuff in it, but there's not.
Yeah. And I think between the two of us, we probably got
I would put our over-under on oysters probably at like 75 combined, me and you.
Yeah. We went back to the same place twice. They welcomed us back the second day. They're like, welcome back. We're like,
you're here again.
Yeah.
You guys.
Just hammering oysters. But yeah, they are extremely good.
They're
Extremely
West
fresh.
Coast oysters?
Yeah.
Okay. All right.
We were told that we had some oysters that you're not going to find anywhere else.
Huh.
So that's how they sold us.
I thought the marketing for the East Coast oysters, the like Blue Island or whatever, they always hype that up. But
Well, I will be going to Boston in a little bit, so I'm going to do.
Yeah, you'll compare.
We'll compare and contrast. Yeah.
Boston's always fun.
Yeah. But yeah, it was a great time. Met some new faces, saw some familiar faces.
Yes.
And yeah.
If you're in the Chicago area, Tom and Tony's
This Friday.
event on Friday. Mike and I will be hosting the show, the morning session. So you want to come out for that. That's still open, I believe. And then we have also the open house. So if you are coming to the event and you want to come to the office, please send us an email so that we can give you the link to sign up, because you gotta, it's all the security stuff and all that stuff.
Yeah. It's not like the old building where you can just walk in.
Yeah, it's we're corporate.
It's an actual
business now. We're not just doing our fun thing anymore. So.
Mm-hmm.
And I'm actually allowing people to sit at my desk and do my work for me for an hour.
Yeah.
Perfect.
Anyone that wants to.
A real live-in experience.
Yeah.
Yeah.
That's a good call. I like that.
That is nice. Smart. But yeah, it'll be a fun week, busy week. But yeah, sign up if you want to go to the show on Friday.
Yes.
Doors at 8, shows at 9, back to work by 11, as the title of the show says. Talia Hall's sick.
Yeah, it is a really cool spot.
A lot of really good taco places around.
5 Rabanitos right around the corner.
Yeah.
Is that what we have today too for lunch?
Good question.
I'm
not sure.
What do you got?
We do, yes.
5 Rabanitos.
Yeah.
Okay, good.
It always
Solid.
hits.
Yeah,
Yeah.
it's a good one.
But yeah, if you like
Of the Taco Tuesdays, it's far and away the best one.
strong,
Yeah.
strong offering.
Yeah.
But yeah, crazy week, busy week, but we are back. And it is Tuesday.
Yes.
We got some futures content for y'all. I haven't done anything in this portfolio. I'm trying to free up the buying power in this gold broken wing butterfly with gold selling off a little bit.
Yeah, I took gold off yesterday. Gold had a huge move yesterday.
Yeah.
It was down like $80, $90 at one point. I know there was some like other tariff on, tariff off, taco, gold taco thing, who knows?
Hattie gas going to 0. Maybe one day.
The gift that keeps giving.
This is why I've avoided it for so long, because now I'm back in the pain train.
Yeah.
But it's small. We'll be okay. We'll be able to hold it. Be fine.
I'll do a quick market update. E-minis up 51. We're at the high of the session. I think this is a new high for the year, or just about there. NASDAQ up 215. You got the Dow up 460 and the Russell up 45. So the Russell and the Dow actually the strongest of the group, having the bigger moves of the four. Oil selling off a bit, / CL 63.29, breaking below that 65 handle. That it's been kind of stuck at. Volatility futures are in the dumps. You've got / VX vol futures 16.15. The VIX itself below 15. Wow. Bonds down 19 ticks. Gold down $4, 3,400 on the dot. You got silver up 24 cents, and then Bitcoin having some choppy action, but staying around that 120 mark, I should say. Ethereum as well, new highs 4,500. Certainly a risk-on day today.
Mm-hmm. Yeah. E-minis at 64.50.
Yep.
When moon.
Yeah,
Here it
this is moon. Is this not the moon?
This is the moon.
I mean, come on.
Even Starbucks, Pike's Place.
Literally doesn't
We
matter.
walked by.
It doesn't matter what you're buying, as long as you're buying.
Yeah.
That's what this market has been.
That's the one thing that will never change about Seattle. The line out the door at the Starbucks in the fish market, or right near the fish market, is just absurd. It's like an hour. Yeah. It's like
Starbucks?
For Starbucks.
Oh.
Yeah. Mm-hmm.
Is it worth it to wait an hour for a coffee every day?
If you're a Starbucks collector, because they at that location they use all the original logos,
so it's like a
the
tourist
original.
attraction?
Okay. Yeah.
I see.
Yeah. It is the original Starbucks, if I'm not mistaken.
Makes sense. Yeah.
But yeah, lots of stuff coming back. Eli Lilly, I was talking to a gentleman at the Seattle show about that trade. I said we just need a rally, and in the last 2 days, it has done just that.
Yeah.
So looking okay there. If this continues, we'll be able to close that one for a scratch or a small winner. Starbucks reversing. That one's down, basically a scratch now after some earnings gone wrong. But yeah, crazy moves. Yeah, the only thing I'm doing right now is trying to fly off this gold broke wing butterfly. So I've got the 3480, 3500, 3540, 20 by 40 in the 17-day cycle. And I sold that out for $2.60 initially. I'm trying to buy in the risk for $1.60 to lock in a $100 credit.
Very nice.
I think I'll get filled pretty soon here. It's right there. But yeah, plenty of cash on the side. If you got any trade ideas, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. And yeah, you can throw in your trade ideas in the chat.
Cherry pick's coming today too.
Yeah, it is Tuesday. Wow, I forgot about that.
Yes. No, I know. My days are all mixed up.
Yeah.
Weird. Not only traveling, but then you come back and it's Tuesday, first day back. It's a little weird.
Yeah.
So, but yes, cherry pick's coming out very, very soon.
Lovely.
Yes.
Should we get to some slides and you can tell us what we should focus on since we are fresh to this week?
Yes.
You were traveling yesterday?
Definitely.
Let's do it.
So the WASD, it came out about 11 minutes ago, top of the hour. Yeah, top of the hour. This corn is really moving right now on it. I guess we'll go right into the first slide.
All right.
This yield on the left is what you're looking for, the average bar. The second one from the left. The yield actually came in, the bushels per acre, it came in at 188.8. That was far above the average estimate, which was at 184.4. So, we're about 4.4 bushels per acre for yield over it, and corn prices are selling off right now. This was a report. The August one is interesting because every WASD up until August is more of a model-based forecast. And the August one is important. It spurs a lot of volatility because it's the first one where they're doing like on-the-ground stuff, actually looking at the crop. They're using data from the National Agricultural Statistics Survey or whatever that's called. So this yield actually blew it out. And corn, before that we were selling off in corn in anticipation for the higher yield forecast. So the past month,
it's been a straight line down.
Yeah, and now we're
down,
getting
10% in a month.
Big red bar going here.
Yeah.
So I was kind of anticipating, I traded it long, sold a put spread because we had some good volatility in here.
Yeah.
That's already looking like it's in danger, so I don't want to tell anyone to go long right now. But this is, we're in uncharted territory, pushing down 373. That's really low. I mean, farmers are going to get hurt by this. The one good thing it could do is export demand for corn has been pretty strong. And as these prices get lower,
they want more.
You can see that export demand getting even stronger. So Mexico, Japan have been big buyers this year. I'm not finding the production number yet, but I'm assuming production is also blowing out to the top side. And let's just go over to the next chart. We'll keep talking through it. Then we can come up with a trade if there is one. This is the ending stock projections. So ending stocks, it came in, you're looking at the right one here, and that survey average, the circle in the middle of that, that's the average estimate, so 1918. It came in above that, 21, around there. So billion bushels that's in, and that's, it's near the top. It's not above the survey average, the high ranges. So it's still in there, but above average estimates. That's another thing pushing down the price. You get more production, you get, more yield per acre.
Mm-hmm.
So you're getting more production. That's really, weighing on the prices right here. We'll go to the next chart, look at how some of these trades play out after the August WASDs over the past 5 years.
Have they ever had numbers that have come outside of the projections?
Yeah, I think that's happened.
Really? Because I would think, just intuitively, if things are within expectations, you wouldn't see as big of a reaction in the markets as you're seeing now.
No, yeah, and corn is down 3.25%.
And that's a lot in a commodity where you have 18, 19, 20% implied volatility. I mean, is the reaction that you're seeing based on the numbers more volatile than you would expect, or
this is a little more volatile than I expected. Trying to see if so we've moved about 11.25 for corn right now.
Mm-hmm.
Trying to see. I think that was outside the expected move.
I would think so.
Yeah.
Let's see. I mean, the current expected move in the next 10 days is $12, or is 12 points. So we're certainly outside.
You're at that.
Yeah, I mean, you've had a day, a 10-day move in a day. So it's certainly outside volatility. I'm just wondering, because, a lot of times, I know the market's up 51 right now, and we had CPI this morning, but a lot of times when these numbers are at expectations, it's a pretty muted move, just because that's what's expected, priced into the markets, number is exactly there, and it's a nothing burger.
Yeah, definitely. But again, the August one is usually a little more volatile just because you're using, the data models kind of change for how they're estimating it. So we are coming up, the next swing low is all the way from August 24th or August 26th, 2024 at 360. So, we got 13 points to go until that. So, I mean, we're doing 13 points right now. You're potentially one more day move from this swing low going back to 2024. And before that, you have to go all the way back to 2020 to get a move under that. So, I mean, if I was trading corn now after the WASD, which is probably what I should have done before putting that trade on, I wanted to have a trade on for the show, but I would probably maybe, with the volatility here, do something where you're not expecting those prices to go below that August 24 level at the 3.7 or
basically right where we're at.
360, yeah.
Like an at the money. Do you have a corn position on?
I did. I mean, it was the 420 call that was left over from a calendar spread, I believe.
Yeah.
No, it was a diagonal spread.
I have a wide put spread that's in August.
But I've had this on for 2 months. So I've been trying I initially played to buy the dip, and the dip never was bought. So, yeah, I would get back in for sure. I think it's an interesting time with the way that the U contract is significantly lower than the Z contract, but the Z contract is entering into this new three option cycle situation where you've got the 45-day, the 73-day, and the 100-day all pointing to the Z contract. So you could do something like a calendar spread, diagonal spread, and with this depressed price, these are pretty cheap. Even if you do like a 70-day, 45-day diagonal spread or calendar spread, it's like $500.
Any specific stocks that are playable on this information?
Not with options. Yeah, not really with options. I mean, I think you have the corn ETF. I think it's corn, which is that's down 2.4%. I did go long soybeans as well, though.
Okay.
So I bought a call spread 45 days out, the 10-10, 10-20.
Okay.
That's doing a little better after the report. Soybeans up about 1.3. Let me see the numbers. So the ending stocks for the new marketing year actually down to 290 million bushels. That's from 310, so a 20 million bushel drop there. Production down just a little bit. The bushels per acre actually up just a little bit. It looks like it came in under estimates, though. It came in at 52.5. Market was looking for an average of 52.9 with a high range of 53.6, which is right where it came in. Or actually, yeah, the August for soybeans, billion bushels per acre came in at 53.6. That was at the high mark, a little above, but still the ending stocks for last year and the new crop are down. So soybeans a little bit more of a positive report. Corn just really negative here. So, doing okay on that soybeans trade. The corn already taking a little pain there. So
Wheat moving as well. Wheat's getting hit on this.
yeah, wheat moving. I did not look at the wheat numbers that much. I'm guessing the numbers were pretty bad. Trying to pull up those wheat numbers. So wheat ending stocks for this year came in at 0.869. That's down slightly from 890 last month. The average was looking for 882. So we're a little bit below last month's, and we're also below the average estimate. So yeah, wheat looking, I mean, like a slightly positive report, but it's still selling off. So
All right. I dabbled some more corn.
yeah. I think
No, double down on the corn.
Yeah.
Why not?
Why not?
If we could go back to that third slide, though, I think we skipped that.
Yes.
Just look at it really quick, just to look at. So this is what happens after the August WASD for the past 5 years, going back to 2020. 21, 30, 45, and 60 days out, you're at an average gain. Every year, except for that 2021, after the August WASD, you are up after 21 days. And then, 4 out of 5 times, if you took a long trade, 80% would be your win rate if you took a long trade.
That sounds good.
Yeah, I mean, if you look at last year, 2024, you get a negative reaction out to 14 days, and then 21 days after, you're at a pretty good gain. But
yeah,
I mean, the market has priced in so much weakness. I think this report is a little shock. That's going to drive a little bit more weakness. But I think if this export pressure keeps up, and I mean the lower prices might give it even more of a boost. Maybe we recover in 2 weeks, but for now, I think this is probably a negative report into the weekend at least.
Well, I'm getting long.
Again?
I have to. At these low levels, I think it's a digestible risk
You're at a
for
price
70
extreme.
days. Yeah. With a 70-day long and a 45-day short for $500, like that's, if you get up to 420 on the Z contract, that would basically double the value of the spread. So we'll take a shot at it. The U contract was a loser, but I like, at these levels, I like taking the defined risk directional shot to the upside, even if it's just for a short-term short covering. Like I'll just keep my eye on it and take it off. I do have a question for you. If we can go back to the first slide. Did you design these to look like pieces of corn?
A little bit.
That's what I thought.
The colorway.
I made some for soybeans too. I made it green.
There you go.
But yeah, I figured the thematic element.
Yeah.
Little artistic.
This is the first thing I thought. I was like, these are literally corn cobs.
Little that, putting my classes from high school with Microsoft Paint into use.
Oh,
As you should.
They look good.
So yeah, I'm getting long corn. I'm buying the 400 October call, and I'm selling the 420 September call against it, and the net cost is like $500, somewhere around there. But yeah, if you look at the curve analysis tab, you can see if you get up to 420, it'll pretty much be a double. But I'm just looking for a short covering here anytime soon, and we'll take it off. Fading the move. Cool.
Yeah, that's it for the WASD. I mean, now it's here, so that's it for.
Was CPI as much of a nothing burger as the market seems to be taking it as?
I mean, I was kind of surprised that yields continued to drop after the report, where ZB now down 0.5%, and still down a little bit. Oh no, I think yeah, the September rate cut is at like what 94% now for the CME's FedWatch, so it looks like September is definitely happening. It's a little weird. I don't know if you guys saw this. The new BLS chief, he said he's thinking about not releasing jobs reports for a while. I'm not sure how the market's going to take that.
That's interesting.
Yeah.
Well, I mean, it's got to be good, right? I mean, if you have no idea,
it's a little scary.
I mean, yeah. I mean, I don't know.
The market
I don't think
just
that's ever happened before.
Yeah, that sounds like it's a setup for a big violent move once they're finally released, because the market just has to operate under assumptions, and then if the assumptions are wrong, those are now compiled over a period of time.
Right.
But that's kind of crazy.
Does PPI matter at the end of this week, you think? Now that we got this.
A little bit, but I think, the report this morning is more. The PPI is like factory gate wholesale prices. It's a little useful, I think, for kind of projecting inflation more, because you're going upstream a little bit more in the chain than consumer prices. But I mean, the tariffs, I mean, it's hard to keep track of all of them. The pause is on again for China.
I saw that, the 90-day.
Yeah.
Is this the third?
Yeah, I think this
we've
is
had?
Third extension.
Nice. So this gets us through basically the end of the year, another 90 days.
Yeah, I mean,
we will be at all-time highs by the end of the year for the nice narrative.
And we'll move the next one 90 days. We'll just go 90 days.
Take it.
That's what it seems like. Everything just operates very, very short term now.
Yeah.
So just one more week of this.
All we can do is ebb and flow with the way that things move.
Yeah. I mean, I think you just stay long equities.
I mean, volatility would tell you that.
Yeah.
Yeah.
Especially with
16
the move today is pretty incredible. They're telling you
1489 in the VIX.
It's crazy. Yeah.
Jeez.
When you look at the vol curve too, I mean, it's a deep contango.
Yeah. But these are the times where, like, if you've ever been looking for a time to actually throw on something to try and play for a vol pop, like UVXY or VXX, like these are the environments you would want to do that in if you're gonna do it, because these volatility products are percentage move products. So now with the VIX at 1487, if you get a VIX move from 1487 to 17, that's a 20% pop. In these products, that's a 20% move to the upside. Where if the VIX is already at 25 and it goes to 26 or 27, it's the same monetary move, 2 points or 3 points, but it's way less of a percentage move. So,
yeah.
But the problem is timing it is extremely hard, especially when you have really low volatility, where volatility can cluster for long periods of time.
On there.
I was filled on some stuff, so I got long the ZCZ5 contract for an 8-point debit, which is $400.
Okay.
And then I was filled on the gold Broken Butterfly, so I took the risk off of that. I moved the 35.40 down to the 35.20 for $1.60, so I locked in $100 net credit. And now if we get a rally up to the spread, I can sell out of that for additional value. And then I got out of the live cattle futures for $100.
I'm still in the live cattle.
Nice.
Yeah.
Very nice.
Do you have views on gold and silver? I mean, you'd think Yeah, move in bonds and just overall the rate cuts on the horizon would be a benefit to gold. Obviously, you had the tariff kind of headlines that moved it.
Yeah.
Are you any thoughts on gold or silver? I mean, they both have huge moves over the last week.
Yeah, I'm still long silver, not in gold. So I'm looking for silver to retake this like 9 and 21 day EMA.
Okay.
It's like in the middle of this range we've carved out from, July, the July high and the July low. So I think a range trade for a while, but I'm in a long, so I'm going to try to stay there. If it gets above 39, I could get out of my position with a nice little gain.
Mm-hmm. I haven't traded silver in a while.
Corn already moving to the upside.
There we go.
Yeah.
Ooh. Yeah. Market's crazy.
It's hard to, it's kind of, I don't know how much there is more to short after the move we've had. So, I mean, if we got a less bearish WASD, even like a neutral one, I think we'd be up right now. But hopefully we get a rebound coming up here, in the next week or two.
I think I'm going to get back into an iron condor in gold. I was looking at doing something in SLV, but it's just there's just not enough juice to squeeze there.
Yeah, I mean, you got a nice range to play gold.
Like 22 or 32 to 35, 36-ish. Like that's kind of what I'm thinking, because we're right back exactly in the middle of this. I mean,
doing the 44 or 77?
I was thinking, so I was going to the 44 day, and I'm wrapped around 32.25 on the downside, just doing an iron condor, and then 35.25 on the upside. Yeah, you got 300 points of range, 150 basically on either side.
Yeah, I kind of like that.
Just kind of playing for an inside move. Whether you do it $10 wide or $15 wide, they're all gonna trade for around like 1/3 the width of the strikes sort of thing. Ivy rank it near 20.
Yeah.
And there's not a lot of volatility around.
Yeah, I like that. I like these broke wing butterflies. They've been working out well. Just because even though we're in this little channel here, we're still getting two-sided action to where you can remove the risk. Like these moves are big enough to where if you have a broke wing butterfly on either side, you have opportunities to remove the risk and just leg into a free butterfly, which is nice.
All right, I'm in. I'm in on that.
He's in.
I did it 15 points wide, so it's $1,000 in risk. You use $400 in buying power because you get the span margin, which gives you a little added leverage to the position. So I did it at $5.30. So it gives you a risk of exactly 1/3 the width of the strikes, or just over it.
Cool.
Go 10 points wide. It probably trades at $3. Would be my guess. I could pull it up just to see where it's at.
That's probably right.
Yeah, 370.
Sounds about right.
Yeah. Little shot.
Yeah.
Yeah, I did that too. I did a little different, but between 33.25 and 34.45.
Ooh, I like that. A little tighter range. A little risk one to make one type thing.
Yeah.
I like that.
Love to see it.
Cool.
All right. So yeah, we're all long, aggressively long corn, neutral-ish long, gold. You just got in. I just flied it off.
Yep. Did the iron condor. Yep.
Yep. Wheat. I'm still in this. Oh, but this is a long-term one. I've got the 560 November, 595 September. September's lost a lot of value, but it's still almost $100 of value, so I don't think I'm going to touch that yet. But yeah, natty gas, we need a rally there. Crude, we need a rally there.
Yeah, what's happening in those two pigs? Natty gas, this is new low.
Yeah, I mean, production's just going up, and the weather isn't supporting demand as much as it should. I mean, you're getting into the winter now, mid-August.
No, don't say that.
Yeah.
Don't say that yet. Not yet.
I mean,
it's true.
Are they prepping for like a absolute Arctic winter in terms of supply?
I mean, Europe has to do that now, but we're doing fine on supply in the U.S. with what's going on right now. So short term now that we're getting into this shoulder season.
And is that the same thing in oil futures too? Like, well, just more production coming on? Has like been
OPEC actually released their monthly report, and they increased demand estimates. They lowered production for the U.S. I think some commentary, I'm not sure if it came from the monthly report, but they said part of their reasoning for increasing production this year has been to punish shale producers.
Ooh.
Yeah, it's shale producers.
Now they're coming after us. We got everybody.
Yeah.
We got everybody trying to take us down.
Yeah, they're doing it. So I don't know. I'm not trading crude right now. I'm going to be trying to look at getting neutral to long sometime soon, but I think I'm going to wait for the EIA numbers tomorrow and see how that impacts the market. You got this meeting with Trump and Putin on Friday.
Oh, that's happening now.
Yeah.
I know there's been like back and forth, like.
Yeah, so we'll see what comes out of that.
All right.
Interesting.
Is that our volatility?
Doesn't look like it. 50-point expected move through the rest of the week in SPX. So this was the move, and now we just chop.
This is it. Now it's over.
But that's why they're killing vol. I mean, 10%, almost a 10% sell-off in VIX. Like this is what we're talking about. It's only a point move, and it's 10%. VXX.
Yeah, those
down
things
3%.
Those things are dead.
They're gonna have to split. Like UVXY is gonna have to reverse split again.
For sure.
Pretty soon here.
Yeah.
Lovely. Well, I'm gonna pop over to the YouTube chat now. See what's going on there. Welcome.
Yes.
Let's see. A lot of people talking about BMNR.
Oh, that's the
IMS
Tom
trades.
Lee,
Yeah.
the Ethereum treasury company. I mean, all these things, they're all going nuts. I mean, Bitcoin was down like $3 or $4 grand in the overnight session. It's now higher. Risk on, man.
Yep.
Just buy it. You know, it's what it seems like. It's always just been, money print to go burr. We got that coming later this year. And what more do you want? We got the President Pump. Pump. So, war's going to be over on Friday. Hopefully. That'd probably be a positive thing for the world.
No more worrying about bad job numbers.
Bad job numbers. We don't even talk about jobs.
Yeah.
We'll just revise those.
Yeah.
Getting butt kicked right now in these 0-day iron condors. Yeah.
Yeah, that'll
This
happen.
was, and I'm not sure what the expected move was going into this announcement, but.
Well, there's probably a little bit of, if we look at the VIX one day, you definitely got a little bit of a pop in volatility yesterday. You had a rare down day.
Yesterday.
So you did have a little bit of a pop in volatility, but
yeah,
you're, I mean, 0-day stuff you should expect. A lot of them, if they go wrong, they're going to go fully wrong. There's not a lot of wiggle room there.
Yeah. Been trading around 100 lot of XLE shares. Shares are a year-to-date $100 loss, but because I sold premium around it on both sides, I'm up 200 overall.
Nice.
And he's up. Yeah. I was talking to someone at the Seattle show, and he was saying how he basically just buys the micro crude contract or the crude contract, and he layers into contracts, and then he sells a call where he thinks it will eventually go, and just takes the premium, collects it.
Yeah.
Yeah, as long as you have it sized correctly, especially in crude has been a great two-sided trading vehicle where you can do that, and if you can absorb the volatility, whatever that is, you're eventually going to have an opportunity, especially if you're like right near the current. I think he was at 65. So yeah, you'll have an opportunity if it gets above 65 to take the profits and reestablish, but that is the nice thing. As long as you don't have a one-sided move that never comes back in either direction, the short premium plus the static delta can work nicely. Oysters.
Are you talking oysters? Ours,
talking oysters.
The ones we liked were what?
Shinsei West Coast oysters. They were 10 out of 10.
Yeah, those were good. And the other one was the Olympias.
The Olympias.
Yeah.
Little tiny, like penny-sized oysters. But they were great. They were great. Are we going to the UFC Chicago on Saturday? I sure am, David.
He's been doing his research all weekend.
I did. Actually, on the plane, I watched an hour-and-a-half video, a fight-by-fight breakdown, and I took notes to make sure that I've got my DFS cards lined up right.
Yeah.
But let me know who you think is going to win, David. Yeah. I would love to see DDP win against Chimaev, but Chimaev's just a monster.
Mm-hmm.
But Dricus is the current champion. He's been just plowing through everyone. But there's going to be some sick fights on that card.
You got an underdog you like?
Yeah, I like Mearshart as an underdog. He's
what's
fighting.
His spread at?
He's like plus 250.
Okay.
But
I like that.
His opponent is projected to win, but his opponent has lost 9 times via submission, and Mearshart is a ground game grappling specialist. So, and he's already had multiple upsets this year. So I like that a lot. And then who's the other one? Barbosa. I think he's a favorite though. There's a lot of old men fights. Like when I say old men, I mean like they're 40 years old.
Yeah.
But in UFC terms, like that is ancient.
Yeah, that's old.
So there's multiple 40-year-old fighters that are probably just going to go in there and just blast each
Where's
other.
all the young guys at?
They're there too. But yeah, I think Mearshart and then Cannonier is another underdog. He's an absolute monster, but he's fighting this guy that's just like a little snake. He just like gets in and out real quick. So I don't like that fight for DFS purposes.
Cannonier's 18-8.
Yeah.
So is that the guy that lost 8 submissions, or?
No, that's Oli Chuck. If you look him up. But Cannonier and Conor McGregor are the only 2 people that have knocked people out in 3 different weight classes. So that's a fun fact.
Yeah, that's a good fact.
But yeah, let me know.
Did you learn that in your video?
Yes.
Oh, well.
Yeah.
There you go.
See?
All right.
Math.
Yeah.
Science. I got to bring Tom to the UFC fights? Absolutely not. That would be probably the worst.
He definitely would
person.
not enjoy that. I don't think he's a UFC type guy.
No, I don't think so. I think he did like boxing at one point.
Yeah.
Maybe.
Well, the boxing is more like
old school. Let's see. Thanks for the LE trade. That is ripping. Yep. I got in that trade, out for $100 or so, and then back in the exact same trade for the exact same price, and then it ripped again. Got another $100 out of it.
Yo.
It's been great.
Odds are moving too.
Yeah. Pete's Coffee, infinitely better than Starbucks. I agree with that. The Sergeant Dickinson blend.
I think it's Major
Dickinson.
Yeah.
Whatever it is.
That is.
It's top tier, especially for cold brew. Yeah. Cosmot's a lock, the equivalent of selling SPX points at 1 standard deviation. Lol. Yeah.
That has been a lock.
When the win rate's around 70%, but it's actually 100%.
Yeah.
Until it's not. But yeah, I will be locked and loaded. ALB premium, pretty good for a semi-speculative stonk.
I don't know. Maybe it's the same person that's obsessed with the stock, but I don't know why everybody keeps coming to this. I think they do chemicals or something. Isn't that like the space that they're in? It's all to put in Dow, which is DuPont, or formerly DuPont. I don't know what they're. Let's see, ALB. Yeah, special chemicals.
Special chemicals.
Yeah. I don't know. I think the last time we looked at this, markets were kind of junky here.
Yeah.
There's our volume.
I mean, it's tough. Ooh.
There we go.
Premium's fine. It's just, you just got to, these markets are 20, 30 cents wide. So you got to be able to manage that. MSOS moving too.
No, I saw
the old pot stock.
Yeah, but didn't Trump say he's looking into possibly
downgrading it? The schedule or the DA schedule, which I thought is what they were doing the last administration. Then they canceled that review process earlier this year. And now it seems like they're starting the same review process with the same intent.
I will say, if it is legal, you got to think there's going to be a futures contract for it.
Why not?
Which
I mean, the thing is with weed, if you're making futures, you got to standardize the product. Is
ooh, that's true.
Are you going to have an indica futures and a sativa futures?
Yeah.
/MJ.
Yeah.
Yeah. MJ is one of the other ones. The other ticker for one of the. But you got to be careful with these because they have like MSOS. A lot of the stocks that are U.S. based, the biggest producers, sellers, distributors, are not part of this ETF because they're not publicly traded. A lot of them are like swaps and stuff like that. Let me look this up here. So a lot of these are, the holdings here are 75% derivatives, which tells me that a lot of them are like swaps or notes on the U.S. based companies. So it's not, there is some drag there to it. It's not a pure play on like U.S. hot stocks because those aren't really tradable.
Yeah. I mean, MSOS is up 68% in a month. So, I mean,
it's a gay. You hit a home run.
Yeah.
I can't knock it.
I've got some in my IRA. It's been down since
forever.
But this helps.
Yeah.
That's why I have Under Armour shares for the last 10 years because I'm just waiting. I'm waiting for a potential day.
Ryan Grace had me slinging calls in MSOS.
Back in the day?
Let's zoom out on this. Because I remember him being like maybe the 50 strike. Yeah. Here, look at that. Nice. 2021.
Yeah. The heyday. Yeah, these, got to be careful with these stocks, the individual names especially, because they're just like, if you Google the location, it's just a shack on the road.
Well, the ones that are U.S. based aren't publicly traded.
Yeah. But yeah, there will probably be some movement in this industry pretty soon here. Maybe it'll be back.
So Cureleaf no longer trading?
I was just looking it up. I don't think so. I think they're all OTC.
Oh, okay.
So a lot of them trade, like I'm looking at Cureleaf. I think it trades OTC.
Yeah, it is. It's OTC. I thought that was listed.
Yeah.
Why is ZBZ cheaper than ZBU? So a little bit of backwardation here. 114.21 versus 114.08 versus 113.31.
Yeah, those are cuts.
Yeah. And normally, like when you look at this and you see this in like CL or VX, that is backwardation. That is an abnormal scenario where it is usually tied to heightened volatility in the near-term cycles. But with ZB, you have cuts and you have other things that play a role into it.
Yeah. Then those get priced in the markets.
Yeah.
Yep. And E-minis, it's dividends because there's no dividend pay. You don't get paid out on futures. The dividend is baked into the price, which is why the current futures are at 64.58. Our next contract is at 65.13. So that's the dividend baked into it.
Yeah. Ideas for going long ETH A, sell a put, performance covered call, Zebra. ETH A at 4,500.
Yeah.
Ethereum at 4,500. Big.
There you go.
Bigly.
I got my, did like an iron fly in this. I think I did this yesterday. Not yesterday, last week. On the 6th. Yeah, middle of last week. I got to do something here, roll this one up.
There you go. Yeah, I think implied volatility is here at 80% in September in ETH A. So if you wanted to sell a put, maybe try and get a lower basis than the current rip, you could totally do that. It does use a lot of buying power if you're going naked. But these are still pretty cheap for if you're diagonalizing them. So if you're like buying October, selling September, you can still reduce basis. Like you can do a 6-point wide for less than $3. It's pretty decent return on capital if it continues higher. Or if you're playing for the downside move, same story. But I think if you're doing a debit trade here, it makes a lot of sense to have a short premium component because you're getting a lot of premium to have that on. Sell the UVXY 13 put. I would rather just buy the call.
Can't. Right.
Like there's no money to be made here. If it rips, you make 50 cents. Where if you buy the call in December, let's say, and you put up a little more capital, like if it rips, you're gonna make way more.
Yeah, but you with these, you have to trade them. You can't buy December because the way volatility is.
Yeah,
you can't. These are short term, so
And the September 13 put, like it's hard to make money on this because if nothing happens, that put's going to go in the money with the way that
it's just going to
drag down,
grind down.
Yeah.
Yes.
So it's tough.
Yeah. And it's basically cash secured, so it's use a lot of capital.
ETH A strangle 3041. September.
Yeah.
If you want. Yeah, it's just a little bit elevated buying power. I'm in IBIT. I've got
buy the wings 10, 15 points wide. I mean, you buy the 40 or I guess the 46. You don't really have the wings on the upside. I'm sure they'll open those up, but yeah. I think if you're trying to get long here too, I mean, you play this via calls, diagonal spreads, crab trades, those sort of setups play into this because there's a ton of skew here.
Yeah.
I mean,
are you doing anything with yours or are you leaving it?
I have to roll up the puts. But I'm having an issue here on the platform. I don't know what I'm doing here.
Why is the GC price different from the price of gold? And how much difference should we expect?
In what?
Gold futures.
Gold futures to spot gold?
Mm-hmm.
Spot gold, you have to go through somebody. And so there's always so there's going to be a markup. I mean, usually what's it typically like if you go through like a JM bullion or something like? Isn't it like a 3%?
Yeah, it's saying I thought 5, but 3% might be it. Yeah.
3 to 5%, and that's on both ways.
And then that's the same if you go to a pawn shop, right? They're going to take 1% off. There's always going to be something where if you're trying to sell at spot, there's always, someone's getting their cut.
Yes. So that is...
It's the cost of doing business.
Yeah.
Yes.
There you have it. Let's see. Apparently, Veneta did something on ALB.
I'll have to go watch it.
Yeah. Earnings this week. I know we've got the News and Insights tab popping off. If you want some written content, I'll put a link there. What do we got this week?
We had
CoreWeave?
Circle. Yeah, CoreWeave. We had Circle this morning. That was kind of one of the bigger ones. We got CoreWeave, Kava. I've traded Kava a handful of times. I haven't looked at it recently. Kava's in there. You have basically over Cisco.
Cisco?
Yeah. Not the thong song, but the company. JD, John Deere is in there too. AMAT.
There were some youngins in the office that had no idea what the thong song was.
You know the thong song, I'm
and
sure.
we're like,
Yes.
what do you mean?
Come on.
You don't know who Cisco is?
Music
What do you
video
mean?
pops into my head right now.
Yeah, the silver hair.
The silver hair.
Yeah.
I think I was in junior high, and that music video would always be playing on MTV.
MTV every single day.
Mm-hmm.
True
Yeah,
classic.
you get home from school, throw on MTV as fast as possible, watch TRL from 3 to 3:30.
Mm-hmm.
Go skateboard outside. That was my daily routine. But yeah, we do have some earnings. Speaking of UFC, Paramount struck a deal.
Yeah, you get long now?
$7.7 billion starting in 2026. You can watch all UFC on Paramount Plus, I assume.
Or is it halted?
PSKY.
Is it going to be a new...
I don't know. Yeah, PSKY is Paramount Skydance.
KY. Oh, so this is the new...
Potentially.
Was this always around? Or is it just a new...
I don't know.
I thought it was a different ticker symbol.
I thought it was Para.
Para.
Yeah.
Yeah.
Maybe they changed it.
Yeah, because they have that halted. So there must be some sort of combined entity.
This thing right here.
Yeah. It looks like it might be. But Gus wrote a little article on the News and Insights tab if you can check that out. And Thomas,
I'll know what I'm talking about.
Yeah. Thomas did a CoreWeave one. What do we got for CoreWeave? Today after the close, I'll pop it in the YouTube chat. Today after the close, what's your analysis?
I mean, it's a big expected move. 20 points on $143 stock. I think it could go either way. NVIDIA owns about 7% of it. They're like a data cloud leaser, if you want to use their data centers. So I think it depends on how strong that demand has been. But I'm not trading it, but.
Yeah, it's a mover. It's a little squeezy. Circle,
it's expensive.
Yeah, Circle had a big move to the upside. Well, it looked like it was going to have a big move to the upside. Opened significantly higher. Where'd we open? 186. So another 20 points higher from here. Sold off there. So, are you doing anything in it?
I mean, I'm just looking at 10-point wide butterfly, and it's for
It's
$1.
nothing. It's not going to go anywhere when you have that high of implied volatility.
Yeah, you have to hold it to Friday, pretty much, if you're trying to get a big chunk out of there. I really want to just throw it on, but do I do a broke wing butterfly? I don't know. I'll mess around with that. Couple more here. Is SMH going to crack $300?
Probably. Why not?
Yeah, of course. It's $299.
It's the next stop.
It's obviously going to hit 300.
Can't go to 400 without going through 300.
Correct. That is actually correct. Yeah, I mean, this has just been an absolute
Not
tear.
getting participation from NVIDIA, though. NVIDIA chopping around here. It was red for a slight minute. It's every day. Anytime there's a dip in NVIDIA, you just buy that indiscriminately.
Yeah, I'm long NVIDIA right now.
It's just up and away. 15% tariff, who cares?
It's kind of crazy because I've been saying this like until proven otherwise is kind of like a joke.
Mm-hmm.
Like I was always saying like there's still risk to the downside, but now it's just like
no more risk.
Up only, VIX at 14. We are in La La Land.
That's it?
Oh yeah, 11:59.
Lunchtime?
Yeah.
Yes. Palantir, Iron Condor. I've got an Iron Condor. Do you have a broke wing butterfly? Or no?
I think I do have a broke wing butterfly. I did this for one of the cherry picks, I think. Yeah. 175, 180, 185, and
So
then
nothing to do there.
2 honor. Right at the money.
Yeah. Nothing to do. It's
Sit,
right at the money.
chilling.
Just got to chill.
Yep.
All right. That's it for us. Thanks for tuning in. If you have any further questions, you can reach us on the Twitters. I'm a Trader Mikey B. Nick's a Trader Nikki Bat. Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same.
Oh, it's a thong song. There we go. Dong, 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 dong.
We'll see you tomorrow. Peace.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies.
So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation.
If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We're back. It's still Friday, August 15th, 2025. Happy anniversary, honey. It's Futures Power Hour. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the rest of this hour as well. We have some consumer insecurity afoot, Ilya.
So it seems.
Bad wordplay on consumer confidence. Josh put me up to it, I swear. We find ourselves with retail sales meeting the mark. Hey, the prior number was revised higher. I know who gets to keep their job for another few weeks. Likewise, Michigan sentiment, though, the private sector reading, showing us at the depths of where we were during the inflation scare post-COVID, where we were in the global financial crisis. So we have a lot to discuss here. Ilya, how's your Friday going?
So far, so good. I'm not loving how these equity markets are toying with my bearish emotions. I'm not going to jump back into them as they try to fade here, unless, of course, they tempt me thoroughly. It's the Russell of all things, which, of course, looked the most attractive yesterday. That seems to be the soggiest today. We'll see if it can actually undo its breakout, but it's tempting.
Well, we'll go into it. Next week, the calendar isn't that heavy, so instead of the typical Friday start of the show where we look at the economic calendar and maybe opine on some of the earnings that are due out next week, Ilya, let's just go into the American consumer. Josh, we can go right to the slides. In terms of the data due next week, in terms of the high-level things that people should look out for, there are FOMC minutes coming out on Wednesday. We don't want to ignore those. There's some PMI data from abroad. There's a Powell speech at the end of the week, of course. We're getting ready for Jackson Hole. But the calendar itself is not substantial enough to spend 5 or 10 minutes focusing on, even if there are a lot of micro level things, like with respect to the housing market, that we would be particularly concerned about. Now, one of the rationales that we've heard, of course, from the administration, the various surrogates that go out there regarding the need for lower rates is in part because of a slowdown in housing. What they're trying to convey is that if the Fed cuts rates, then mortgage rates will come down. It will allow people to refinance. It will make it easier for people to get into the market as first-time home buyers. Of course, that's not necessarily how the world works. We got a 50 basis point cut last year, and mortgage rates went up. In fact, mortgage rates have just reached the levels that they were at prior to the Fed's rate cuts last year, after moving up for basically the past 10, 11 months and then trading sideways to lower. But Ilya, the one thing I'm looking for here is the state of the American consumer at the end of this week. And you had mentioned yesterday that to the degree that non-farm payrolls posed a surprise for markets, leading to a pullback in equities, retail sales could pose a similar risk. Taking a look at the data here, the 3-month annualized run rate, and maybe that's not even the best place to start, just the overall data. Headline, 0.5% month over month, in line with expectations. The retail sales control group is 0.5% above 0.4. So why do we care about that? That's the input that goes into GDP. I'm looking at this, though, the 3-month annualized rate. We are seeing signs of slowing down again. Even if there are some bright spots in here because, hey, X autos and building material, tariffed items, consumption's actually still running pretty firm. Is this a good or bad report? Is my question to you.
It's kind of a neutral report, it would seem. Because if you look at a lot of the categories, what you don't have are big standouts. So, for example, in May, you had this really big standout with motor vehicles. And motor vehicles, by the way, is the section you want to look at here closely because it's anywhere between 20% and a quarter, so a fifth and a quarter of the entire thing, which obviously isn't surprising. Retail sales are going to be skewed because a car is one of the most expensive things that you purchase at the retail level. So obviously big ticket item. So you had this big fall in building materials, for example, in May. You don't have those kinds of shockers here in this data. It's pretty straightforward, but and pretty evenly split. Probably the most interesting part of this is the deceleration itself. So when you look at what retail sales did here, 0.5% right on the screws as far as expectations go, but it is a slowdown. And when you look at the year-on-year rate, you just have this slow drip drab lower now for a second consecutive month. If you sort of squint a little, May was especially weak, and we've recovered a little bit from that in June, and we've come down a little bit now in July. But in general, if you want to look at it in trend terms, since March, consumer spending, the year-on-year rate, sort of the overall kind of big picture, has been in a downward sort of trajectory. And what this jives with is, of course, the GDP numbers that we've seen, where we can measure the level of contribution to the overall GDP number. Obviously, consumption is the biggest piece overall. But when you break it down and say, okay, in the second quarter, we had a rise in GDP of X, how many percentage points of X was consumption? And what you find is that in the first 6 months of the year, as we've said many times here before, you get the weakest stretch of contribution from consumption since 5 years ago, the first 6 months of 2020, the COVID recession. These retail sales numbers bear out in trend terms that sort of a trajectory and tell you you're probably heading into another weak consumption quarter in the third quarter. And that's the last thing you want, because you can tell whatever story about this or that. Oh, the AI is overcooked or not overcooked. The tariffs are this or that. Geopolitics matter or don't to markets. The most important thing at the end of the day is consumption. This is what recessions are made of. When consumption falls off, it's not fast and explosive unless we have a world-changing pandemic or some such thing. But the trend clearly is going the wrong way, and that's not anything to be encouraged by.
It wasn't just the only data release this morning. The consumer confidence figure, this comes from Mike Consal, mispronouncing it. He's the senior director of policy research at the Economic Security Project. He's been on Twitter, guy from Chicago, I think. Either way, this chart's interesting because, as it were, you see that after a bump following the April tariff meltdown, we've seen confidence start to erode again. Consumer inflation expectations are going up. Personal finance security is going down. The only other times that we've been below 60 here, being the line in the sand, this is 2008 during the global financial crisis going into early 2009. You have the double dip recession fears. Now, this is something that we talked about yesterday on the show. Why have you and I and others have brought up this notion of a decline in consumption in the first half of the year? In recent memory, that has only happened a handful of times. And I say recent memory, like all of the occurrences have happened since I was out of high school. Okay. So 2008, during the global financial crisis, first half of the year, consumption declines. 2010, first half of the year, consumption declines. People start getting worried about a second dip into the global financial crisis. Heading into 2011 as well, we have the debt ceiling debates, the Eurozone debt crisis flaring, the US loses its AAA rating. That's another point at the lows. We have post-COVID. COVID didn't give us consumer confidence figures this low, but the inflation scare thereafter did.
And this has been really the story since 2021, is if you look at the trend in the overall sentiment index and its sub-indexes, because they move hand in glove, and the one-year inflation expectation built into the survey, you can see that basically the story since the middle of 2021 was if inflation expectations are going up, sentiment is going down, and vice versa. It's a very clean kind of a thing. You can see very, very clearly that inflation expectations, affordability, all of these things are where consumer sentiment hinges.
All of them. It's right there in front of us. So what does this mean for the market?
6 month forward sentiment, give or take, is the expectations index. There's a current conditions index. Not surprisingly, the current conditions index is beaten down more than the expectations index. So people are not terribly pessimistic relative to their assessment of the current environment. So it looks like they see things in the future as maybe a little bit better, but deteriorating on pace with their assessment of current conditions. But their view of current conditions is decidedly not good.
No, it's not. And I'd be remiss to, why is this turning on? Consumer sentiment by party falling, independents actually basically unchanged, but across all parties. This is one of the flippenings that happens. It's one of the, I don't even know why they break this out in the data series, but when a Democrat gets elected, Democrats feel better about the economy and Republicans feel worse. And when a Republican gets elected, vice versa. So they break it out for us. And I think the key takeaway there is all three subgroups are starting to feel a little bit more heat if you take a look at how they're all turning here. So what does that mean for stocks, though? The big story of the day, of course, that's driving some of the divergence here is what's happening in United Healthcare. Warren Buffett announced a 5 million share purchase of UNH. UNH has been moving up over the course of the day. I've seen two notes come across my email box today suggesting that UNH had been a short as part of a levered up tech long spread. Traders were going short UNH, buying the NASDAQ, buying Meta, buying NVIDIA. So UNH's rally to the 13.9% degree that it's in at today, above the 293 that we were looking at on overtime yesterday, Ilya. Maybe that's feeding into some of the malaise otherwise, because people have to close out. Okay, this is just something I've heard from two different, we'll call them research groups at banks. Whether or not that's valid is a different story, but we do have this pullback. So you have UNH in the background, fine. I don't buy into that necessarily. We have the retail sales report and the confidence reports, which if you take a look at the screens, the market opens up and we get to our data series and we fall off.
Yeah.
We haven't crossed the line in the sand, though, I think is the big picture. And I think that's what you and I, you and I have our recriminations, our problems with the macro, our concerns about the seasonality. The price action speaks for itself to a certain extent.
That's the whole thing, is it's got to be, you have to anchor yourself in the price action. This is what's so frustrating about the current situation. It's indecisive. You don't have a clean break that's holding with conviction, but neither do you have clear-cut capitulation. So if you wanted, and we've talked about this for the past several days, if you were looking for a buy the dip opportunity here, nothing invalid about that. The Russell seems to be the one with the most headroom. But also now today, the one that looks the heaviest and the one that looks like maybe it's getting through some levels.
Heaviest holding on, though, still. I mean, I don't know how we'd mark this off.
By the skin of its teeth.
If you went to the first swing high in July.
Yeah. And on the 8 hour, you can really see it. On the 8 hour, you sort of smooth out a little bit of the volatility, and it doesn't look convincing. It doesn't look like a break that's been fully confirmed. It looks like you're still in that kind of fuzz area where there's recent highs acting as support. I think on the 8 hour, you can really see kind of the outlines of this thing. And you go, you know what? There's not enough conviction here to be a seller on a Friday like this.
The Russell looks like it could just be going into a little bit of a wedge here.
Maybe.
Right? You have this pattern here, falling lows after a pullback into the high. It's not the prettiest chart, but you're not breaking. I think the point that you're getting at here is, even if as someone who has a bearish disposition towards this, respecting the price action, we punch through resistance in ES, in NQ, in RTY. And for better or worse, we're kind of hanging around those levels right now. The NASDAQ's looking a touch softer than everything else here. Ideally, you would have bounced off.
But still holding the former resistance as support. And that's where, for somebody that's bearish or inclined that way, that's where this is frustrating. And I am very focused on not chasing and not letting myself revenge short this market.
Revenge short the market. Well, how could you? Where are the IVRs screaming higher right now that suggest this is anything more than maybe a UNH / healthcare rotation kind of day? It's not just UNH.
Well, and you do
right?
have to prepare to you do have to be prepared to sell in low vol, because that's where you're going to get the good opportunity to buy puts. But you can't do it if the price action isn't there.
No. So you see Cigna is up 2.63%. CVS, which owns Aetna, is up 3.21%. The entire healthcare sector is getting a lift today. And healthcare is a very defensive sector. It's been beaten down. If the notes that I've seen are remotely accurate, then sure, you scratch up today's move as something more about jostling, shuffling around the papers. Now, if you're a zero DTE trader, they're kind of like, bad news for you. You got wind of the wrong type of catalyst on the wrong day. But for someone like myself, who just established a few days ago a new S&P 500 long position aiming for 6,700 by the end of September, the fact that we're still holding through recent swing levels, that there's been no significant or material breakdown, that low that we had yesterday morning at 6453.25 hasn't been punctured.
Yeah.
What to do besides keep rowing in the same direction? Because, Ilya, at the end of the day, what does our research here show? The slides that we've shared so many times. When volatility is in certain places, you take certain tools out of the toolkit. There's low volume. There's positive technical drift still. And where's the VIX? The VIX is below 15 still. 1487.
Very cheap.
This is not the mix of things where you get paid for playing hero ball. This is the mix that gives you just the simple hang on long and ride it out until something breaks. We've seen this time and again.
Yeah. Yeah. I mean, I think this is why you can't get cavalier here. This is the kind of bearish bait that ends up going wrong if you jump the gun, which, by the way, nothing says that this is not a reversal in the making. It could be. It absolutely could be. This is exactly the kind of thing that you see at tops. You get an initial top. Everybody gets rolled around because initially it hits a support level, bounces, sets a higher high. That higher high fails, and that's the real capitulation. That kind of a secondary top that's nominally higher than the previous one that sucks everybody in on the long side and then rug pulls everybody. That's very, very common at tops. In fact, the level of conviction that we see in these markets, or the lack thereof, over the past several days, I mean, basically you get CPI, everybody decides that's the thing they want to cheer, and since then, no follow through, nothing. And those are not the hallmarks of the market that wants to go higher. We haven't had anything to come out and go, oh my God, that CPI report was way off. No, we should instead do XYZ thing. Nothing like that has happened. And this market has found no momentum for follow through whatsoever. NASDAQ in particular, I mean, you get the CPI bounce and then you just get doji after doji. That's a hat tip to a friend of the show, Josh, that loves candlestick patterns and is a walking encyclopedia of their many names. But when we look at sort of, well, first of all, the perpetual guidance not to short a boring market, but also the idea that we have something confirmed here is very difficult to sell until you have something more convincing. And although this could be a textbook top, we don't know that, in my mind, to enough of an extent to bet money on it.
There's just, could it be? Absolutely. I mean, a breakdown of the NASDAQ or the S&P, the NASDAQ is starting already to fail there. But if you get a loss through the July highs, The open there was 23,705. We're currently at 23,790. You make the case that you get a short-term pullback, and the Nasdaq was near the top side of its channel. You could stay in an uptrend and fall back another 500 points from here, and nothing would change technically in terms of an uptrend. Same thing for the S&P, a reset down to 63.75 or so, and the trend is still in place. Only if you lose 63.75, then you start to look back down towards 62.40, and then at 62.40, a loss of there, you have enough to say that a top's in play, and a really meaningful one at that, where you could think about a multi-week or multi-month correction playing afoot. But there's a difference between rolling the dice and punching a lotto ticket versus making a calculated trade. So, Ilya, I mean, at these levels, if you've been directionally neutral for the past few days, we're where we closed basically on Tuesday. Not much has shifted.
And this is really it, is you get the CPI punch up and the whole thing just goes listless. So if the markets were going to extrapolate from that forceful breakout, right? When you get a breakout, what makes you confident? When it finds follow through. When the markets go, great, this is a catalyst. We've picked a direction. Let's go. That's not what this is. And maybe we'll find conviction next week. Maybe we just didn't have the wherewithal this week, but it's just not there. Volume is low. Follow through is absent. So it's easy to look at this and go, this thing is weak need. It got itself all frothy on one CPI number, which frankly wasn't even great. It was just not awful. And when you look at it, you say, okay, well, this is not a market that has legs. But to trade that idea, I think you need some development of a reversal that starts to look more concrete. And yes, you probably have to suffer through a little bit of a vol expansion, which means you're going to have to buy your puts a little bit more expensive than they are. But it also gets you out of getting stuck in a trade that you don't want to have because you jumped the gun. And waiting for a little bit of confirmation here seems wise before you look at this and you say, this thing is weak need, but let's bet against it. It may be, but it feels like this isn't concrete enough to put money on that kind of an idea.
Oh yeah, the strategy or the study that I was referencing here, if the average daily return when the VIX is 10 to 15, you're looking at 0.13% for simply being long stocks versus 0.06% for being short a strangle. The volatility of daily returns when the VIX is below 15, long ES is 0.5% per day, short strangle is 0.7% per day. So VIX below 15, don't need to be creative. Hold on long when you can. If volatility perks back up, start to consider other options. But even below 20, you're not really in a high vol environment. In terms of the sector performance, before we turn off the stocks here today, a little bit more of a mixed bag. Whereas yesterday, everything was basically red. Today is about half and half. Top performing sector, no surprise to anyone, is XLV up 1.87%, maybe finally basing here. Although I did see a great, I have to find this. It was on Twitter yesterday. So remind me to pull it up later and I'll retweet it. But what happens for the stock market when healthcare outperforms? You don't want to be long the S&P if healthcare is outperforming, is basically the gist of it. Mm-hmm. When the S&P outperforms healthcare, the Sharpe ratio, I think, is like a 1.22. When healthcare performs SPY, the Sharpe ratio is something like 0.44, if I recall correctly. So there's no benefit in being levered long stocks in general if a defensive sector is leading, is the ultimate point. Today seems like it's idiosyncratic risk. Nothing to read too far into. Mm-hmm. Gold isn't up, though. And yet GDX continues to charge higher.
Yeah.
Maybe this is a story unto itself.
I mean, in
I think the
fairness,
fact that
it is
you have defensive and healthcare.
I mean, perhaps. In fairness, GDX is in a little bit of a consolidation range here over the past several days, and it's testing toward the top of its range rather than break out or find conviction. But it is up, and when you look elsewhere, I mean, you get a vibe. It's not terribly convincing. Gold is spot gold is flat. The dollar is lower, but not breaking from even yesterday's range. Never mind the broader consolidation. Crude oil pulling back, but again, within the confines of yesterday's range. Nothing here is showing you signs of terrible conviction this way or that.
The worst performing sector on today's sector performance board here, Ilya, semiconductors. We hear from President Trump as well today that new steel and semi tariffs are coming next week because we haven't had enough of those already. 2.26% to the downside. I would point out here, this is at least my first blush, probably a buy the dip opportunity, given how we've been responding with touches into this 1 month moving average or encroachments upon it over the past few weeks. We're getting there at 291.55, a little bit of leeway underneath, maybe down to 285. Either way, the market isn't necessarily breaking down in a substantial manner, even when you look at it on a sector by sector basis, that makes you scream, I've got to sell everything. So I'm going to continue rowing. I think you're of the same mindset here. There's just not enough there to get really jazzed up yet on the bear side. The volatility is too low. It hasn't bounced. Shuffling of papers, maybe. That's the best I got.
Yeah, I mean, I can see how we can get here next week and we get a set of FOMC minutes that disabuses the markets of their rose-colored reading of the CPI report. And that gives you some sort of a dip that looks more concrete. And in retrospect, you can look back at this week and go, well, it couldn't make headway after the CPI report. Obviously, that wasn't real conviction. That was a one-off knee-jerk response to one piece of data. That's what gave us the secondary high. Now we've slipped back under. This is the turn. And in retrospect, it'll make sense. We just, I don't think, have anything actionable to actually put a view like that to work here and now.
Bonds are down across the curve again today. September cut odds continue to recede. 2 days ago, basically 100% chance of a September cut.
It was 100%
actually, and 5.7 for the 50.
Yeah,
right. So I'm not. It was. Yeah, you were in fact good correction there because we were priced well north of that. So let's call it 105.7% chance of a 25 basis point rate cut,
something like that. Yeah.
Right. You bleed over because we quoted this yesterday on the show. You bleed over with the 5.7 that goes into the 50. So we have to get rid of the 5.7 from the 50 first, and then the 100 from the 25 starts to get drained.
Yeah.
Net, that means we're looking at something in the neighborhood of a 13.2, 5.7, 18.9% decline in Fed cut odds from peak to trough from where we were Thursday to today. Now, if cuts move in 25 basis point increments, cutting off, for the sake of conversation, 20 out of 25 basis points.
Yeah,
you're talking about an 80% decline in the pricing for an additional cut by the end of the year. It doesn't seem meaningful. It doesn't seem like it's a big deal. The bond market's finding it problematic though, because we have higher inflation. It's structurally, it's there. It's no longer a 2% Fed target. It's maybe a 3% Fed target in reality.
I mean, I'm not going so far as to say the Fed is changing their target, but certainly they're looking at the situation and saying, we just need to make sure that this really is a one-off thing. I think the Fed has been massaging this message all along to basically say, if we didn't see an inflationary misstep, we'd be cutting already. but we can't because we see that this thing is going to have a one-off price adjustment in it in the best case. And our job is going to be to make sure that it is a one-off price adjustment. And then when you get the statistical rollover and the year-on-year numbers basically subsume that adjustment and rebase, essentially, it's going to statistically just factor out by itself because prices aren't going to continue to surge. It'll be a one-time new tax wedge on top of the existing price structure. So I don't think the Fed is necessarily worried or changing its target or anything like this. I think this is exactly the one-off adjustment that they want to kind of try to coast through without overacting. The problem, of course, is they're being aggressively badgered to cut rates. And this is the kind of thing that could make an inflationary scare that's a one-off into something that lasts. Because if the Fed over-engineers it on the dovish side, they're right to worry that this is going to go into expectations. And when consumers start to behave on the basis of those expectations, they become self-fulfilling.
There was an article I read today on CNBC.com. Where did I find it? The House is considering a bill called the Too Late Act that would make it easier for President Trump to fire Powell.
Oh, good Lord.
I'm looking at today's news in the bond market, and I can't see anything here that tells me this was a series of data. 8:30 a.m., the retail sales report comes up. The first 10 minutes were trading higher, then lower, then higher. Really much ado about nothing. The selling begins at 11:30 this morning. If the Fed is getting less of a reason to cut, it makes me more confident in bonds at the long end of the curve because they're going to stare inflation down. They're not going to buckle to the political pressure. I think there's a legitimate case to cut rates. But again, what we think should happen versus what we think will happen is a different story. If you tell me inflation's the issue, they shouldn't be cutting. If you tell me that the labor market and housing's an issue, there's enough there to justify a cut. Is inflation here because of the tariffs? If it is, then you can cut. If it's not here because of the tariffs, then you can't cut. Because if you cut and it's not because of the tariffs, then we're cutting into a rise of structural inflation. And that's bad for the long end of the curve. But if we're cutting and it's because the tariffs are a one-off, okay, we're cutting to help resuscitate growth. I don't think that's much of an issue. 8.1 IVR, though, is what piques my interest because bond vol had been really, 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 really low. And I say that because the MOVE index was below its January 22 levels prior to Russia thinking about invading Ukraine before inflation data starts turning up here in the US, Ilya. So something is changing, perhaps, right? This is not just staying low vol. We're starting to edge up. Okay, it's a 2.8 IVR. The trade has been directionally neutral for me, at least, in ZN and ZB. Is this a blessing to reestablish a new directionally neutral position in the market in a ZN where we're now closer to the midpoint of the yearly high-low trading range than where we were a few days ago?
I don't think so. Because at IVR as low as it is, what's the point? Like, why are you allocating capital? Like, could you establish a directionally neutral position in the middle of this range? Yeah, but why would you spend money to do that? What is it that you're doing? Like, IV is 2.8. You're going to spend more money putting the trade on. Like, why? If you're going to do anything, I think IV is so cheap that it just makes sense. It makes more sense to me to look at this and go, you know, the trend is up. It's slow, but it's up. We're holding the sort of overall support at this center axis until we're not. If we're going to do anything, while vol is this cheap, you go long. But you don't have confirmation to initiate something like that. It just becomes more a function of, well, vol is so cheap. If you're going to do anything, you might as well just do that and give yourself tons of duration and see if the up move holds and if this crawling to the upside continues, because you will at some point get these rate cuts. I mean, they are coming next month. So chances are. So invariably, you're on the right side of at least the thrust of policy. So, but something directionally neutral, why? Why spend down buying power to extract nothing?
It's a fair point to a certain regard. If you were looking at the current strike, we're basically 111.5. Thinking about going a point and a half wide for the short strikes, or maybe even 2. Okay, and then going a point wide, you're not going to find something great in terms of risk to reward. You got to risk more than 4 to make 1 here. I understand your view in that sense. You have to play it a little bit tighter if you wanted to extract a decent risk to reward where you're risking 3 to make 1 or something in that neighborhood. And then your pop starts to go below 60. Okay. So when I put this on, volatility was a little bit higher at 42 DTE. This is still plenty of time to go. I think the bigger consideration is if someone's in my shoes here, would I want to hold on to this still even as it declines? Yes, because we want it to be wrapped around basically 111.5, the midpoint of the yearly high-low trading range. And as long as they're there, we're just playing for theta burn. Reestablishing it though with a 3 IVR, look, I'm comfortable doing it because I see 113 and 109 as basically rock solid resistance and support. It's not the sexiest trade, right? Yeoman's work. Just put money in the machine. It's going to spit you out a little bit more every single month. As long as we continue along our current course, I'm okay with that. It's not the lotto ticket or madman 10 to 1 type of trade that we would like to do to get some convexity. I think it's appealing enough. ZB is a different story. I think this is the problem child that we need to consider.
Yeah.
All of the sudden, this 114.5 level does not look like strong support from former resistance. It was just cut through like a knife through butter, and the uptrend from the July lows is lost. What does it tell you that yields are moving the way they are today, given how they've moved in the wake of all of the CPI, PPI, retail sales, consumer sentiment data?
It's an interesting thing because it seems like you're getting this dynamic where the market is saying, let's front load. Like, oh, these rate cuts are coming, so maybe some of them need to come out of the long end and closer toward shorter maturities. But it's not entirely convincing because if you look at the pricing here, for this year, you're at 48 basis points, so call it 50. You're exactly where you've been. For next year, you're at 71 basis points, which is a little bit closer to sort of the baseline recently. But even yesterday, day before, you were looking at readings at 75, 73. So it's not like there's been a massive shift here in overall expectations. But I think when you, and this is an exercise I like to do, when you break down the yield curve by sections and you say, okay, well, let's look at the front end as, let's say, something like 3 month to 2 year, the belly as 2 to 5, the long end as 5 to 10. And you look at the dynamics today, what you, I think, clearly see is there's not a lot of movement at the front end. There's not a lot of movement at the long end, but there is a bunch of movement in the belly. So there seems to be something here where more rate cuts are going into the sort of medium term, as it were, and not so much the long term. And not so much the front end. So it seems like there's some sort of churn in the middle of the yield curve. And it'll be interesting to see what this means. This might be sort of rate cuts coming out of the longer end where we're saying, okay, there's going to be a lot more cuts, but they're going to be more delayed. Like this year, let's say, is now a given. It looks like the market has basically anchored at 50 basis points for this year. And you can see how the timeline here works, right? The Fed has 3 meetings left, 50 basis points to do. So they get maybe a cut, a pause to assess, and another cut.
Oh,
right.
I don't think they're going to pause once they start.
I mean, maybe.
That's why I think they're going to be. That's why I think September is so interesting still. Because if I were the Fed and I wanted to cut twice this year, I would cut October, December.
I mean, very possible. But with 3 meetings, your choices are narrowing, and so the markets are relatively anchored around this 50 basis points now. It's just a matter of how they're delivered. September and December, or September and October, or October and December. The permutations are narrowing on them. And the market seems to have recognized that. It's for next year that things get spicier. There's a big disconnect there. Fed is looking for 1 cut. The market is looking for 3. And there seems to be some shuffle in the middle of the yield curve today around if you don't do enough next year, or if the economy really turns next year, there might have to be more, the cycle might have to be longer, and 2027 might start to be an interesting year with many more cuts than was thought.
Here's an interesting comment that came out today from Mark Summerlin. Mark Summerlin was a deputy economic advisor during the first Bush term. He's currently one of the gentlemen who has his name in the hat to be the next Fed chair. He said that, quote, policymakers, this is not the quote actually, policymakers should slash interest rates next month, but caution that they would have to stop if longer term treasury yields rose. Quote, the weakest part of the market or the economy right now is housing, and so you can't have the long end go up. That's your constraint right now. He basically alluding to, if 10-year yields go up, then you stop and you have to stop cutting. It's that simple. So this is why I think if the Fed is in a situation, this is someone who's in consideration for the Fed chair.
Yeah.
There's a warning there. Once you start your cut cycle, if rates go up again, you have to immediately stop your cutting cycle. You can't go through with it anymore. And if that's a prevalent enough view, then another hot inflation report, which I can't shake out of my head, the inflation trackers for August are pointing to this being a warmer number than we had in July. The PCE numbers are going to be running at like a 6.5% annualized rate shortly. The Fed really may not cut in September. And a market that's built upon those rate cuts, that could be problematic. We have 14 minutes left, so we're going to speed run 3 more topics: metals, energy, currency. Metals first. Gold sideways, not doing anything. Vols continuing to come in 33.25, 3,500. That's our range. It holds. We're going towards the bottom part of the range right now, given the momentum.
This was the plan.
That was your plan. Some smug guy was on the phone with me last week saying, oh, yeah, gold's popping, and a spot's not going with it. It's going to fade.
Yeah.
So now we are 33.82. $140.
You got to
later.
look at that spot market. That's the liquid one. That's the one that knows.
That is the one. I mean, that is actually a good piece of insight for folks. If you're trading the futures market and you see something like we did on last Friday, where all of a sudden the market was ripping higher in the after hours because of these headlines around the tariffs. Ilya said, let me check spot. I was on the phone with him after macro money. And he goes, yeah, spot's not moving. This thing's going to come right back in. I'm going to stay short. Say la vie. So Ilya, we get down to 33.25, 3,300. If you're short, that's been the range bottom or so. If you get up to 3,500, that's the range top or so. I'm playing this range bound right now. I don't think there's another way to approach it because getting long in the middle has burned me. So we get near 3,300. I will put some coins back into the gold machine again. Silver, though,
I'll probably flip over because this.
I hope you flip over.
This range has been working. I've been on the short vol of both calls and puts, depending on where we are in this range. Until it's broken, it's not broken.
Silver, 37.73 line in the sand. Why? High that we had here on June 18th. Swing lows throughout mid-July. And it's been a line that we've been dancing around for the past few weeks here in August. That's still holding. The uptrend from the lows that we had in April still holding. The minus 3.3 IVR scares the bejesus out of me, Ilya, because gold and silver contemporaneous declines with contractions in volatility. I digress. We hold above 37.73. I'm long. Below there, I wait for a washout until 36 again.
Yeah.
Reasonable?
Yeah. I mean, I don't think there is any reason to over-engineer this. I think there's just no reason. There's just no reason. You wait, you let it do its thing, you let the price action tell you.
This isn't a great spot for an iron condor, obviously, because of the 3. Although if you wanted to play the range, there is something to do there, right? You could go up to 41. This isn't a terrible trade, Ilya, right? This is the thing about silver. Yes, it's a minus 3 IVR. We know the markets are thin. Maybe SLV is the better place to express this view than in SI futures. But if I go out to the 1 standard deviation move, 50 cents wide on my strike in either direction, I can get a 2.5 to 1, risking, we'll call it 1,800 to make a little over 700. Okay, I can do a 2.5 to 1 where the buying power is less than half of the max profit potential. So I can go in for 50% profit and easily cover the buying power to make this trade. It's actually not a terrible setup. The problem is that I have to give it like $2 to the upside. I can afford to give it $3 to the downside thanks to this call skew. Maybe that's one way to play it. What about this, though? This is usually not my cup of tea. Maybe we just want to get ready for the vol expansion. Maybe it's the vol expansion itself. You could do something like reverse iron fly. This is a lot more buying power. This is a lower probability of profit. It's a bigger max loss profit potential. You could slice this cat a number of ways to do a 1-to-1. This would be more appropriate for SLV than SI futures, if that's the view that I want to take. That we're going to go somewhere. I don't know where, but we're going to go somewhere. We're not going to stay pinned here.
Yeah.
I prefer just to have my long out of the money calls that are cheap right now. But the SI short iron condor, that still looks like a decent trade setup. Maybe it's a silver trade through SLV, though. Energy. I want your take on oil here, though, because we have had a very interesting market this week. We're bounding around a very familiar zone where we were immediately after the Iran-Israel war.
Still
27. Yeah, 27 IVR. We can't recover from a momentum basis yet. Let me take a step back. Is there significant weekend risk because of this Trump-Putin summit right now in Alaska?
In my mind, no. Because
in the market's mind.
In the market's mind, I think it's a potent enough event risk to be thinking about, but it doesn't look like anybody sees this as particularly anything because you don't see any meaningful repositioning. And to your point, when you look at these IV numbers, they're not elevated. So it doesn't look like the market really sees that this is going to be some sort of game changer. Now, on the one hand, that's the kind of thing that makes for a volatile Sunday gap open because the market is complacent going into this, and then somebody says something crazy or something game changing, and boom, you get a move. But at the same time, in my mind, this is more about a photo op than it is about anything else. The likelihood that this is the meeting, like this sort of reminds me of Trump's meeting with Kim Jong-un in the first administration, where Trump goes and meets and all of a sudden there's this possibility like, okay, maybe this very non-conventional president in his willingness to cross lines that other presidents haven't is actually going to do something like a Nixon to China détente kind of a maneuver to actually do something with relations with North Korea that's productive. But ultimately it ends up being a photo op, and then we descend into nowhere. This feels like that.
Well,
the
if I could
stage
point out
setting
here,
is very poetic. It's in Alaska.
Sarah Palin's backyard. They'll be able to see each other countries.
Yeah.
Yada, yada, yada.
La-di-da. Like,
if there is
very
risk,
poetic, made for TV, not going to produce anything.
So we got to keep
Like
moving
Nixon
here to go to FX.
China, this is not.
No, it's not. So if the market's pricing in something, I'd point out the differences for the weekend risk. There's about $1 difference between the 0 DTE for the rest of the day and where the Monday close will be. If we look out to next weekend, the difference between the 7 and 10 day, you're only looking at a 20 cents gap. Go out another week just to confirm this, another 22 cents gap. You keep going down. So there is a little bit more of a gap potential this week at about 5 times the gap potential that we typically see in any given week, as expected over the next few weeks. That being said, I think when Trump landed, he laid the groundwork for this being a meeting in which, expectations are low. He's not being forced or told by Europe to do anything. He's not there to make a promise for Ukraine. It's up to Ukraine for any territorial concessions. So I think the bar's low. I think oil has declined on the hopes of a peace deal. We've seen that the odds on Polymarket of some sort of peace arrangement have increased today. So that's where the betting market's going. Yesterday, when those odds were moving in the opposite direction, oil was up. So I suppose if you're looking for an oil proxy this weekend, look to the Polymarket odds. Oil may be closed by the time we hear substantial news from this meeting because it is in Anchorage and futures close in less than 3 hours. Equities in 2.
Becomes a weekend risk thing.
Only slightly. I don't think we're going to be. Yeah, and then one more layer to this, because I'm one of these people who tracks the stuff. There was talks of B-2 bombers being flown into Anchorage, like maybe the U.S. president's trying to intimidate Putin.
Okay.
I'm not going to no, don't think that. Okay. There is a military training exercise that's been pre-scheduled for months that's supposed to be happening in Alaska right now. This Putin-Trump meeting happened to coincide with when this training is taking place. So all these U.S. military assets that are moving into the Alaska airspace.
Yeah.
It's not worth
the Reynolds wrap back in the cab.
Yeah, please. It's not worth getting worked up over thinking, oh my gosh, the oil's underpriced. They're putting V-52, all the bombers are going. No.
Yeah.
Listen, I track this stuff. We were right about Diego Garcia in the Indian Ocean, right? Why are we moving all these assets there? Are we going to bomb Iran? And then we bombed Iran months later. We're not seeing that kind of buildup, and that's not what this kind of buildup is. You know what's a problem for me, though? Yesterday, we had a cheeky line, dollar call to comeback. Ilya, seriously today, though, don't call it a comeback. Yields are up and the dollar's down. What gives?
I think these are the makings of the dollar's rebound, because you start to see that it's decoupling from yields. And that's a good thing for the dollar here, because the Fed is getting ready to cut rates. That the dollar is very clearly holding the architecture of its rebound since the lows in July, at a time when Fed dovish speculation is escalating, not de-escalating, tells you that's probably all baked into the dollar at this point. And that it's not really responsive to yields here tells you that it's somewhat insulated.
Can we talk about the Canadian dollar, though? This is the one that is not getting anywhere when the dollar's weakening.
Nobody likes the loonie here.
Look, it's tough in the FX futures market for the Canadian dollar. Really, it's the euro and the yen. TastyFX is on the platform. I'd encourage people to go take a look at that, because dollar CAD is a very liquid currency.
Very.
But this is one of the things that always stuck out. I remember years ago when I first started working, if the euro is a lot weaker than the pound, there's a chance that the pound's going to play catch up because the economies are so intertwined and similar.
Yeah.
The Canadian dollar is the loonie in the coal mine for the U.S. economy. And the fact that the Canadian dollar is so weak says a lot about the state of global affairs. So I see this the past few days. We had that bounce up into the 2150, the former swing lows. We failed. We're bouncing we're negative now.
Incidentally, everybody's favorite legacy safe haven, not like there's anything safe about it, but it sort of exists in people's mind. The Swiss franc looks very much like the Canadian dollar. It also is on the defensive side of the dollar and can't make hay of it.
Yes. And because and you know what? Hey, 6S. We can go over to you.
Yeah.
6S. Swiss franc futures
like the
on
Canadian
the platform.
dollar.
This is another safe haven currency, Elia. This is a good shout out here before we end the show for the day, for the week. You have your former swing low here in July.
Yeah.
How come the Swiss franc can't rally? How come the yen isn't rallying more? It's up today, but how come it's not rallying more?
Yeah.
Again, the dollar is the most hated trade in the world.
Wants to rally, man.
It's the most hated trade in the world still.
It feels like this dollar wants to rug pull everybody.
Calendar coming up. We shouldn't have put the Tuesday calendar on here, but I did just in case because the Monday one is quite boring. Monday, August 18th, not really much of anything. Tuesday, start thinking about those building permits, housing starts. There's Canadian inflation. Maybe that's of interest. 6C. Miss there would be welcomed. Other than that, though, Ilya, you and I are done and dusted here for today. We'll be back, obviously, for Futures Power Hour on Monday at 12 Central, 1 Eastern. You and I will be back for overtime Monday through Thursday next week, 4 p.m. Eastern. And we'll see everyone on Friday. Yeah, we'll see everyone on Friday. On Sunday for first call with Tom, 5:55 Eastern, 4:55 Central. So while there's more Tasty Live programming coming up next, Ilya and I, we're going to say goodbye for the weekend. We'll see everyone later. Good luck trading. Stick around, though. You're still watching Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
And This is From Theory to Practice. Welcome to the show today. We are live in the Chicago studio. I had a chance to make it out to the event here this morning, and man, it was so amazing. Like, it was incredible because not only did I get to meet so many of you guys, like live in person, it was amazing to shoot the breeze and whatever, but the fact that we got to go to a Tasty Live event on a Friday during the week while the market is open and Tom is trading, we can fade him in real time, and we all made a whole bunch of cash. So welcome to the show today. I am here live in the Chicago studio, and it's very nostalgic for me. Like, we were here for 5 years. It was amazing. Like, I loved it. You know, mostly over at Sangamon, the old office there. But it's just amazing. It's amazing to be back here, and it's amazing to, get to see everybody and connect and do the show here from the main studio and whatever. So it's really special for me to make it up to Chicago from time to time. So here we are, and I'm so glad that you guys are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. So Josh, bring us into the market. We've had, it's a little something out there. So yeah, E-mini S&P is down 11 today. The risk-free instrument, also known as the NASDAQ Futures Extremely High Risk product, down 115. Now, it seems like we've just picked up a little bit of steam the last couple of minutes. You got the boomers looking strong, up 149, and you have the Russell 2000 Futures Index down 9 on the day. You got bonds down a little bit. You got notes down a little bit. You got oil down a little bit. You got GB40 down a little bit. You got gold down a little bit. The Shifty's a little bit upset with that, of course. Got silver is also down about 9 cents on the day, so not too much. Got the British pound is up. The euro is up. Volatility up ever so slightly, up only about a nickel. And then the Bitcoin bros struggling as well, down about $1,200 on the day. You've got spot volatility, which is the old VIX. Yeah, that's going to be pretty much unchanged here on the day. So down about a penny on the day. So yeah, so the market's been pretty weak all day. I mean, I don't know what came out this morning. I have no idea what came out this morning, whether it was, the old trusty Canadian durable goods print that drops on the second Friday of every month. That may have been it that sent the market lower here this morning. But if we look at the NASDAQ chart, just briefly, let's do like a 1 minute. Let's do some Errol Coleman. I saw Errol Coleman in person today live. I was like, wow, that's Errol Coleman standing in front of me. That's crazy. And so let me do a 1 minute chart. Let's see. Let's do like a 1 day. Yeah, we can do like a 2 day. That's fine. So yeah, so you can see that the market has been, this morning, basically right on the open. It was okay overnight, and then early morning there was a little bit more weakness, and then there was a little bit of a rally going into the open, but then basically just down and back and forth all day. So, where is it going to go from here? I have no idea. Like, is it going to go up there? Is it going to go down there? I have no idea. And neither do you, and neither does anyone else. Most certainly not Tom, as evidenced by his performance this morning at the event. But yeah, so NASDAQ looking kind of weak. It'll be curious to see how the week ends, of course, since it is a Friday. And E-mini S&P is also looking kind of weak, followed essentially the same pattern as the NASDAQ. I guess maybe a little bit stronger now. You can see it's rallied back a little bit, kind of making some higher highs and higher lows as we head into the close here. But what I want to do, so it's been a super busy day for me, obviously, being at the event and connecting with so many people. Like, we shot some content, like went into the podcast room with Gus. We did some YouTube shorts, which was super fun, and all of that. I haven't really had a chance to take a look at what's going on in the portfolio, so we're going to do it all here together. And then I'm going to get to you guys. Man, I see you guys in the chat. Man, look at you guys. I see you guys, man. I see Emmett's in the house. I saw Emmett in the actual house earlier today. And so I got to see Emmett in person, which is amazing. Man, I see Margin Walker's in the house, Soul Train in the house, Sam L's in the house, Brian's in the house, Ash in the house, Theta Trader's in the house. Man, awesome stuff. Rancher's in the house. Man, good stuff. All right, let's go ahead and let's take a look at a couple positions. So number one, let's do a quick little Chipotle check. So take a look at Chipotle. So if you look at Chipotle, you can see that we have not been assigned. And so has anything materially changed with our position? No. Like, are we still just taking a ton of heat on the trade? Yes. Are the P&L open bros coming for us today like they do every other day? Most certainly. But we haven't taken assignment. And so once again, man, it's almost like Dr. Jim might know a couple things. It's almost like, man, I don't know, dude, that cat on YouTube with the B-minus humor, he might know a thing or two when it comes to the world of derivatives. So even though there isn't much extrinsic value left in the option, the time aspect of it is kind of thwarting off the assignment. It's kind of shielding us from getting assigned. And so I think that the hourglass may be running out here pretty soon. I think that unless Chipotle catches a bid in the next, I think we might make it another 7 days, but you get to 28 days to go. It's a little bit of a different scenario now. And so obviously if Chipotle runs up and it gets closer to the strike, now the extrinsic value is going to naturally lift. And so that's going to be helpful. But don't forget, there is this downward pressure on the extrinsic value over time. Like there is this kind of downward force that is putting pressure on extrinsic value to move lower as it gets closer and closer to expiration. So of course we have to contend with that as well. And so with Chipotle here, I think we're okay for another week, but let's see. We got to risk it for the biscuit, and we'll just we'll see where the wind blows us. So that's Chipotle. And then, Palantir, or not Palantir. Is Palantir the one I wanted to talk about? I think so. So Palantir, this is pretty interesting because this was an earnings trade that we did. Let me bring up my Allison Chains here really quick. If I click on these guys, we did this on August 4th. So there's August 4th. We did the strangle for 451. If I'm not mistaken, that was when Palantir had earnings last. So I'm guessing Palantir had earnings on August 4th. And it's pretty much just chopped around. Like it's pretty much just existed since then, which is super nice. And so that's what you want when you sell a strangle. You kind of just want the stock to exist. You just want the stock to remain solvent. I mean, that's basically Snapchat's business model. Like, can we keep the lights on? That's all they're trying to do. That's all we really need out of Palantir here. So August 4th, we did the B-minus humor. It travels, man. Like it travels. Like you're going to get it in St. Pete. You're going to get it in Chicago. It's going to be extremely consistent right around that 80% mark. And so 451, Palantir, we're in a pretty good spot now. I mean, we're not quite at 50% of max profit. But I'll tell you what, I got to give Tom and Tony, I got to give them their flowers a little bit. I mean, they did a really nice job this morning at the event. Honestly, it was amazing. If you can make it out to some events later in the year, the At Work by 11, I think I know they're going to Charlotte. I think they might be going to LA and maybe one other stop in the next couple of months or wherever they're going. If you can make it out to that event, it is unlike anything you've probably been to before from a trading standpoint. Like you're going to see them trading live. You're going to see them building a portfolio live. You're going to see them kind of working through the different markets live. It's really, really, really cool. And I was like, yeah, this is really, really special stuff, what they're doing. And so they did a really good job this morning of, not only kind of building the portfolio out and all that kind of stuff, but they had a couple of zero DTE trades that worked, pretty quickly. And I mean, that's the nature of zero DTE. Like that's the way it's supposed to work. Now, I don't do a ton of that on my show simply because we do our live trading on the show. And so it only really makes sense for me to do like a 1 DTE going into the next day, but kind of like the put on in the morning and take off later in the afternoon is not really something that I do because I do trade primarily on the show or almost exclusively on the show, and that's too valuable to me to kind of give that up. But it was really cool to see them manage the trade so early today, and I was like, yeah, I'm becoming more open-minded. And we've talked about this many, many times over the course of the last few weeks. It's like, man, 50% of max profit for like a strangle, short put, whatever. It's a great reference point. It's a great starting point. But I'm not so closed off. I'm not so, closed-minded that I'm not going to be open and willing to maybe take something off a little bit earlier if it is doing so well so quickly. Always being mindful of the fact that if you manage early, and even earlier than we typically do, which is already early, you are going to need more winners on the back end to make that work. And so again, you just have to know what you're signing up for. You've got to be clear of the concept. And I think we've got, a couple of those things ironed out. So when I look at Palantir here, though, we're so close to 50% of max profit. And I was inspired by Mr. Tom Sosnoff today, which it's been 10 years. This is the first time. So I think to celebrate that, let's go ahead and let's highlight our strangle legs here. And let's take it off, man. We'll free up a little bit of capital there in Palantir. And that'll be that. All right, so we got out of Palantir for 238. So that's a nice trade. We got almost 50% of max profit. And I will push that out on the follow page. Actually, Did I forget to push out? I think I forgot to push out my trades yesterday on the follow page because as soon as the show was over yesterday, I had to dart off to the airport. And so I might be a little bit behind on my follow trades, but I will get all caught up. If I don't get caught up, because I've got to dart to the airport here too when this show is over. So if I don't get caught up today, like I will get caught up, over the weekend. I try to be pretty mindful and pretty timely with those things though, but from time to time, they slip away from me. So that is Palantir. Other than that, man, I mean, Kava, obviously, that's going to be gone. Best Buy down 22 cents, so the P&L Open Bros strike again. And, that's all I'm going to say about that. You got HIMS, IWM, yeah, I mean, everything is looking okay. Let's go ahead. What I want to do, though, let me see here. Yeah, there's nothing to really talk about. I mean, the Qs, Rocket Lab, Starbucks. Oh, well, actually, look at Starbucks. So Starbucks is getting hurt today, which makes sense, right? I mean, Starbucks down $1.67. Our long share position, which is paired up with a short call. So this is my investment style covered call, right? So we're going to use our Final Jeopardy pen, investment style covered call. And what I mean by that, of course, is, that's some nasty looking. Man, look at that. That actually looks like a Final Jeopardy answer. Like most of the time, those Final Jeopardy answers, they look like a 6-year-old wrote them. Like they look like, man, you scribbled that thing down there in a hurry. That's exactly what that looks like. That's just because I'm not used to the layout. I'm not used to the kind of landscape here with the mouse pads and such. But an investment style covered call, this is going to be like a, share position that you plan to hold for a long time. Like this is a share position that you intend on holding for, a number of years into the future, if not longer. And so you're just thinking of a way, how can I maybe unlock a little bit more profitability out of this trade, or even just give me more ways to make money? Because again, if the stock just shoots up to the moon, you're not going to unlock more profitability. You're going to unlock less profitability because you're capping your upside. But in exchange for that, that's the gotcha. The gimme is I now have more ways to make money. I have more pathways forward through the forest that lead to a profitable outcome. And that's the trade that we're always trying to make as active traders. Now, if you're a passive investor, that's not really been kind of on your radar. You've been kind of I buy it, I set it, I forget it, and I make money as the market rises higher. I think that's totally fine. I think as like the foundation of, a huge chunk of your assets, I think that's totally fine. Of course, you don't have to actively trade with all of your assets. But when you start to unlock the potential with active trading, it's like, man, there's so many other things we can do here. Like there's so many other things we can do. We can still be bullish. We can still play the market to the upside. Like we can still take the Warren Buffett model, which apparently now is loading up on United Healthcare, which that kind of surprised everyone, myself included. But it's like, man, we can still do these things. And then on top of that, like, let's get a little bit more active. Like, let's find some opportunities. And that's exactly what we're trying to do and trying to unlock with an investment style covered call. And so when you put a trade on like this, the idea is still to leave yourself plenty of runway to the upside and still leave yourself plenty of opportunity to make money if the stock does indeed appreciate. And so that is what we have done. But today, Starbucks is down, right? So today, people are kind of like, yeah, it really is kind of C+, B- quality coffee. So they sent it down $1.70. So obviously, our shares are getting hurt. You can see that our shares are down a couple $100 today, which that makes sense given the fact that the stock is down. But look at the short call that we put on. We are already up 30 cents on this trade. Like, we are already up 30 cents on the trade. Now, I just got off the soapbox. I don't really want to get back on the soapbox. It's so much work. Talking to you guys about, hey, I should manage it really, I should take trades off. I'm open-minded. I'm this, I'm that, I'm blah, blah, blah. I'm flexible, whatever. This might be a good opportunity to do that, actually, where it's like, man, we've gotten 30 cents. Did I do this trade yesterday? I think I did, actually. Was it yesterday? Or was it earlier this week? It was yesterday, right? 8:14. Wow, that's yesterday. So you know what? Again, in the spirit of a Tom Sosnoff, in the spirit of a Tony Batista, in the spirit of an At Work by 11, we're going to take this off after one day. I never do this. If you've seen the show before, you've never seen me do this before, because this will be the first time that I've ever done something like this. But it's like, man, 30 cents in a day, that's like what? That's like 34% of max profit in one day. And it's not like we're talking about a $2 option where there's still a lot more that you can make. It's not like we're talking about a $1.75 option where there's still a lot more you can make. It's like, man, we've only got another 50 cents left. And again, remember, the spirit of this trade, the spirit of this position, I should say, because it's not really a trade. It's more like a quote-unquote investment. I don't mind holding long delta. I don't mind holding long, like, uncovered, like, premium less delta. I don't mind that at all because that's the position I've been in for so long with these kind of investments that I hold in my portfolio. And so I actually really like taking this off. And then let's just let it chill for a little bit. Let's just let it hang out. And we'll come back next week. All right, so we're filled for 56 cents. So yeah, so we made like 30 cents, 29 cents on that. That's really, really nice. I'm really, really, really happy with that. So we'll loop back around though for Starbucks here in the coming days, maybe the coming week or so. But let me see here. There's a new trade that I was thinking about doing. I was looking at Tom's watch list here. And because again, I mean, it's like, he was using it on the show and during the show today. It's like we've got to, still got to pay my man his royalties. It's like all that kind of stuff. And so it's like, yeah, well, let's try to contribute, a little bit. I was thinking, what if we did something? So if I sort IV rank from low to high, so I want to mix it up a little bit. Instead of having just nothing but short premium in the portfolio. Obviously today, this is a good start. We've got volatility. It's not even really upticking, but the market is down, and let's see what happens over the course of the next couple hours. If we get continued downward movement in the market, then volatility will probably catch a bid, and then we'll see what happens going into next week. I mean, next week I think we have, let me think here. Wednesday I think is Vixpiration, I think. And then Friday is Jackson Hole, where I think Powell and all his buddies just come out and say, yeah, we caught 3 bison today. Like, yeah, I shot 2, buffalo today. Like, that's pretty much all the commentary that you're going to get from them. But the market's hanging on that. It's like 2 buffalo, that's bullish. 3 buffalo, that's too many buffalo, man. That's probably bearish. And so we're all going to be watching that, of course. But I'm thinking, why don't we do something that's kind of a debit spread strategy with a low IVR. And let's kind of see what's out there. So looking at the list here, and I don't want to do any futures. Let's see. We could do Meta. I already have a position on a Meta, though, so I'm going to pass on that. I kind of think, what if we go into Caterpillar? So we just did a Caterpillar earnings trade, I think, that worked out okay. Let's go back into Caterpillar, and I kind of want to play this thing to the upside again. Like, let's go back into Caterpillar. It's super low volatility stock. This is right on the other side of earnings. I think Caterpillar just had earnings, and that was the play that we made that I believe worked out okay. But let's go back in here, and I'm kind of thinking, you've got the stock down today. Let's play for, a little bit of a rebound. Let's play for a little bit of a bounce higher here in Caterpillar. And, maybe we can possibly, get a nice little winner on our hands in the next couple of weeks. And so, with volatility low, just remember, it's, you're taking more directional shots. It's not going to be as strategic as your short puts. It's not going to be as strategic as your short strangles. It's not going to be like that type of trade. Like, it's going to be more of a directional trade. It's going to be more of a, I'm planting my flag in the ground. I'm playing this thing to the upside. I'm playing this thing to the downside. And I know what I'm signing up for. There it is again. Right? I know that I'm going to need to be directionally right for this strategy to work, which again, when I'm selling premium and volatility is elevated, that need is not there. Like, that necessity is no longer required because you have the other elements of the strategy that are working for you. Theta, Vega, things like that. In fact, I think that's the entire list. But when you are directional, it's a different ballgame, right? It's a different ballgame, and you're going to need to be directional. So with Caterpillar at 409 though, I'm thinking, yeah, I got the stock at 409. I don't know, guys. What if we did like a 410, 420 call spread? Maybe we get it for $4, maybe a little over $4. We buy a 410, we sell a 420. Okay, so it's 450. Okay, so I was kind of hoping it might be 4.25, but that's okay. So we're risking 450 to make 550, so a little better than risk 1 to make 1. The probability of profit is a little bit under 50%, which makes sense because we're a little bit out of the money with our strike selection. But just to kind of be mindful of the cost of the strategy, the maximum loss, the debit that you're paying, those are all essentially going to be synonymous. By the way, quick little tangent. So I just did, like I said, I just shot like 5 or 6 YouTube shorts in the podcast studio with Gus, which was awesome. That was great. Gus, thank you for your help. Like, that was really, really, that was fun. Like, that was great. And we may shoot a couple more before I leave after the show, whatever. But one of them, and you guys will see this. You guys will see this on the Instagram. You guys will see this on TikTok. And I'm curious to see. Let me know in the chat if you agree with me. So one of the questions was, what are the 3 reasons why people think options are complicated? So this was one of like the YouTube kind of prompts that the team kind of helped like figure out, like, we think this would be a good idea for a short, which I agree. I thought of it though for a couple of seconds and I'm like, So 3 reasons why people say the options are complicated. And I actually said, you know what? At the end of the day, it's actually only one reason. So before I give my answer, right, I'm just going to yammer on for a couple seconds about nothing. Which I'm pretty good at. What do you think the answer to that should be? If you had to give one reason why people say options are too complicated, what is the reason that you would say? Put it in the YouTube chat. I'm very curious to hear what you have to say. What I said was the terminology, the concepts, the overlap, right? That is second to none in the world of options. And it's incredibly confusing. It's incredibly confusing. Like when you're learning this stuff for the first time, you've got bullish delta. You've got positive delta. You've got upside bias. Those all mean the same thing, right? You've got extrinsic value. You've got premium. You've got blah, 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 blah. Those all mean the same thing. It's like, man, that's crazy. Because as traders, when you start to get kind of accustomed to this stuff, they're all slightly different in terms of the appropriate context that you might use one over the other, but they all trace back to the same underlying meaning. And so you'll use one in one context and one in the other context where they mean the same thing. But if an outsider or someone brand new to the world of options is actually listening into that, they have no idea what's going on because it sounds like you're saying 9 different things when you're basically just saying 9 different versions of extrinsic value. And so anyway, I digress. And so, but if we go into Caterpillar here, let's go ahead and I like the way this trade is setting up. It's just a simple at the money vertical. It's slightly out of the money vertical, but we'll do it for 462, see if we can get filled. All right, so no takers at 462, but that's okay. Let's try 465, see if we can get filled. All right, so we got filled at 465. All right, perfect. Okay, so we did some Caterpillar. We talked about the portfolio a little bit, and there you have it. Man, let me go to you guys, though. Man, I see you guys in the chat. Man, look at you guys. I appreciate you guys so much. Let me go in here and let me see. Can I surprise and delight somebody in the middle? Well, Emmett Morrison said they're bison, not buffalo. I'm pretty sure they're both. Okay, here we go. Soul Train 68 says, Dr. Jim, I think you need a Microsoft position, in my opinion. Man, maybe we could do that too. Microsoft. Let's take a look at that. Bison and buffalo. See, those are synonymous too. There you go. There's another one, right? There you go. It's like people on the outside, they just don't understand. So Microsoft, $1.46. Or up $1.46, I should say. $500 stock. IV rank is 4.9. Okay, so the IV rank is super, super low. So again, we're going to be looking for, debit strategies typically. But just to mix it up, I wonder if I can get away with a diagonal spread in here. Can I do a diagonal spread? So what if I do, actually, no, you know what I want to do? So I was going to do a put diagonal. Let's really mix it up. I'm going to do a poor man's covered put. So I haven't done one of these in a long, long time. So let's buy a put that's a couple strikes in the money, maybe closer to like 80 delta, depending on how much it costs. And let's go a few cycles into the future, and then I'll choose the front month. So in this case, I would choose September, and I'll start selling premium against that long put, essentially simulating what a covered put would be, but doing it at a fraction of the capital. So let's go to like November. And I mean, what if I do, that capital is pretty significant. Like if I go to like the 560 strike, which you can see right here, I go to the 560 strike, 75 delta. That's going to be over $4,000 for me. Now I'm going to choose this because I don't really want to go at a lower delta because I want higher delta because it gives me a better simulated stock move is the best way to put it, right? Remember, when you're long stock, you have 100 delta for every 100 shares. When you're short stock, you have short 100 delta for every short 100 shares. When you do options, your delta shows you what fraction of that position you're actually holding from a directional equivalence standpoint. So in other words, if I choose a delta of 75, that's actually going to feel like 75 shares. It's not going to feel like the full weight of 100 shares. If you have a delta of 30, that means it's going to feel like 30 shares, and so on and so forth. Now, of course, deltas are dynamic. Like, of course, these things change. They move as the markets move and change. But I want this thing to be as close to 100 delta as I can get without making the cost like super prohibitive. Now, you would essentially need to decide what a prohibitive cost is kind of, on your own terms. But I'm going to say 4,000 for a poor man's covered put in a $500 stock is really not too bad. The reality is if I was going to short the stock, I would be looking at significantly more capital. And so let's go. Let's buy the 560. Let's go into September, and maybe we sell, let's sell like a 505. That's about a 25 delta. So you can see that now I have, I've got about $5 of premium coming in from the 505 strike that I'm selling. I'm taking my debit down to $38. That's my buying power effect. This is going to be my maximum loss, but that's not even a really good indication of my maximum loss because I'm going to be selling premium multiple times against this long put, at least twice, September, October against November. But if Microsoft falls out of bed and just goes down, we could be managing this thing as a winner, in the next week or two. And so let's do a poor man's covered put. I kind of like it there, Soul Train. So that's a great job out of you. Let's go in at $38. We'll see if we can get filled. All right, so I got improved to 37. Wow, 37.63 on the improvement there. That's a lot of improvement. So that's some good stuff. All right, let's see. Where are you guys at, though, at the beginning? Man, let me go all the way to the beginning. Man, look at you guys. Wow. Man, look at you guys. Oh, I caught a comment. I got to bring it up. Somebody said my hair looks more glorious in person. Man, I appreciate you. I'm going to send you that cash that we talked about. I didn't catch who it was, but man, I appreciate you. I know that's not true, but I appreciate you. Let's see here. It was Emmett. No, nice. There you go, Emmett. I appreciate you. Yeah, I'll send you that cash. I got Emmett on retainer now. Like, I'm just sending my man cash every month. And so let's see, where are we at? Man, look at you guys. I can't even get back to the beginning. Man, look at you guys. Wow. Yeah, I'm sorry, guys. I'm not going to get to nearly all of these questions, but man, I appreciate you guys so much. Let's see. Rancher says, I'm neatly wrapped around 35 DTE. If it weren't for this UNH short, I'd be doing way better. To be honest, I kind of like that because I know that it's making my P&L look bad, but it's temporary. So it's just a matter of time. It sounds like that may be something that's a conversation you had on from maybe before the show. But even if it's a standalone thing, like, yeah, UNH, it's hurting a lot of people today, man. Like Buffett, he got you again, man. 100%. UNH, up $37. That's crazy stuff, man. That's some super crazy stuff. And so, yeah. So hopefully you've got 35 days to go. That's a lot of time for things to calm down and things to settle down. But again, hopefully your position size is in check. That's the most important part. And, I think Tony's the one who said you don't really understand, how big small is or how small big is. I think it's maybe the first one. But either way, you don't really know until a situation like this happens where you kind of get smacked in the mouth a little bit and you kind of got to go back to the Mike Tyson quote, which is everybody's got a plan until you get smacked in the mouth. And this time, apparently, it was UNH. And so, Brian says, do we get from theory to practice? You do. Ash Finn says, I think so. You are correct. Joe says he's getting hurt badly on UNH. Yeah, you are not alone, my friend. Somehow I sidestepped it. I've gotten super lucky, a couple times in my career. By far and away, the best trade of my career is the Honda Civic. Got $6,000 for it. $6,000 for it. Can you believe that? 2010 Honda Civic. They gave me $6,000 for it. I can't believe it. There's some kind of mistake. There's some kind of error code or whatever, but I am taking the cash and I am gone. Best trade of my career by far and away. But still, I was able to sidestep UNH. I did somehow sidestep GameStop in 2021. I don't really know how I was able to do that. I think it was just kind of just a fading time type of thing where he's so involved and so engrossed in a given stock. I'm like, all right, I should probably stay away because if I don't, he's going to lose me a bunch of money. But let's see. Rancher, hey, Dr. Jim, what's going on there, Rancher? Yes, I appreciate you. Brad Glazier, greetings, Professor. Been a tough month, but I'm hanging in there. I appreciate you, man. I appreciate you, too. Greener pastures await you, my friend. I hope, at least. And that's the thing about this, and it's like you're going to have up months and you're going to have down months, And even as a high probability trader, you're going to get smacked in the mouth. Even as a high volatility trader, you're going to get smacked in the mouth. Like, even as a man, I'm doing this as strategically as I possibly can. I'm super buttoned up. I'm fading Tom. I'm fading Dr. Jim. And those things are making me a bunch of money. But I'm getting hurt in these other places. That's going to happen. Like, that is absolutely going to happen. And it's not even a question of if. It's a question of when. Because when you think about a probability distribution, you need to remember it's a distribution. Like, you need to remember that, I mean, there are a lot of things, that can happen along that distribution. And they will happen. And so you're going to have the high highs, you're going to have the low lows, and you're going to have everything in between. And so that's why position sizing is so critical. Because we feel strongly that in the end, like, we're positioned to come out ahead. But what's the thing that's going to do the most damage? What is the thing that's going to take you down? It's position sizing. Every single time it's position sizing. I can say with 100% confidence that all the mistakes I've made, all the big mistakes I've made in my investing and trading career, all can be traced back to position sizing. If my position sizing was more in check and I wasn't overconfident and I wasn't off the reservation and I wasn't doing a bunch of crazy reckless stuff I shouldn't have been doing, then I probably would have been totally fine. And so you should take away the same message there, Brad. So if your position sizing is in check, I would breathe easy, my friend. I would absolutely breathe easy. So Ash Finn says, jealous of everyone who went to the event today. Yeah, next time, Ash. Like, maybe, hopefully you can make it out next time. I'm not sure where home is for you. But yeah, hopefully we'll be near you or you can be near us at some point in the future. Samuel, what better way to finish the week than with the doc? Like hitting that last set on Friday, that last set of arms, obviously, knowing the weekend cheat meals are already loaded in the bar. That's right, knowing that you are like minutes away from greatness. Speaking of being minutes away from greatness, apparently for lunch today, they had Diego's, which is this burrito place they put French fries in the burrito. Now, I've been so busy, I haven't had a chance to have one yet, but I'm probably going to grab one for the Uber ride to the airport. I don't know if the Uber guy's going to be super appreciative of me getting like French fries and ketchup all over his back seat, but he's just going to have to deal with it. But that's innovative. And I myself, Samuel, am moments away from greatness. And so in the form of a French fry-filled burrito. And so, yes, Emmett Morrison, great to see you at the event too, my friend. Theta Trader says, it's the practice of the U.S. dollar rug pulling everybody. In theory, it'll work, yes, but in practice, what will it do? That's why we're here. That's our job. That's what we're supposed to take care of. And so, let's see. Brian says, I got lucky with UNH. It was a small position, but a good winner. There you go. Tomas in the house. Great to see you, Doc. Hope your trading's been well and wish you had a great weekend. Yes, well, the weekend hasn't even gotten started yet. And so I've got it's like a 3-hour flight back to St. Pete tonight, back to Tampa. And then I'll get in the house at, let me think here. It'll probably be 10 or 11. And so Autumn should be asleep. Theoretically, should be asleep. But the kids might not even be asleep at that point. And so, yes, she is patiently waiting for me to come back with three kids. We actually have 4 kids this weekend. We're helping out a foster family that needs a respite weekend. We are their respite couple. And so we have a little boy who's 2. And we've helped out before, and so we're kind of used to the deal. But, man, you go from 3 small kids to 4, and one of them is 2. Man, can I stay in Chicago next night? Like, I'll have to see if Tom will let me crash on his futon. But anyway, I digress. Ash Finn, why is he at Michigan? Doesn't football start in a few weeks? Let's see. I'm not sure. That sounds like an inside deal. Oh, you guys are talking about me. Yeah, I'm from Michigan. I'm from Detroit. Yes. I'm from Detroit. And so, if you guys have seen the movie, have you guys seen the movie 8 Mile? Right, I'm sure you have or you've heard of it. I grew up on 10 Mile. I grew up 10 miles away from where that movie was shot. I mean, maybe or 2 miles away, maybe 3-4 miles away. But yeah, grew up right on the east side of Detroit, and that's where my parents still live. And I'm going to see them for the Detroit event. Of course, you guys should be signing up for the Options Crash Course Live. It's in October. It's in Detroit. We have December in Tampa, and so that's going to be amazing. But yeah, I'll get to see my mom and dad when I go back to Detroit for the event. And so let's see. Margin Walker, Dr. Jim, surprising and delighting all of Chicago with his presence. Yeah, I'm not sure everybody feels that way, but some people maybe did, which is cool. But yeah, I did kind of, I announced it on the show yesterday, but I didn't really make too much of a mention of it before that. And I know Tom mentioned it a little bit like live on the show. But I was just like, yeah, man, I wanted to be here for the HQ, like kind of the big event every year. Like we do events all over the country. But, the Chicago, the Mecca events are obviously the big dogs. And so I kind of wanted to be here for that. Let's see, Rancher, I'm thinking of playing UNH to the upside to try to make up some of this loss. Yeah, you could. I think flipping your cards over, though, is usually not a good idea, generally speaking. I prefer to stew in the bathtub of filth, but that just could be personal preference. And so let's see, Brian says, I saw Jamal had some Jade Lizards on, so I just put a short put on UNH. Jade Lizards are a great strategy. Doc says, live from Chicago, probably hitting the local deep dish spots like it's an earnings beat. No, I'm hitting the French fry burrito spots because they have essentially hit me. So I don't even have to search or even look too hard. They're right there. Margin Walker, for every Jimmy there's a Sosnoff. Yeah, that's good. I saw that in the chat the other day. That's pretty creative. I like that. Let's see, Rancher, Emmett says it looked like he hit up Pequods before the show. I'm not sure how to take that. But yeah, we're 27% body fat dad bod style now. And again, we're fat and happy, man. Like, there'll be plenty of time to get to Shredsville later on. But right now, like, yes, Pequods, French fry burritos, like, bring it. Like, I'm ready. Like, I'm your guy. Like, let's have some laughs and get this done. But Soul Train, let's go. What's up there, Soul Train? Thanks again for the trade idea. Ash Finn, welcome, Doc. Love to see the show on. Yeah, somebody's got to work today, right? And everybody else having fun at the event, right? Tom and Tony up on stage, making laughs, losing money, right? It's all just, fun and games or whatever. It's like, man, we got to get somebody to get some things done. So I'm here. Jamal's here. He's right after me, of course, live from the studio. And so Margin Walker says the flow is out. Yeah, the flow is definitely out. It's doing some things. Which, again, like, normally when I have you guys, like, in the two-dimensional space where you only see it in, like, the horizontal plane, I can more control the environment. But now it's chaotic, man. It is chaotic, and it is just all over the board, and there's not much we can do. It's very similar to Tom's trading this morning. And so let's see, Rancher, for every mocha, there's a latte. That's pretty good, too. Let's see. Adi says Dr. J has the best intro music in Tasty Live. Yes, thank you for saying that, my friend. It's one of my favorite songs still to this day. I got to choose my song when I came on board in 2016, and I chose, Dangerous by Big Data, and love that song, and I haven't changed it, even though, there have been suggestions and even, like, small little pressure points, like, hey, you should update your song, you should do some different things, whatever. Didn't want to do it. I pushed back against that, and I will continue to push back against that because I want this song to be so firmly etched in your skull that you can't think of anything other than my show whenever you hear it out in the wild, on the radio, you put it on as you're choosing or whatever. It's like, no, man, I want this show to be forever associated with, or this song to be forever associated with this show. And so let's see. Harold, best way to spend a Friday, man. I appreciate you. Harold, what's going on there, my friend? It's good to see you. I hope all is well in your world. Finn West, aloha, Dr. Jim. Good morning. What's going on there, Finn West? And then Margin Walker says, great intro. Yes, that's, I appreciate you. 07 says, you look wilder today. Yeah, it's the Chicago wind, man. It's like, it doesn't matter what I do in the morning or not do in the morning. Like, once the wind gets a hold of it outside, it's like, it's over, man. And it's not even that much wind today, but it's still a lot windier than usual for me. And so, yes, but, I'm going to take that as a compliment. Like, I'm going to take that as a positive thing. So let's see. Rancher says, Dr. Jim, you need to get some endorsements from your hair product people. That's the main. Yeah, we got something. I mean, you guys can see it. Like, normally, like, you can't really see it, like, during my normal show. But yeah, we're real close to a mullet. Like, we are dangerously close to having, like, a full-fledged mullet. Like, if I went in and just got the sides shaved down a little bit, and it wouldn't even have to be like a crazy shave. If we just, like, pared them down, we would achieve mullet status. Like, it would be here. Like, we would own it at that point. And so maybe that's where we're going. My wife is very, very vocally against it. Very vocally against it. But I'm like, you don't even know what you're saying. Like, have you ever, we've been married 16 years, or even, guys you dated before, whatever, you ever been with a guy with a mullet? Like, have you ever been in a relationship with a guy with a mullet? She said no. And I'm like, well, here we go. Like, here we go. And the best thing about it now is, her stop loss is gone. Like, she's inventoried this position. There is no getting out of it. Like, it is going to be me and her until the very end. And so you want to talk about stewing in the bathtub of filth. Like, there it is, man. But Griffin Jones, Dr. J in Chicago. Yes, we are in Chicago. We are at the HQ, and it's awesome. I love being here. and going to try to make it up even more often, possibly. So Theta Trader slowing morphing into Lion-O in his Thundercat Prime. Yes, there you go. And it's kind of fun for me too, because I don't even normally, like, I'm looking down into like the feed. Like when I look up, I'm looking at you guys obviously, but then I look down into the feed and I'm like, yeah, it is kind of on display today. And so that's kind of fun. Let's see. Joel James, Dr. Jim, we need more in-person events in Florida. Thanks for all you do. Man, I hope to see you in December. Absolutely. Like, let's get a good turnout in December. Like, go register today. Bring your friends, bring family members, bring your foes. Again, it's just bodies. It's just heartbeats, right? We just need people in the room. That's all that matters, right? So get people to the event, and then you never know. Maybe we'll have some more in Florida, and that would be super awesome. Soul Train says PPI. Yeah, but PPI was yesterday, I think. In fact, I'm pretty sure it was yesterday. NASDAQ now down 100, 118 actually. So getting close to the lows, right? Are we close to the lows now on the day? No, I guess not. Wow, he was down. Wait a minute. It was all the way down to. Wow. So we're not even. Wow, he was down. It was 80 points lower. It was down 200 this morning. Wow, I was knee deep in the event at that point. And talking to people, when I had no idea. I had no idea it was down 200 at one point. That's crazy. And so let's see. Gasman, hey, Dr. Jim, time to light these new stacks of cash made from trading Tom this morning on fire. That's right. That's right. We made some cash, right? That's some good stuff. And so, man, I'm ready. We got a Google trade. We got a Caterpillar trade. And so there you go. Margin Walker's inserting the Thundercats theme. Let's go. Ashfin is digging it. And let's see, Theta Trader, sort of JP Omens. J. Powell Omens, I should say. Give me sight beyond PPI sight. Yes, that's what we should all be hoping for. Let's see, Colin says, ENPH moving up. Is my platform broken? It could be, which we know we just need a quick little computer restart. Yeah, ENPH is up, man. It's up $4. It's pretty crazy. Strong day for ENPH. And so hopefully that helps you a little bit. Let's see, Margin Walker. Jackie W's in the house. Thank you, my friend. Wanderaz in the house. Wanderaz says, good Lord, what a magnificent floof adorns your head today, Dr. Jim. I appreciate you, Wanderer. I appreciate you. Maybe we need to cut this thing loose into three-dimensional space a bit more often, right? Like you guys, again, you get the two-dimensional deal, but I mean, it's out there, man. It is out there, and it is in the world. And so I appreciate you guys so much. Margin Walker says, Edward Lon says he's back from his nap time out. Well, welcome back, my friend. And then Margin Walker says some hair goals. Man, I appreciate you. Man, but it looks like I got to go because I got to get you guys to Jamal, man. I mean, he's here. He's waiting on me. But, man, I appreciate you guys so much. I mean, look at you guys, man. I appreciate you guys. If I didn't get you guys today, I will get to you guys on Monday. And so if I can ever help you guys, though, in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But in the meantime, guys, we've got Jamal coming up next with Engineering the Trade. In the meantime, again, I said that all wrong. Man, put me in Chicago, three-dimensional space with the floof. The outro gets all messed up. But anyway, trade them small, trade them heavy, and stay generous. That's what I was going for. We'll see you guys on Monday.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. You know, that's what I do.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler, but forget about me. I got the cool, the young, the awesome Errol Coleman in the house. What's up?
What's going on, Jamal? How we doing? Always good to be hopping on here on a Friday.
I know, I love it, man. I love it. For those who haven't figured it out, Errol's in Chicago now, which
I'm a local.
we have embraced him. He is a Chicago dude now. You know what I'm saying? What do you like so far about Chicago, man? I haven't talked to you about this yet, really.
I've been to Chinatown like 8 times already.
For real?
I've been here like maybe 3 weeks. Chinatown is pretty convenient. Then also they have some pretty unique spots.
Yeah.
I've already been kind of finding some favorites.
Yeah. I think I've only had dinner in Chinatown like maybe 3 or 4 times.
It's pretty good.
It's funny. I was saying this the other day. Like I've never really walked around Chinatown quite like that.
It can get a little chaotic, especially on the weekend. People are out. It's hustling and bustling. But I also did hit a Portillo's. So I think I got my Chicago card. That was fire. That was great. But no,
have you been to any fest yet? You probably haven't been to any fest yet, have you?
I heard there's like a food festival. I heard maybe this weekend, and if that's the case, I'll have to check that out. If not, I heard about the air show or
Air and Water Show. Chicago Air and Water Show is this weekend. You definitely gotta.
Let me know a little bit more about that. What's that?
It's basically the situation where there's a lot of planes like the Blue Angels will fly over. They do all these cool flyovers.
Okay.
Trick planes will come through. The best. I'll be honest with you, like this is not what I would do, but I've been here forever. But you should, if you've never done it, you should go closer to the city tomorrow.
Yeah.
Maybe near like North Ave Beach. I don't know if you've heard of that area. It's gonna be that's gonna be super populated.
It's a little man-made beach area.
Yeah, basically. And there's just like this little ship that's like in the sand. That's like it looks like a ship, but it's like a little bar.
Yeah.
Like if you're just hanging out on that beach, it's gonna be crazy crowded.
Yeah.
But I mean, you don't have to go there, but just be in the city for sure.
Yeah.
Because that's the coolest part. It's funny. My wife is from Wisconsin, and there's this huge airplane thing in the summers up near sort of Appleton, Green Bay area called like the EAA. I forget what it is, what it stands for. But it's this huge plane thing, and it's like way bigger than Chicago Air and Water Show, believe it or not.
Right.
But the cool thing about the Air and Water Show is that you don't get to see like the Blue Angels flying around skyscrapers that often, right? Like that's the cool thing about this. So that's definitely one of the big Chicago things for sure this weekend.
Yeah.
It's gonna be a busy weekend in Chicago.
I think
that's going on.
Things are moving. I already heard some jets yesterday. I heard jets going around yesterday that probably had to do with the Aero Water Show.
Yeah, that's the dope part about it. So when I used to work like downtown, like in the Board of Trade, that was the cool thing. Like on those Thursdays before the event and Fridays, you would hear like them doing practices and stuff.
Yeah. No, that's sick. I might have to check it out. We'll see. I think lastly with the little beach in the corner, I think that looks sick during like sunset, nighttime time too. Seen some videos. I was like, yo. That's a nice little vibe. I don't know. You never see sand that close to skyscrapers or large buildings, so it's a unique spot.
I got to roll around with you. I've been meaning to do. I got to roll around with you sometime because it's like some cool stuff about Chicago.
Yeah.
That like people you don't think about and then you realize like, for example, that area near that beach. The original like Playboy building was like right over there.
Oh.
And there's like a beacon like on the tower where it used to like go off all the time. It used to be like very known. And like one of the original like Playboy mansions is not that far away.
What?
Just like stuff like that, like crazy history.
Like this man's gatekeeping everything in Chicago.
Dude, actually, hey, one of my hobbies is like Chicago history straight up.
No way.
I love it. Yeah,
What?
I love it. It's like a lot of cool stuff.
You got any movies? Any recommendations?
Yeah.
I've been enjoying.
I mean, The Untouchables. You ever seen The Untouchables?
What is that?
So The Untouchables is timeless. It's it's about the story of Al Capone.
Untouchables.
And it's from 1987. It's about obviously Al Capone and then the guy Elliot Ness, who basically, even though there's always varying reports, but about how much they actually interacted, but he's the one who was accredited with getting Al Capone in prison. The Untouchables shows a lot of Chicago.
Okay.
So that's the cool part about it, and a lot of it hasn't necessarily changed. So that's going to be really cool when you see that. You're going to be like, oh, dang, I recognize that building, I recognize this, or it's kind of cool. So that's definitely one of them, but there's a ton.
Yeah.
There's so many.
I want to learn about the history. Lastly, one more piece of history I learned was Sears Tower, Willis Tower, one of the tallest. I think it's third now. New York.
I know. See, we're gonna have to work on this. You got to get that down.
I know. What do we call it? Will I be shunned for calling it Willis Towers?
Yeah, you will.
I will be shunned. Right? That's what I thought. That's why I hesitated. Right there. Like, Sears Tower, but I heard we're the inventor of the skyscraper. Is that factual?
Yeah. God, I forget the name of the guy, but I believe the company is like Skillmore, Owings, and Merrill, who actually is the company that made it, I think. And they made a couple of skyscrapers in the Chicago area. I think they did the Hancock too. Don't quote me on that. But it is the same kind of architecture.
Okay.
Like it's basically looks like when you look at it, the outside of those buildings look like what would be on the inside, right?
Yes.
Like they look like steel and all that, but that's what's like unique about them.
Yeah.
I told you, man. I've watched a lot of like Chicago history stuff, dog.
I'll get back with you on. I'm actually gonna check it out, so I'll get back with you.
Bet. Word. I see the chat's on fire.
Yeah.
Appreciate you guys, man. Yeah, man. What do you say, Errol? Gold trader. Errol, tell us about it. You a gold trader? You been trading gold a lot?
Do I look like a gold trader or something?
I don't know. Somebody talked about how crisp and clean your shirt was.
Oh no gold trading. But I
impressed.
mean, I've been looking at the gold market a little bit more often. Maybe we start getting into that over the next month or two. But no gold. Anything? Any gold in your pockets?
Nah. Not right now. When you said gold in the pockets, it made me think of Sinners. Did you see that movie? You gotta check that out.
Remind me real quick.
With Sinners, the one that came out recently.
I just saw a movie that was popular.
Michael B. Jordan.
Maybe I didn't.
You ain't see it.
I didn't see
it. You gotta check it out. It's good.
No, I didn't.
And once you see it and you mention gold again, you'll see what I'm talking about.
Okay, cool. We'll do.
Let's pull up the platform, man. What you been doing recently? Been trading, man. What's been happening? Tell me about it.
I mean, for the most outside of NASDAQ, everybody knows I'm a NASDAQ guy. I trade NASDAQ weekly. Everybody knows that by now. So what am I trading other than NASDAQ? I mean, I've been taking a look at UNH. I wasn't able to take advantage of the bounce that some people were able to take advantage of with Warren Buffett getting into that. So that's been the talk of the town. I know we got some QQQ positions on, some SPY positions.
I got to shout out Emmett Morrison real quick. He met both of us at the show.
Oh, what's going on, Emmett?
Yeah, man, good to see you, man. Yeah. Thanks for coming, and thanks for all those who came to the show. I showed up fairly late, but I'm not in the show, so it's fine. But just wanted to come there and meet up people. Oh, Ferris Bueller. Have you ever seen Ferris Bueller's Day Off?
No, what's that?
Oh, man.
I'm feeling...
Yeah, you got to see Ferris Bueller's Day Off.
I got some catching up to do. Hold on,
If there's two movies, in my opinion, that you got to see. It's Ferris Bueller's Day Off. I would say Blues Brothers. Blues Brothers is kind of old, a little dated, but you got to see Ferris Bueller's Day Off, and you got to see Untouchables, like this weekend.
Those two, Untouchables, give me one more to lock in. No, the one you just said.
Blues Brothers?
The other one.
Oh, Ferris Bueller's Day Off and Untouchables. Okay. Yeah, Ferris Bueller's Day Off and Untouchables.
Okay, cool.
Yeah.
We'll do.
You just those two alone.
I will.
We'll work on other homework after that.
Sounds
those
good.
two you got to see, definitely.
Right,
Oh yeah, NASDAQ, man. So you say you got some QQQ going on?
Yeah, we got some QQQ.
Are you like selling ball, like buying things?
I'm selling some out of the money calls.
I know
right
you got
now.
your charts.
Yeah, no, I'm reloading over here right now, but
I'm just saying in general, like you do a good job with charts like that.
I appreciate that. Yeah, no,
hallmark.
Selling some out of the money calls right now on some of those ETFs, and then a little bit more directional with those futures. Personally, I'm leaning a little bit more bearish. Again, I know we're at these levels right now, but I think for myself, positioning going into the next week, if we get any type of pops, I'll probably reposition to get some better prices for some more short delta. But that's where I'm at right now.
I love it, man.
Yeah.
You know what? I was gonna say running scared. Before I even in chat, does everybody know who's chatting today? I know it was a mystery guest earlier today. Did they figure it out? I'm just curious because then I didn't want to say the name.
You said a mystery guest.
Yeah, nobody know. Like earlier in the day, nobody knew who was. Everybody knew that Frank wasn't chatting, but nobody knew who was.
Right.
And I didn't want to spill the beans. But they said Running Scared, and that's true. Running Scared is another great Chicago movie. Okay. I personally love it. Mm-hmm. It's actually one of the movies that caused me to love it. Family Matters. Family Matters was filmed here, right? Yeah, you know that. Yeah. Okay.
So do I need to put any of those two above the list that we just created?
No. Those two are definitely top. I would say Ferris Bueller and Untouchables.
All right.
I think Running Scared is probably. I would say Running Scared between Running Scared and the Blues Brothers.
Yeah.
I would say those are probably good 4.
I heard the Blues Brothers floating around in some conversations of the last couple of weeks.
You're gonna hear it a lot. Yeah, it's kind of it floats around, but yeah, I mean, the number one is Ferris Bueller's Day Off because there's just so many things that hits Chicago wise, like sports, locations.
Does that have a little bit of the Michael Jordan history in there around that time frame a little bit, or
Michael Jordan was definitely like exploding at that time when the movie's made from 1986 again, so that came in 1986.
Yeah,
there's so many though, dude. Like I mean, I don't know how much you really Home Alone. You've seen Home Alone?
Absolutely.
That's filmed in Chicago.
Yeah,
that was filmed in Chicago.
Right away, you just get like the Batman vibe. I think when you see the train system, you get like Gotham's like a little bit of that vibe. So I think of those movies right off.
The Dark Knight was filmed here, but they don't. It's not mentioned as Chicago, but that was filmed here.
It looks similar, yeah.
The one with Heath Ledger, that one was directly filmed in Chicago. The first two, I believe. The third one with Bane, I think, was filmed in Pittsburgh. I'm pretty sure. The Fugitive, damn, the chat's on fire with this, yo. I'm telling you, The Fugitive is another favorite movie of mine.
Screenshot chat and we're good.
I know. The Fugitive is another great movie. Never heard of My Bodyguard. No. The Fugitive is definitely a great movie. Yeah, you've been a NASDAQ guy more recently. Dude, I haven't. I've been leaning on this Russell position. I got this Russell call spread I've had for a while. It's September. I haven't done anything with it. I guess I'll keep it here at the end of the month. I feel like things get crazy at the end of the month sometimes, So I don't know if it's going to... I mean, it's back to 2,300. That's a good thing. Mm-hmm. Before I get carried away, I know there was one thing I told you I wanted to talk to the people about. You know how you get like those emails every now and again about like your positions, like, oh, you got weekly options, you got to do something.
I was about to say from margin or the margin email? No,
yeah.
From my buddy Margin or no?
But you know what I mean, right? Like they send you like stuff, right? Or like if you have a dividend. And most times I know my positions. I do a lot of long calls or like calendar spreads or short puts. Most times, unless something is like really in the money, I don't have to worry about like dividends. So I actually delete most of those things, right? But UPS, I've talked a lot about recently these zebra trades. That's just been my trade du jour recently. And UPS is one that I put on a couple weeks back. Right.
Right.
So it's long two call. I got long two of the 75s, short one of the 80s. Stock's trading 88 and change now. I'm up like 30% on that name, $400, right?
Right.
And then it hit me. I'm like, oh, shoot, I might have a situation. So then I looked it up, and I realized that it does have a dividend coming up. Matter of fact, go back to the position table. Let's go to, I realized it has a dividend coming up. I looked it up, and I realized it's $1.64. Now, I don't know if a lot of people are aware about this when you got to do something with a dividend. That's why I thought it'd be good to talk about. This thing has a dividend of $1.64. If you have, say, a short option that's in the money, right? If somebody is long a call, say somebody who's long this call on the 80 strike right here and that has a dividend coming up for $1.64, the cheap way to look at and see if I'm supposed to do anything is to look at the put side. If the put side is bigger than what that dividend is,
right,
then this is going to be an exercise, right? And so some people who are long the call and short stock, they would have to exercise this position because they're short stock. The reason why is because if you're short stock, you pay a dividend. If you're long stock, you collect a dividend, right? So that's why anybody who would be long stock, they would either just close this thing or they might exercise it, and I might get assigned on this one short call, and then that would mean I would be short shares. I don't think I would pay the dividend, but still, I don't want to be short shares. I don't want to be short whatever. I mean, that's $4,000, the margin account. All of a sudden, this position goes from being a $1,800 net lick to all of a sudden like over 5,000, right? And I don't want that. So I realized, okay, I'm short this call. These are probably an exercise, which means I have to close this position. So the question becomes, do I keep this on? I put this on originally because I feel like UPS has gotten rocked, and I feel like maybe it bounces back. I don't know. I don't know. I don't know what I think anymore.
You had that one on?
I've had it on for let's see. I've had it on for 2 weeks exactly. Wow.
Yeah.
2 weeks though.
Okay.
That's a little longer than most positions. I don't know how much I believe in the UPS story though anymore. Like
I can tell because I mean, if you put it on 2 weeks ago, you got 63 days left. You really didn't believe in it that much.
No, it was
some time.
No, yeah, it wasn't. I thought it would be one where this thing has been kind of sold off so hard that it would. I felt like I put it on, right there, right. Like this was like this right here. When you've been on this stock this long and you have earnings here that were terrible, and then like clearly the 4/7 or whatever, the Liberation Day, and you're here. My thought process was like, these people do not like this stock, and everybody's scared.
Yeah.
But at some point, it's gonna turn around, and it did. I just don't know how much I want to keep it on. I'm trying to decide.
I mean, they've been taking a beating.
They have.
And I mean, it's crazy. They've been taking a beating. That RSI in the short term is showing overbought.
Yeah.
In the short term, at least.
Is it? Yeah, you're right. In the short term, it's showing overbought. I know. I don't know. What do you think?
I mean,
you care, and you're like, whatever. I don't care.
No, I mean, this is a type of trade that I would be getting into. Again, I lean a little bit more contrarian, so this is a long position that I like.
I guess I'm trying to think if I should keep it on or redo it.
Keep it on or redo it.
I mean, keep it on. Like I'm trying to decide if I could keep roll it out. Keep it on. I don't know. I mean, it's still pretty. I could still do it. It's still pretty cheap. Maybe I do. You know what? I think I will, Errol.
Yeah, this is that thought process that we're watching live. Sometimes you got to reason a little bit.
It is. This is what happens. You know what I mean?
So
you know how it is.
Yeah, it's a very.
I'm trying to think. Today's August, so the next dividend will
15th.
be November. So there's a good chance I'll have to do this again in November if the stock goes up. But that's a good problem to have.
You got a couple months.
Yeah, that's a good problem. Let's do this. Try to get another one on. You know what? Let me get out of this first. Oh crap! I hate that. Let me do it this way. Yeah, I think I'm going to keep it on, but Phil, that was fast. Close this out. Simon says, do this. That's what Tom always says. Tom will say that all the time. He's like, Simon says, do this. Simon says, do this. I'm like,
it's a good thing Tom's name is not Simon.
But he looks like
Simon
a Simon.
says.
That's the weird part about it.
Yeah.
He could be a Simon. If I told you, it's Simon Sosnoff, you'd be like, okay, how you doing, Simon? Nice to meet you.
I can see that. Let me ask you this.
Yes, sir.
In terms of going out further out in time and buying power, the capital allocation, how do you kind of balance that? You know, if it's further out in time, opportunity cost, locking up too much capital, but still a trade that you might typically take how do you reason with that? I don't want to lock up additional capital that I might not be comfortable with in a 60 days.
Agree. That's actually why I was okay doing this position again, because it's like 1,300 for a long position that can give me a decent size. I mean, when I look at, so I just put that on for 1,300. Say we do get a move back towards 100. That's $1,000 on $1,300. Mm-hmm. I like that. You know what I mean? Like I like that risk reward. Okay. And so I'm fine with that. If this were one of the case in point, you talked about UNH. I know we were talking about offline, but everybody's been talking about it. I had a zebra on in here that I made 50% and I move on. You know, it is what it is. Right. But one of the reasons why I decided to close the position, because the total capital it was taken up was like $5,000. Mm-hmm. And on a $25,000 account, I mean, that's 20%. I try not to have something that big. Yeah. Right. In general, I don't want a position that's 20%. Of my portfolio, unless I just like really believe in it.
That conviction for whatever reason.
Yeah, right? and I mean the UNH thing was just more of a bounce back, and it bounced back for me, and I got out, and so that was it. So a lot of times it is that like I think about everything in percentages of my portfolio. Okay, I mean most times, and so like if it's a big like something that's like that,
that's that prop in you. Yeah.
Yeah,
that's a great way to think about it. I think that's a great reminder thinking about it in the portfolio, because I mean that's an overall portfolio risk.
Yeah, I mean it makes decisions a little bit easier. Yeah. You know, when you do it like that, just thinking about it in terms of how it's affecting the portfolio and how big it is, and that determines like how much you're going to actually win or lose on it. Yeah, I think, and so again, if it like a big position like that, 20%. If UNH was moving the other direction and I still had that thing on, well, now all of a sudden I just lost like somehow $2,000, and that hits harder, right? Yeah. And even if I do it, but in that situation, I would have had it further out. But even still, I just thought about it. I was like, okay, I made like $1,700 on this thing. Now this position is like $5,000. I feel like it could go more, but I closed it out, and I had already made like 50%. Again, it would have been awesome to have it on today, but I can live with it. I made 50%, man. Let's move on, man. I mean, it is what it is. And again, it was just the size of the position. Can NVIDIA buy Intel? Yeah. Why should they? Why do they need to? Why would they want to? The government's going to buy them. That's going to happen. Any insights on First Solar pop today? Wait, it did? I didn't know that. Oh, wow. I didn't see that. I didn't see that at all. Did you know that?
FSLR.
Yeah. Oh, wow. I don't know anything about it.
I heard some talks about the solar
industry. What's going on?
Yeah, it was probably FSLR that was going around. Maybe that's what it was.
I didn't know anything about that, and I don't see any news on it. Not sure what's going on in there. It's definitely kind of a quiet day. I mean, it is expiration. Let's not forget, but it's still kind of a weird, quiet day.
We had a pretty big volatile open. I mean, we sold off right out of the gates. Rebounded, sold off a little bit more again. Then the market's been pretty stable. It's been quiet after that. Mm-hmm. Not too much.
Yeah, I don't necessarily like to look to do a whole lot of things on days like this. It's just, I don't know. It's just not really that interesting. But I don't know. We'll see what we get going forward. It's gonna be a quiet week next week, bro. Like,
you think so?
Yeah, I mean, well, just from the standpoint of like macro stuff. Yeah, ain't a whole lot going on.
But that's the perfect environment to catch somebody off guard.
That's true.
We'll see what we get, though.
That's true. It is kind of. I mean, there's some FOMC minutes on Wednesday. I don't know how much those really matter at this point.
The buzz has gone down a little on the FOMC
Seems like
talk.
It. Yeah, it seems like it. And it seems like the weirdest thing to me this week was the whole inflation reports and how all of a sudden it was like we should be expecting like a 90% chance of a cut. It was like, really? Huh. Yeah. I didn't think that that made sense. I mean, how are we going to cut rates when inflation is still high? Like I just didn't.
I agree. It's getting to a point where it's like, how are we going to cut inflation when it's too high? But at the same time, it's like, yeah, when are we going to cut? You know, it's like we've been cutting and inflation still hasn't cooled off yet. Like another year has gone by, another year has gone by. So I think it feels like we're at a pinnacle point. We're at a tipping point.
It does.
We might get some answers.
It's starting to feel like that. Yeah, man, I've been trying to besides some of these like longer term zebra trades, I've been trying to just wait to see if we're going to get a little bit more volatility, you know, like, yeah, no, I definitely probably jinxed it, Theta Trader. There's no doubt about that. I probably did.
Yeah, no doubt. We're going to refer back to this segment right here next week. No doubt.
I probably did. Yeah, it's going to be about this. What about a trade and 6E? Yeah, I know. 6E is euro and a lot of these currencies are are a little bit bid right now. I tell you what, I just think, and this is the trade that I did earlier this year, and I want to set up for that trade again. The dollar has been sold off quite a bit this year. I want to see a little bit more. I want to see if the dollar returns to lows, and then I want to put on a short trade in 6E and 6J. That's my play. I want to get long the dollar again is really what I want to do. And I want to do it by like getting a put spread, like buying a put spread. I know that's not the typical Tasty methodology, but I'm not the typical Tasty trader, folks. I think you guys know that at this point. And I would like to buy a put spread in the euro again. That worked out really well for me. God, when was that? It feels like, God, this year's starting to fly by. That was, July 23rd. That worked out really well. I want to get that kind of flow again, but I don't know. I don't like to sell vol that much in some of these currencies because the absolute vol is pretty low. Like, case in point, 7%, okay? I know IVR is 49, so that means it's obviously higher than it's been 49% of the time over the past year, but it's at 7%. Like, how much do you expect this to drop? It's going to drop down to 6. That's 1 vol point. It's not a whole lot. I would rather sell like something like a HIMS that's 60 vol and watch it drop to 49, total like 11 points, than just 1 vol point. And that's what usually happens in currencies. And I just,
You just been avoiding HIMS or what? HIMS was brought up today. Tom brought it up on the during the live show today.
Did he?
Just talking about how it's a little bit more of a popular product right now.
Yeah, it is. Yeah, it is. I mean, there's a lot of people using it. I brought it up because I know this thing has a hella high vol for obvious reasons, for a lot of different reasons. And I was shorting here earlier this week, and then it just felt like this thing has kept going down, and it has. I'm glad I closed the position. But this thing is actually pretty popular. And just vol-wise, like trading-wise, it's actually very liquid, and it trades heavy. But I've stayed away. I mean, the stock dropped this week, and vol came in. That didn't help my position. I was short puts. So I noticed it like a couple of days ago, and I was like, I got to get out of this thing. I'm glad I did. It wouldn't have made no money for me, I don't think.
Sorry, that's a volatile one. I mean, when you just look at that daily chart over there, I mean, that HIMS can't make its minds up.
Yeah.
That's a trader's stock right there.
It's true. It's true. Stock. I mean, that's what you want to see if you're right. If you're just a trader stock, you want to see the ebbs and flows and vols. And I followed Tom on HIMS strangle this morning. He did a HIMS strangle. He did? Interesting. Was the vol higher this morning? I mean, it might have been. I don't know. They say Trump got off the plane, man, so there's a big summit going on. Market didn't move on it, though. I don't think anything really moved on it yet.
No, I think Wall Street's done for the week.
I think it is. Yeah, it's definitely dead. Everything. I mean, whether it's equities right here, still kind of quiet in there. Obviously, the only one that's positive is the Dow because the UNH has been up. Vol is coming. Look at the difference between October VIX and September VIX. It's almost like 3 points. It's like 30 cents away from being 3 points. I mean, it's wild. So things are fairly quiet. I think next week's going to be quiet too, which again could probably end up leading
famous
to
last words. It might be the next famous last word.
I'm trying to speak it into fruition. You know what I'm saying? I want some vol. I want something to pick up.
My man's manifesting some vol, manifesting some volatility in the market.
You know how we do it.
I hear you.
Yeah. Well, look, it's been fun hanging with the NASDAQ king himself. That's you. You're gonna be the NASDAQ king.
I'll tell you. Apparently gold. I guess. I don't know if the white button up is a gold trader's thing.
Folks, thanks for watching the show, and as always, be smart, be patient, trade them small, and trade them often. See ya.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hello, everybody. Happy Friday to you. Tim Knight here. Going to look at some charts together. We've had a very data-intensive week. We had the CPI on Tuesday morning, which sent the market rocketing to lifetime highs. We had the PPI on Thursday, yesterday, before the open, which kind of rattled things up, but made more of a mixed bag. And today's also, well, it's a little more red, solidly. I see the ES and QRTY all red. I think that United Healthcare is propping up the Dow nicely today, so that's the odd exception because of one particular stock. I'm still pretty short, 21 positions, almost all of them down today, which is good. The only one fighting back right now is Qubit, is up 1.17%, and I guess EL is up about 1.87%, so that's okay. It can all be red, right? Let's go through some together and see what there is out there. As usual, we begin with a spider, and it's just kind of hanging out for the past 3 days. Wednesday, Thursday, Friday, we're all generally in the same vicinity. The launch that we got has stuck around. That was on Tuesday. It sort of vaulted everything to a new, as Irving Fisher might say, permanently higher plateau, right? So here we are, Wednesday, Thursday, Friday, just almost exactly the same highs and lows, just banging around in that little range that whole time. The diamonds, as I said, thanks to UNH, I believe, have pushed intraday to a lifetime high. Closing remains to be seen. Probably not. We'll see. It doesn't make too much difference. But that green dashed line there, that represented, what did that represent? Oh, that was actually a price gap. Yeah, like so, which isn't particularly important. You know, it's just kind of a mess. Let's just say adios to that. It's not doing anybody any good, really. So, as I said earlier, intraday lifetime on the diamonds. And as far as the small caps go, those were exceptionally strong on Tuesday and Wednesday, and they've given back all of Wednesday's gains, and they're kind of hanging out in the gap between those 2 days. So, for the week, certainly a good week for the small caps, but burning off some of that. And interestingly, with all this inflation data going, the bonds are weaker, TLT. Now, I do not pretend to be an interest rate expert or really study the yield curve dynamics. I've been scratching my head a little bit about if it seems a foregone conclusion that rates are going to drop next month, and the inflation data is pretty cool. Why on earth is TLT going down? It's been explained to me, it makes it sound like somebody explained it, but I've read information indicating that sure, short-term rates could go down. Doesn't necessarily mean the long rates will follow suit. So you can have a situation in which the shorter-term rates are getting lower and lower, but the bonds still lack the demand to keep their prices propped up. So maybe that's what's happening. But I do know charts, and the chart definitely is still fully intact for a prospective big drop, but the pattern is nowhere close to being completed. So jury has been out for years on this one. Haven't looked at Beyond Meat for a long while. I used to kind of tease this for a while because it was just a mess of a chart. Back in happier times, the stock had a wonderful run back in 2019, blasted higher. We didn't know it at the time, but the lifetime peak on this was set back in the summer of 2019. It got up to about $240 a share, and it's about 1% of that value now. The real tell on this was one small top. The mega top was right here. This spanned from April 2020 to November 2021, so pretty big top there. And since then, it's just been slip sliding away. And since we were just looking at TLT, I'll just mention this is a good example of even after an instrument falls and falls and falls, if you still get a topping pattern, even though it's not at the top, it can still have powerful force behind it. So this compelled prices much lower. So did this one. I read last night that it looks like they're heading to bankruptcy. So it's down 5.2%. So yeah, Beyond Meat, pretty bad stuff. Anyway, what I wanted to mention or walk through again, because this is such a lofty market and it seems incomprehensible that it would be profitable to short anything, but they're out there, I think, the opportunities. And I wanted to share an especially larger amount, usually I just do 3 or 4, but kind of a nice chunk, about half my open positions, just to give you a taste of the kind of things I like on the short side. Let's jump in. Abercrombie & Fitch down over 3.5% today. And we looked at this recently. Just yesterday, we talked about this repetition of tops producing good results, and it certainly seems to be working again now. This line only represents the stop loss order as I tighten it lower. But this is the powerful pattern right here that I think represented the big distribution topper ANF. Much larger company, Bank of America, BAC, down about 1.25%. And zooming in here, just set the stop just above this price bar like so. Kind of stalled out right now, but overall, looking at that pattern, it seems like an exhausted looking chart to me, and something which is more prone to weakness than strength at these levels, and given its relative position to its broad price pattern. Couple of dollar type stores here. We've talked about those frequently. DG, still short on this one, down about 1.7%. It's got plenty more to go. And its competitor, and almost down exactly the same amount, Dollar Tree, DLTR, off 1.4%. In this instance, we peaked way back in 2022, and since then, a steady series of cascading lower highs with a particularly dramatic drop like so, and a huge rebound. So this is when I've gotten back into this at that much, much higher price level. On semiconductor, ON, this one had been in recovery mode for Tuesday, Wednesday, Thursday. Seems to be pretty pooped at this level, worn out. And overall, my view is that those handful of days notwithstanding, this is a pretty strong reversal top. Notice, sure, it's a semiconductor company like NVIDIA, but there's no resemblance to NVIDIA. I wouldn't go near NVIDIA right now as a short sale, lofty though it may be. This is more my speed. This is the big winner today. I took some profits on this. We spoke about it earlier this week. Roblox, RBLX, down a nice hearty 8.1%. And this one, originally, the idea, and I'll put a different colored marker here. The original idea was this price gap, the island reversal pattern. And there was the counter trend peak on the 31st of July. And notice that its low was never violated, in spite of trying over and over and over again. And finally, it kind of succumbed today to a big jump down. So I took some profits, not a lot, and tightened up the stop to that new lower level, that price gap. So it's at 124.97. So I've got to stop at 125 now. AMD, got back into this one, and it's behaving itself. It's down 2.12%. And so that's definitely the way we want to go. This line is anchored to, as you can see, resistance over and over again. And it got very close to it just 2 days ago. Let's see. 3 more of these. There's Caterpillar. Good drop on this one today, over 2%. I think I saw something about John Deere sinking. That's probably why this is helping, but it really hardly matters. It's just the chart I'm focused on. So in this case, we had this little distribution top here. There's my stop, 421.90, and reversing away from that level. Here's one you probably don't expect to see. Haven't touched this as a short for years, I don't think, but Tesla, TSLA, it's not a fantastic pattern, but it's, fundamentally very loftily valued, like at 180 PE or something like that. And it has struggled mightily lately. So we've got a bearish engulfing pattern on this right now. It's a very tight stop on this. I'm just going to see how it goes, but I've got the stop at 340.5, just above yesterday's high. And one last one, not a stock, but an ETF, XME, the metals and mining ETF. I entered this one on, I think, Wednesday, but this is the stop anywhere above that lifetime high. Sunk a little yesterday, but a nice bearish engulfing pattern on this one right now, because this has gone too far too fast, in my opinion. One metal we haven't looked at in quite a long time, we used to talk about daily, but have sort of ignored for a while, is palladium, the ETF PALL. Back when it was way up here, when it burst above this whole zone, I said of that too, it's probably too far too fast. It's probably going to do some backing and filling before making another launch, because I do believe that long term, months from now, a year from now, it's going to do just fine. But it's no surprise at all that it's been selling off. Little bit of a danger zone right here by way of this gap, 101.41. If it slips below that, I would continue to stand back and watch, because the next gap lower is all the way down here at 97.70. So we've been slip sliding away since the 18th of July on this. As I say, it's a matter of time horizon. I would say firm support is until way down here. This large chunk of activity. As I said at the top of the show, United Healthcare has been a boon to the Dow today. Warren Buffett disclosed a stake in that, as I think Michael Burry also did. It actually bottomed some time ago. The actual bottom here was back on the 1st of the month, got down to 234. It's in the 300s now. It's gone up like $70. What's that, 20% or more just this month? So big burst higher with today, about a 13% rise after this calamitous fall it's been going through. One of its competitors, CNC, also has had just this wretched fall from its massive top, and it's rising in sympathy because, it is, all things being equal, very cheap looking compared to the lofty levels before. And with all this going on, the healthcare select sector, XLV, is enjoying a nice day, up about 1.75%, although not a particularly healthy looking chart in general. So just to wrap things up, this is probably the third day in a row I've mentioned IEF, but keep an eye on this, just from time to time. It's a real decision for this, whether it can cut above that long base or slump within it. I think that'll be a big factor for equities, even though this is a 7 to 10 year treasury bond fund. I would also say, looking at something like ARC, which is Kathy Wood's very tech heavy fund, if this does not beat above the 79.19 level, if it starts to sink below that, I think that would show a really remarkable loss of momentum, and also just showing the trio of moving averages here. Let's get to a relevant zone. As you can tell, historically, it's just been the series of higher highs, but they've been accompanied by these surges higher with long, big spreads between the various moving averages. This smells to me very much like the kind of setup, the kind of arrangement format we had, for example, in this kind of area, where it's very, very stretched. And just to wrap things up fully, a couple of crypto charts, just to show that the animal spirits aren't necessarily indomitable. Bitcoin, only just the prior trading session, lifetime high, almost $125,000. We're down to $117,000 now. This trend line has power. It is not letting the prices get very far away. So it'll be interesting to see if it breaks below that, particularly with the big Jackson Hole event a week from today and the much anticipated Powell speech. And as well, Ethereum, it got very close to its own new lifetime high, but beaten back here too. So down about 8% on that one. Okay, nailed it. Bottom of the hour. We are done. So have a good weekend. I'm doing a little traveling next week, so I forgot my exact schedule, but I will be here most days, and I will see you on Monday. So different location, but I'll see you then. Bye-bye.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
Do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, $4,000. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend. An eventful day, I would say, going into the end of the week. We've got E-mini S&P 500 futures down 16, NASDAQ down 120. It's rare we've been able to say that. You've got the Dow up 67, the Russell down 11. So really the Dow, the only one bucking the trend today. Oil selling off a bit, /CL down 82 cents. You've got volatility futures staying a little bit bid here, 1859. You got bonds down 21 ticks. They're at the lows of the session here. Gold unchanged. Silver down 6 cents. Both those two are relatively muted today. Bitcoin, along with the risk-off sentiment here, down about $800 on the futures. The spot down 1,200, and Ethereum also, now that it's one of the big players that we've been looking at, down 200 and change. I think overall, I would characterize today as a nice day for the Tasty Trade following. We had a lot of big moves underneath the surface and stuff that has just had relentless up moves. You had a big move in Roblox to the downside. You know, Nvidia gave up a little bit of ground today. Palantir, another one that's down $3-4. Even like your Amazon and Apple, are down slightly, which is kind of nice to see here if you've been leaning neutral / a little bit of short delta in some of those names. To the upside, some big moves in like Eli Lilly, UNH, 2 stocks I know a lot of people have been trading from the long side. Good to see those get a little bit of a bounce today. So I think overall, a good day for the good kids, as Tom and Tony would say. Do you agree with that?
I do. Yeah. Been very active today. We closed that 0-day Iron Condor in the E-mini futures. That was a nice trade.
Yes, we're 3 for 3, so we're due.
Yeah.
So the next time we host, which is Wednesday and Thursday next week, while Tom and Tony are in Mexico City for another event, which I believe if you are in the area, you can send us an email. We could get you on the list, I believe. But while they're gone, Wednesday, Thursday, we're going to do this again. So just keep that in mind that we are 3 for 3.
Yeah. And it feels great. I think the last one, it came down to the wire. It was like a horse race.
Yeah, we did like
5 seconds.
Yes.
Crazy.
But you closed yours. I held.
I did. Yeah.
Says a lot, Mikey.
But yeah, I closed the call spread this morning and then just closed the put spread a couple of minutes ago. But nice trade there. But yeah, we got a ton of trades from this morning from Fast Market.
Yes, we did. We posted all those to the follow page as well. So
yeah,
if you are looking for those, you can get them on the follow page with all of our trades.
Yep. So yeah, Roblox short call spread.
Yeah, we got to scroll to get to all our trades. So the ES trades, Roblox.
I closed the short call spread in Roblox.
Yep.
Bailed out, semi bailed out. There was a 0 days left, and we got the big sell-off today.
Yep.
Got into a call diagonal spread in UNH. That's working out. It's actually probably flat right now. It was working out this morning, but it's a longer trade. Long October, short September. Delta Airlines strangle, 55.65. Got a short put at the 20 strike in AI. Got a Iron Condor in Google. Got a 340, 350 short call spread in AVGO. A short put spread in Adobe. And I closed that Enphase short put.
Oh, yeah.
For a 60-cent winner today. Or something. Yeah, Enphase, I got back like almost $500 today.
Yeah, Enphase, First Solar, two stocks are making some big moves to the upside today.
So yeah, very active. Bunch of closing trades, bunch of opening trades, but yeah, the UNH call diagonal is actually still up $100 or so. But if we get any kind of continuation, like 10 or 20 points on Monday, it'll be a really nice trade. Probably $300 or $400.
Yes. We had our event this morning.
Yes.
Tom and Tony hosting at Talia Hall. Had a lot of people come and hang out with us yesterday during the day. Had a couple people come today as well. But looks like it was an awesome event. We got a handful of pictures from the event just to give you an idea of what these sort of things look like. It's fun. You know, we always get cool event spaces. It's Talia Hall. It's a music venue, concert venue, show venue. In Pilsen here in Chicago. Very cool little event space. So had a really nice turnout. I see some people in the chat even coming back from the event to come hang out with us for the last call here. So we thank you for that. Good little event we got going.
Yeah, Talia Hall is very fun.
Yes.
Very nice spot. Hopefully some people heeded our advice, got some tacos after in Pilsen. Yes. But yeah. Call it a success. How about it?
For sure. The next event for those two will be in San Francisco coming up in the next couple weeks here. So get your tickets. They're free. So why not?
Yep.
And
yeah, bunch of live events, including me, Nick, and Katie. Our next stop is Dallas in October 12th, and then San Diego in November. And then you got Dr. Jim, October 19th in Detroit, and then Tampa in December. He was in the office today too. Good to see him. Yeah, but we got still plenty of events through the rest of the year.
Yes.
Get your tickets while they're
very, very good.
tastylive.com/events.
Yes.
Yeah, I was contemplating closing the corn call diagonal spread I've got. It's up pretty bigly today, but it's still a longer term trade. My long option's 70 days out, short option's 42 days out. So I'm looking for another move like this, and then I'll close it.
Yeah.
Because we still got plenty more room to the upside, and there's only $400 in risk as it stands. So up 30% on the debit paid, but I think we can get more out of that if we see a continuation here.
Very nice, very nice. I did also want to, because I talked about it a little bit when we were doing calls this morning, but I never pulled it up. There was a new release on the desktop. It's been available on the web-based platform as well for the last, week or two on the web? Just recently on desktop this week.
Yeah.
And it's our active trader tab. So it's a new interface that's on the trade page. So you can, and I will pull this up momentarily. So when you go to the trade tab, the normal trade tab, you can pull down the drop down and go to this active V2. This is our new active trader interface. It's a one-click trading interface. You can do this with stock or futures. It's really, really cool. You have this one-click trading ability here. It's meant for stock trading or futures, so it's that ladder that you're used to. And when you are trading here, you can do everything with one click. So you can, buy a share here. You can see I just bought a share of Apple. You could sell it out as well, just market orders right there at the money. You could also do the one-click trading, which I have on. If you click it off, that'll be, it'll allow you to review and send. If you have it clicked on, you get the little warning that you are live playing with fire here. So you can do this one-click trading, and buy them as you see fit, sell them. And you can see all my orders coming through. The coolest thing about this whole thing is that you can one-click flatten out. So whether you're long or short shares, clicking the flatten button will get rid of your whole position that you are trading on the interface. So really cool feature. I know a lot of people have been looking for this. You can trade both stock and futures with it, and it is very intuitive, very easy to use. Just a nice little work from the team behind the scenes.
Yep. And you were trading one share.
Yes.
Along the right-hand side. You can pre-select 1, 5, 10, 25, 50, 100.
Or make your own quantity.
Yeah.
You can do a weird quantity if you'd like. On the right side here, you can change that quantity.
Yeah. So depending on your size, and that's probably going to depend on the stock you're trading or future you're trading.
Yes.
You can change that and get in and get out based on what you're seeing. But yeah, really nice way to be able to route orders and quickly get in and out as the markets are moving for those day traders out there.
Yes. E-mini's down 15 right now. We thought we would see a 6,500 pin at the end of the day here, but looking less and less likely, unfortunately. NASDAQ down 114. You got the Dow up 75. You got the Russell down 10. As we mentioned before, some of the bigger movers coming from the alternative energy, we'll call it, the solar companies. You got a lot of the healthcare names, UNH catching a bit. Eli Lilly was on there. You have some of the fringier IPO stocks there. This is just on the high option volume list. On the downside, you have AMAT, which had earnings. You got some of these, kind of Momo-y stocks here. In terms of the S&P 100 or the 500, you can see Cisco, one of the bigger movers to the downside. You got some of the bank stocks, CAT in there, Goldman Sachs, Palantir again, as we mentioned. So definitely a mixed bag for the market today. A little bit more of the rotation away from some of the big tech stocks, at least for one single day. Doesn't seem to last very long. We had 2 days of the small cap outperformance. Now we get 1 day of it basically reversing the whole thing.
Yeah. And I think you're getting a lot of drag with the AMAT earnings that went wrong.
Yes.
Down 13% after earnings yesterday. I had a call diagonal spread there. I still have the long option at 190 in October, but unfortunately this move is just too big, and now that long option's only worth $160, so there's nothing to sell against it. Good news is it's 63 days out. That's pretty much it. But plenty of plenty of opportunity or possibility for it to reverse and for this option to gain a lot more value back. But we need a sizable reversal here. This thing.
Yeah, we got some people shouting out Talia Hall.
Yeah.
It's a very cool place.
It is.
Yes.
Yeah, I mean, that whole area is definitely has a lot of cool stuff.
And we were the bastard children that had to like stay back and do this, you know? All the peeps were there. Jim flew in, was there. Jamal was there.
I think the last time I went to Talia Hall was to see the band, The Midnight.
Ooh, nice. Very nice.
That was last year. But yeah, love to see it.
Into next week, not that there are that many earnings coming up, but you have Palo Alto Networks on Monday after the close, which is Pan W. On Tuesday before the open, you have Home Depot. Tuesday after the close, nothing really there. You got like Toll Brothers in there. On Wednesday before the open, you have Target, a favorite of yours. TJ Maxx is in there. Another favorite, you got some of the China stocks. Baidu is in there. You got Lowe's as well. After the market closes, nothing really there. On Thursday before the open, you have Walmart. So you got a couple big names throughout the middle of the week. After the close, Zoom and Workday, Intuit. Not really that interesting there. So there are a handful of earnings. Nothing really to do right now going into Monday. I feel like
it's literally the suburb earnings week.
Ooh.
Target,
Walmart,
Lowe's, Home Depot, TJ Maxx.
We got those two suburbanites. It's okay.
All right, yeah. I'm not knocking the suburbs. I'm just saying all of those certainly exist in and around Schaumburg. But yeah, I think Target will be interesting. 47% IV, 41% in October. Really low implied volatility relative to the 7-day cycle.
Yeah.
Almost a 9-point expected move in the 7-day versus an 11-point move in the October cycle. So I will certainly be participating in Target earnings, probably to the upside. There's just a lot of premium
to
sell.
I already have a little call diagonal spread on long the 105 in September, short the 7-day 110. I did this at 305. It's up about 10 cents at this point, but it seems like that sector is probably another one that deserves a little bit of a squeeze.
Yeah,
like we saw in the healthcare stocks. You look at stocks like Target has been killed. Lulu is another one that's had a rough ride. I know Nike had a nice rally over the last couple months, but that's another pig of a stock. So maybe you see that come to fruition if we do have a little bit of a rally after monthly expiration today.
And these diagonals are
cheap,
really cheap relative to width. Like the 105, 115. If you're long October, short the 7-day, that's like $3.
Mm-hmm.
$5 for a 10-point wide. Or you could bring in that short option to the 113 or 112, and you're under $5 for a 7 or 8-point wide spread. So definitely a lot of upside profit potential or downside profit potential if you're directionally right there, with the low cost of the long option relative to the high premium in the short option. So we will be trading that for sure. Some of the trades from this morning are already working.
Yes. I mean, this is how it always goes. Fast market is usually our best trades.
It's a great source of trade ideas.
AVGO position. Adobe, I saw kind of bounce from the lows today. It's near the high of the session.
Corn. I would love to see corn continue here. Biggest green bar we've seen in quite some time.
Yes.
But if it does continue, that'll be great for this call diagonal. I've got the 400, 420, long the 70-day, short the 42-day.
Mm-hmm. E-mini S&P 500 futures down 16. Not much, if anything, is happening at this moment, but it was a nice little two-sided action day. I mean, we were able to scalp out of our Iron Condor from this morning, but in general, this was a nice day for a lot of. I got bailed out on a lot of positions today. Had a bunch of butterflies that came into some value in NVIDIA, where I had a little bit of short delta, or I needed the stock to go down a little bit. Got bailed out on that one. I had one in Roku. Roku was randomly up $3 or $4 this morning. Yeah, that was a nice move. Eli Lilly and UNH, I think, have helped an enormous amount of people with the move today. So today was overall a good little day for the good kids. I like it.
Doug in the chat, shout out from Seattle.
Awesome.
Yeah, we will make it back there. I do love Seattle.
Yeah, Seattle's great.
I'm going on my first Alaskan cruise next year.
Through Seattle.
So I will be going back to Seattle next
Pray
year.
for no poop cruise.
No poop cruise, please.
No poop cruise.
But it's my first cruise overall. And I just watched a murder documentary with the cruise, and I think I should watch Poop Cruise, so I'm nice and prepared.
Oh, you haven't watched that one yet?
No.
It's really bad. Obviously, it's just horrifying, but, it's
probably not going to happen again. Black Swan event.
Ooh, I don't know. It certainly could happen again.
It might be in the 10 Delta.
Yeah, I don't know. Yeah.
Perfect. Good.
Getting a little bit of movement here. E-minis down 19 now. The NASDAQ down 125. Really the only thing keeping up the Dow is UNH today. You also had some big moves in Intel. Intel got over 25 and change this morning. So you had some, we talked about the whole government firing the CEO or the government taking a piece of it. Who knows what that situation, how that's going to play out, but it was pumping some short-term speculation into that name. One thing I will point out with the Dow, and we've talked about this before, so the Dow is a little bit different to the S&P and the NASDAQ in that it's price-weighted. So the movements in the in the Dow itself, in the Dow Jones, are based on the higher price has a higher weighting. And so UNH is a top 10 holding in the Dow, holding it up. You got CRM taking a bounce as well, and IBM, Boeing. So UNH is really the reason that the index is up, because when you split this up, it's very much mostly to the downside, 60-40.
Yeah. Some people celebrating their recoveries in UNH today.
Yes.
Love to see it. I did the rare buy the continuation here. I just think that
buy the rumor
with the call diagonal spread.
I guess this is buy the news. Buy the rumor and the news.
Buy the rumor and the news.
Yeah, you're just like, I can't miss out.
I just think there's been so much terrible stuff around UNH, which obviously that is the case.
We have been saying that for a while now.
And we've been looking for kind of a bottoming out. We've seen a rally from the lows sub 250, and now we're seeing this gap higher with the news of Buffett and Michael Burry exposing their bullish positions. I think there was another one.
Pepper, they're all in it, all the boys.
So yeah, I mean this company still posts good earnings. They just released a dividend, so it's like I think if you're willing to go along for the ride,
if you want to make a deal with the devil,
I think UNH is interesting, specifically because we're seeing a big move today on this big news, but the stock is still down 50% from the high in April. So, and implied volatility is up a little bit, but it's not up that much. So like when you look at the expected move through October, 37 points, we're getting that today. So I'm happy to be long and I'm playing for a continuation and basically saying I think implied volatility is understated here relative to potential realized volatility. And that could be realized next week. If you get a 10-point move next week, that exceeds implied volatility. So that's what I'm looking for. Just a slight little move, and then I'll shut that down if we get it sooner than later. But if not, I can always roll the 20-point wide into a 10-point wide, reduce basis that way, and hedge that way.
E-minis down 21 here going into the close. NASDAQ down 130, so getting closer to the lows here. The low of the session, 64.61. So a little bit of weakness here going into the end of the day. Bonds still down 19 ticks. Bitcoin selling off a little bit low of the session here in Bitcoin. We just hit it actually just a second at 117,000. So definitely a little bit of a should we call it profit taking into the weekend, considering we're at just about all-time highs? I don't want to say weakness. Like Tom would say, we're stumbling into the close or something like that. You're not stumbling after 1,500 points to the upside.
Yeah.
In a couple months, you know? It's
someone in the YouTube chat said selling hard into the close, down 20.
Yeah, that's, I think
You
it's
missed
just,
the 600-point rally we've had in the last couple months.
Yes.
But yeah, I mean, we're topping out here, but I don't think it's anything to be too worried about just by looking at volatility.
Yeah,
volatility is still in the 18 handle in the next contract that we're rolling into.
Yes.
Which is nothing that says we should be worried about big moves. We're still in contango. Those are the things I look at.
Yeah, we talked about this during the call-in session. Volatility futures. So the current volatility contract, the Q, expires in the middle of next week. It's trading at 1575, which is where the VIX is now, or close to it, just because VIX and the vol futures will inevitably near each other, whether it's the VIX that goes up or vol comes down. That's what we'll have yet to see. But volatility futures in the back, the next contract at 18, you have a $2-3 contango there, and then going out further in time when you look through the end of the year, and you can plug these in on your own watch list. Might have a watch list coming soon if I can ever get anybody's ear to put anything in this darn thing. But we might have a little bit of volatility, or there's a little bit higher volatility in the back months here, 2021. So there is some contango there baked into the further out expirations, or further out in time.
Yeah. And
which is typical.
Yeah.
By the way.
Yeah. And I think there's going to be vol events. Like, we still have interest rate decisions.
Got Trump and Putin meeting right now.
I mean, yeah. Right now there's a 50-50 shot between a 25 basis point cut in October or not. And same story for December. So at least right now, it looks like September is pretty baked in for a 25 basis point cut. However, prove it to me. Show me the cut. Because I still...
You don't believe?
Still no cut 2025, so we'll see. But yeah, I think right now we'll continue to see some chop. I don't expect the market to sell off in any meaningful way unless we see vol pop in a meaningful way.
Yeah.
And other than that, you just, you trade your names you want to get into, and that's it.
Even he's down 19, the NASDAQ down 126, more of the same since the last time I said it. Anything on your positions that's sticking out to you other than the stuff that we've covered?
Natty Gas finally catching a bid. Love that. I'm long the micro contract, the MNG.
I closed my micro, but I got it at better prices.
Yeah, you got it in way better prices.
Yeah, but I still have the at-the-money put spread in the futures.
Yeah. I'm down a couple $100. I'm in at like 3.2, 3.1, something like that. But good to see a 3-day rally here. Other than that, not really. I removed the risk in my gold broke wing butterfly a couple days ago, 3 days ago. So I have the 14-day
for GC.
For GC V5, yeah. The 3480, 3500, 3520. So I'd love to see a rally into that spread. I could sell out of it for much more than it's worth now. But yeah, I secured $100 in net credit for that symmetrical butterfly now. Yeah, corn futures looking for a continuation, and everything else is kind of just chopping around.
Yes. See where we close here in 15 seconds. You got the E-minis down 19, the NASDAQ down 130, the Dow up 40, the Russell down 12. You've got oil futures down 74 cents. Volatility futures basically unchanged here. They're actually down a nickel. There's our bell. We've got bonds down 19 ticks. Gold basically unchanged. You have silver down 5 cents. Bitcoin closing at the lows of the session down $1,900 on the spot. Futures down $1,100 and Ethereum down $250 as well. So a little bit of weakness into the weekend. We'll see if that plays out into next week. But this was a fun time, Mr. Mikey.
Yeah. couple Party Shirt Friday boys doing it again. Yeah, Wednesday and Thursday next week, we will be taking over as well.
Yes. Which means, what's your assumption on Wednesday? You can get it. You can get the real traders to put your trade on.
Because we do.
Yeah.
I think we placed our trade.
We did them all.
We did them all this morning.
Pretty much. Yeah.
We'll do it all. We'll do it live.
Do it all. Good stuff. Thank you to everybody who came out to the live show this morning and who tuned in with us for the live show who weren't at the one at Talia Hall. We're going to take a quick little 90-second break, and we're going to come back and do it all over again on Monday. Same thing you know and love. We're going to take a quick little 90-second break. You're listening to Tasty Live.